companies to beat by about 400 to 500 basis points on EPS on the consensus numbers. So far, what you're seeing is a couple percentage points higher than that. And yes, as I noted earlier, it's still early. We've only had a third of S&P companies reported, and we'll see what tech reports next week. So if you have companies continuing to deliver and the guidance outlooks look good, that could cause these markets to grind high. You also have a low vol environment, so you have support from systematic buyers that are continuing to push this market higher. What could upset this market is that if we don't have, meaningful trade agreements on August 1st, and we have an escalation again in trade tensions, particularly around the EU, where the president has threatened anywhere from 30 to 50% tariff increase. If we see contentions around that, then you could see this market start to wobble again.
You advise adding equity exposure on dips, but with AI really driving much of the rally, are we not close to a risk of overconcentration in just a few mega cap names?
We don't think so. I mean, when we look at historically, the things that drive markets, it's really transformational innovation opportunities. And AI is definitely at the forefront of that. When you think about it, we expect that this to be a $2.6 trillion revenue opportunity by the end of this decade. And even when you look at the current environment, I mean, we were expecting AI CapEx to come in at about $360 billion, a 60% increase year over year for 2025. And even now, we would argue that those numbers might be too conservative, given the fact that we've seen Alphabet, who reported this week, already lifted their CapEx expectation by 12% up to $85 billion for this year. And then you have an administration, Isabel, that is quite supportive of innovation in AI. You had the President AI Action Plan this week that suggests that there is going to be a loosening of restriction around AI software and AI hardware exports. And so we think that not only from an investment standpoint, but from a regulatory standpoint, that the tailwind is within AI. And then we think that monetization will start to pick up as we get into 2026. So still feeling good about that, and we'd be buyers of dips on these secular trends.
Hey, Nadia, so the Fed makes their decision next week on interest rates. So I'm curious to find out what you're expecting from them to say.
Yes, like Mike Rickey was talking about, we think that the Fed will be on hold next week. There's quite dispersion on the committee that's seen in the rhetoric, and there's all sorts of dots. You still have, the medium dot at 2 cuts for this year, but you do have, 7 of the 19 dots at no cut and 2 at 1 cut. You could see some dissent next week. Waller and Bowman has been, lobbying for a July cut, but the data doesn't support it. And so we do think that by the time you get to September, you could see the data start to support weakness in the labor market. And we think that the Fed will resume in September. But again, job market so far seems to be holding in there. Even the president yesterday highlighted how strong the economy is. So if the economy remains resilient, we could see the Fed delay that cut even further beyond September.
And if you expect a tariff-led slowdown, but not a recession, how do you justify staying overweight in cyclical sectors like maybe financial?
When you think about it, financial, there are some trends happening in financials. It's not just about sort of the cyclical aspect. There's also the deregulation aspect that's happening. And in fact, we're coming into this earnings season positive on financials. And in the mix of this earnings season, our conviction has increased. I mean, without offering a single stock view, even yesterday, you heard Blackstone say about capital markets activity and looking at their data that the pipeline for IPOs, potential IPOs, is the strongest that they have seen since 2021. So as we get policy clarity on tariff and as well as monetary policy, we could see an acceleration in IPOs and M&A. There's quite a bit of pent-up demand. And then Michelle Bowman, vice chair of bank supervision, she is moving swiftly and with purpose. I mean, we are hearing that she expects to have a reproposal of Basel III Endgame by the end of the year. So all of this could lead to more capital relief for banks and therefore capital returns. And so we think that the tailwinds are with financials, assuming that we don't get any sort of recession, which we're not expecting.
All right, Nadia Love, always love getting your insight in this. She's Senior U.S. Equity Strategist for Global Wealth Management at UBS. All right, so earnings after 2 quarters losses in a row. We had Phillips 66 reported a beat on second quarter adjusted EPS. We want to dig deeper into these details. So who better to do that? Let's bring in Brett Gibbs. He's Bloomberg Intelligence Refining and Renewable Fuels Analyst. Brett, thank you for joining us here from D.C. Refining has been this noticeable laggard. I mean, was it in these results?
Yeah, thanks for having me first off. And I think it's been a noticeable laggard for Phillips 66 specifically. And this was a clear quarter of strength for them. One of the things, too, that stood out to us was just their refining utilization up about, kind of 98%. And then their capture of what we in the industry look at for benchmark margins for what you can see on your screen for gasoline and diesel prices was 98%. So this was very, very strong. And similarly, on the unit cost side, part because they ran so well, they fell below their operating cost target for, the first time. They were under that $5.50 a gallon of what they use as adjustable controllable costs. And so that led to the beat broadly. And now we're kind of looking to see if that strength persists here in 3Q. Again, there's still a lot of work to be done on the refining side relative to where management set out kind of their mid-cycle expectations of $5 billion of annualized EBITDA. But again, this is a great start.
How sustainable are these performance tailwinds moving forward? You said you're going to look out in the next quarters. I'm wondering if they are structural, one-off, or cyclical.
Yeah, no, absolutely. I mean, refining itself is a cyclical industry, and typically 2Q and 3Q are the seasonal strengths. Just you have driving season here in the U.S., so that was something that obviously was a tailwind in 2Q. We also have a developing diesel story globally that has been a little bit of a strength. We've seen it start with the Iran-related disputes. We also see some European sanctions on Russian oil products and oil broadly, and that's tightened up the diesel side that had led to a pretty strong export pull out of the Gulf Coast. We saw that in Phillips 66's results this morning. The Gulf Coast was a particular region of strength. I think there is some durability there, but again, the thought is maybe some of that strength is behind us. The stock is down today. Fellow Pierre Valero, again, had a pretty strong set of results yesterday. The stock was down on that. And I think that part of the story more so is the gasoline strength is unwinding. We had recent U.S. government data reports this past Wednesday. Gasoline demand is below seasonal levels in the U.S., and that's something that might counter that diesel story, specifically if some of that recent strength unwinds.
There have been a few changes to their board, Brett. In May, shareholders, they elected 2 nominees of Elliott Management to serve. How is that panning out?
Yeah, I mean, back in May, the fact that the shareholders voted for a split on some of Elliott's proposals, so 2 of Elliott's nominees were elected to the board. It kind of was a little bit of an affirmation of management's kind of growth trajectory and plan to 2027. And I think in this results, you kind of, management notched a little bit of a feather in their cap there in some respects, because you're seeing refining kind of move towards where they want it to be. This was obviously a very, very solid quarter, and that's been the point of contention. So a lot of work to be done, but working there. And then, one of the other things too was Elliott was calling for a big breakup of the company. They were focusing on spinning out midstream. They were focusing on potentially selling their stake in CP Chem. Chemical earnings were particularly weak in this cycle, this earnings cycle. And this is something too that management has come out, quite frankly, and said, we don't know if in this chemical margin environment, it would be the right time to sell. They also have 2 large projects slated to come online in 2027. And so I think this does kind of affirm some of the points that management was trying to push. But again, there's a lot of work to be done. I think management got themselves cornered a little bit year ago or in the past, where they had all of these series of targets that became very difficult, whether it was hitting a certain leverage target, whether it was continuing to advance midstream growth, whether it was getting refining to these levels. So they still certainly have their work cut out for them. But I think this is progress is being made, and that's kind of a supporting factor to what shareholders voted for in May.
All right. Brett Gibbs, always appreciate your time. He's Bloomberg Intelligence Refining and Renewable Fuels Analyst. All right. Coming up here on Bloomberg Intelligence, we have got a treat for you. It is the Dan Ives. Yes, you heard that right. Global Head of Technology Research at Wedbush Securities. He's going to talk about tech earnings. We had a lot this week. We've got a lot more coming up next week from the likes of some big names. I mean, we're talking about Microsoft, Meta, Amazon, Apple, all that coming up on a day where stocks are pretty much on the rise right now. NASDAQ up 0.2%. We have the Dow up about 0.1%. S&P 500 up about 0.2%. You're listening to Bloomberg Intelligence. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got U.S. stocks continuing to advance with the Dow, the S&P, NASDAQ all moving higher. S&P right now up 14. That is a gain of 0.2%, 63.77 where we stand right now. Yes, looking at a record on the S&P 500. The Dow up 92, now up 0.2%. NASDAQ up 38. For NASDAQ, that is a gain also of 0.2%. The Mag 7 index up by about 0.5%. Tesla shares gaining 2.3% after yesterday's 8% rout. Right now, we have got the 10-year yielding 4.41% with the 2-year 3.92%. Gold tumbling 1%, 33.34 the ounce, and West Texas Intermediate crude down 0.6%, 65.62 for a barrel of WTI. As for the overall market backdrop, Alicia Levine is head of investment strategy and equities at BNY Mellon Wealth Management. She was a guest this morning on Surveillance.
I think there are some parallels to the late 90s to what's happening here in the sense that we feel like we have a technological revolution on our hands and it's investable. It's investable.
Alicia Levine of BNY Mellon. Meta Platforms says it will stop selling political and issue-focused ads in the European Union, citing new regulations that the company believes, quote, creates an untenable level of complexity and legal uncertainty. Meta, the parent of Facebook and Instagram. Meta Platform shares today, they're trading higher by 0.2%. Again, recapping, S&P up 15, now up by about 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. All right. So it was a big week for tech earnings from the likes of Alphabet, Tesla, Intel, IBM. But what will next week bring when we add in a few big guns? Microsoft, Meta, Amazon, Apple. Who better to ask? Yes, Dan Ives, Global Head of Technology Research at Wedbush Securities. Dan, thanks for joining us this morning. Love the hat. I see the top half of the outfit looking very swag. I like it. I want to start with you with CapEx, okay? Because we heard about Alphabet's AI-related CapEx, you know, $85 billion, $10 billion higher than expected. How does that set the stage for what we're going to hear from companies next week?
I mean, get the popcorn out, right? I think it's going to be more of the same because this is an AI arms race. No one's going to slow down CapEx. They're going to increase it because you're seeing the actual use cases. You're seeing the demand drivers that are there. And that's why big tech, you'll see from Microsoft, Meta, across the board. I mean, and, you know, I think no one is going to slow down. And I think the street is still underestimating, probably by 15 to 20%, what this demand is going to look like going into the second half of the year.
You said you're expecting good news next week from Microsoft. Given the $80 billion in AI CapEx and intensifying competition from AWS and Google Cloud, but at what point does margin pressure become a concern, even in the best case of a growth scenario?
Look, Microsoft, they're the Scotty Scheffler of software. And, you know, they're going to continue to what I view as in the backyard of the enterprise. It's Redmond and Dell that own it. So I think for every $100 that customers have spent with Microsoft based on our analysis, it's an incremental $40 to $50 that they're going to get because of AI. So it's almost like you're creating another Microsoft within Microsoft when it comes to AI. And that's why I get some of the margin pressure and CapEx. I view it as table stakes. I mean, I think this is a stock that's not just going to 4 trillion, joining NVIDIA in the 4 trillion club, 5 trillion by 2026.
5 trillion. All right, so let's dig into cloud growth a little bit deeper. What do you expect from Azure, from Amazon's AWS?
It's going to be beats across the board. I mean, we're seeing significant activity well above expectations. Because really what's happening is that you're seeing AI drive cloud, not just upgrades, really strategic overhauls. That's bullish for AWS. It's bullish, as we saw, for Google Cloud. And I think front and center is going to be Azure. But you're seeing it's spreading across the rest of tech, second, third, fourth derivatives. Look at Oracle. Look at IBM. So it's my view, we're still in the and we talk about it. That AI party was 9 p.m. It's now 10 p.m. Party goes to 4 a.m.
With signs of EV demand softening in the US, and I want to bring this back to Tesla because you were on TV yesterday and you said that you doubled down that Musk is still the biggest asset for Tesla. But with key markets like Germany and China really seeing demand softening, do you still think that Tesla can meet its multi-year target delivery without fundamentally shifting its strategy or its price target?
Look, it's a great question. I view Tesla where we viewed NVIDIA in 2022. I mean, they are on the precipice. They're in the beginning of the AI revolution in terms of autonomous robotics humanoids. I mean, and we talk about, I think there's a $2 trillion market cap. That's probably conservative. I mean, to be honest, when I think about over the next few years, physical AI is the game for Musk and Tesla. And we see now autonomous robotaxi, you know, our team was there in Austin. You'll see expansion now in San Francisco. I believe you're in 25 cities in next year. I continue to make the call by the end of next year. Tom Keene will be in a robotaxi in New York City. That's my call. So the point is, again, it's glass half full, glass half empty. The point is, this is where this is all heading in terms of the AI revolution.
How do you square Tesla's long-term bullish outlook, though, with rising competition from BYD and just the unpredictable regulatory environment in China, which is Tesla's second market? And I guess this applies to other tech giants as well. I mean, we saw how much the markets were rattled by DeepSeek early this year.
Well, look, take a step back, I mean, for the first time in 30 years, the U.S. is ahead of China when it comes to tech because of AI, right? And it's really, there's one chip fueling the AI revolution. And of course, that's the godfather of AI, Jensen, NVIDIA. That competition is going to continue to be there. It's an arms race. But that's also why, in terms of the Trump initiative, in terms of AI, they recognize now is the time. China competition is going to increase. And you talk about EVs, BYD, NIO, you know, we spend a lot of time in Asia. That competitive issues, you know, it's pressure for Tesla. But on the other hand, I believe like they're going to start to now see steadying of demand. And the most important thing continues to be autonomous. I mean, I think 90% of the value, future value, is going to be autonomous robotics. We believe autonomous alone is worth $1 trillion to the Tesla story.
All right, so let's touch on Apple for a bit. iPhone sales, China demand, strengthen, weakening. How do you see it?
Look, I think the actual quarter is probably better than expectations given our checks, you know, in terms of what we see just in terms of iPhone demand. But as we know, like, the elephant in the room continues to be, it feels like, you know, they're on a park bench eating an apple, drinking lemonade, while everyone passes by in the AI revolution, big tech. It's time, this DNA needs to change, right? And I think it's time that Apple's they need to aggressively ramp, whether it's the Google partnership or we talk about the Perplexity acquisition. You cannot have the best install base, the biggest consumer install base, and miss out on AI. And it's always next year, next year. WWDC this year, it felt like Back to the Future, right? Going back to 2016.
And back to Microsoft, you said that with such aggressive adoption forecasts, around 70% of the install base by 2026, what are the risks that enterprise deployment timelines slip or fail, you know, as fast as expected?
Yeah, I mean, there's always risk, but we've talked about it. It's accelerating. And that's why I think how Nadella and Microsoft, I mean, you know, they're playing chess while others are playing checkers. Because not just in terms of what they're doing in AI, in terms of the overall stack with Azure, and now the monetization opportunities. And Microsoft's the first call. I mean, they're the toll collector on the highway. And I think they continue to be just a huge beneficiary when it comes to cloud. And that's why, like, and I always talk about it, and if you just focus on valuation, like a lot of the bears right now in hibernation mode in those caves, they can't find AI in the spreadsheets, right? And we're in the midst of another 2 to 3 year tech bull market.
You got it. Dan Ives, always a pleasure having you. Global Head of Technology Research at Wedbush Securities. Stick around. We've got a lot more here coming up on Bloomberg Intelligence. Good morning.
to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
You're listening to Bloomberg Intelligence on this fun Friday morning. Paul Sweeney is off today, maybe enjoying the beach. I'm Isabel Lee, but I'm here with Lisa Mateo, and it's been fun with Lisa. We're wrapping up what has been a crazy week in terms of politics and also markets. But now let's talk luxury. So we have LVMH seeing sales fall. That's as shoppers really just rein in their purchases on their costly bags and Dior jackets. So it's maybe a sign that, the luxury titan remains stuck in this post-pandemic slump. And you see this especially in China, which for decades has been the driver of growth. So let's now bring in Deborah Aitken. She's Bloomberg Intelligence luxury goods analyst to shed some light on this. So Deborah, what is the persistent weakness in China and Japan?
Hi. In China in particular, we've seen for several quarters a downturn linked to consumer sentiment issues, tariff uncertainties and others. We have started to see for the last couple of quarters. And then also, including this quarter, a little pickup sequentially, but still very much negative. So that's the China side. On Japan, actually, when we look at the LVMH number in particular, and to put it into context, last year there was so much travel from the Chinese consumer taking advantage of a weak yen that this comp on Q2 was comparing against 57% growth in Japan. So yes, for the first time it was down 28% year on year, but it was against a very high comparable base.
Now, with this said, the EU, US are still undergoing these trade talks, right? So how much of an impact will tariffs have on the company?
Yeah, so we did some in-depth analysis, actually. The company said that if there's a 15% tariff levy, they would manage that. And we thought on 10% initially, which was pushed across globally for now until we hear more on the 1st of August, a price rise of 2 to 3%. Now, in particular, they'd add that specifically to the US, but also about 2% inflation across some of the parts of the portfolio. So that could equate to about 5% in the US, maybe 6% in some categories and some particular brands, some styles, depending on where we end with those levies.
How sensitive is LVMH to currency movements and maybe even tourism patterns?
Yeah, we've seen actually not just for LVMH, we've had a handful of companies reporting so far. If we think about the Forex side, it has swung negative. If we look at the second half of last year, we were at plus 1% for LVMH. We've swung to minus 3% because a large part of the cost base for these companies is very much out of Europe for the Heritage Group in terms of production from there. And so that does have an impact on the gross margin. From a tourism's perspective, because if we think about where we were even at the in April when the company last reported and from beginning of year to now, we've seen kind of a dollar shift versus the euro. Think about from 103 to about 117. So that has a major impact on the thought process of what you're buying when you're traveling and if you're traveling. And that's very much impacted Europe and the US. So we do see from the company reports of the US being generally okay, flat to slightly down, Europe a little bit more positive, but both locally. If we were to then strip away the lack of tourism, that is having a slight negative impact.
Hey, Deborah, I have to ask you, because in April, LVMH, they lost that title, France's most valuable company, to Birkin bag maker Hermes. So what are they doing that LVMH is not doing?
There are two or three things for LVMH, actually. If we think about, well, first of all, they've grown so substantially since the pandemic. So there's been a huge amount of growth on the top line. They're a company that needs to grow from an 80 billion base to achieve growth. So that's the first thing. It's very different for them versus any of the peers because in terms of absolute sales, they're around 4 times the next peer. The second thing is that they are more exposed in travel retail, so that with their duty-free stores, their DFS, that has a big impact also with parts of their selective retailing. If we shift over, and then wines and spirits too, because I should mention cognacs, which are also still a drag for them, even though champagnes and some wines have come back, particularly this quarter, positively. If I shift across to Hermes, it's a much higher price point across the board, so we know that there is more of a robust feel in terms of the purchasing thoughts behind the higher end consumer, the richer consumer. And then they are really focused on a single brand in high category also, and that's held up better. So it's just that for LVMH, if we compare direct to Hermes, then LVMH is in some category markets that are softer.
All right, Deborah Aiken, thank you so much, from Bloomberg Intelligence Luxury Goods Analyst. I wish I had more time with her. I wanted to ask about the faux designer bag market.
That is true.
It's like a big thing. And I always hear these stories about like how similar they look to the real thing. So I don't know. We're going to have to see. Okay, so for our listeners in the U.S., we have a reminder. You too, you can listen to us on via satellite radio or on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121. It's presented by Oracle. Stay tuned for the latest market news and industry research that's coming up in the next hour. Right now, we'll check back in with the markets. We have the S&P 500. It's up about 0.2%. The Dow, same there. The NASDAQ up 0.1% or 40 points. And we go to the Bloomberg Dollar Spot Index, up about 0.3%. Want to check the yield space. We have the 2-year at 3.91%. That's little change. And the yield on the 10-year, 4.44%. And that is little change as well. Good morning. You're listening to Bloomberg Intelligence.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning and welcome to Bloomberg Intelligence. I'm Lisa Mateo alongside Isabel Lee. Paul Sweeney does have the day off. It is Summer Fridays. He is hanging at the beach somewhere. We have a lot coming up in store for you. A special treat to Gina Martin Adams. She is on high demand and we're getting her later. She's going to be talking about the markets. Geetha Ranganathan, she's going to be talking about a few things. Remember, we have that big Paramount merger. Charter shares, they are falling. And Muni's in focus. Pat Haskell, he's head of Muni Bond Group at BlackRock. He's going to be talking about that market as well. And finally, Poonam Goyal, senior U.S. e-commerce retail analyst at Bloomberg Intelligence, talking about a few things. I mean, Puma shares are struggling too. But let's take a look at how things are looking for the S&P, Dow, NASDAQ. Let's get it all taken a look at with Charlie Pellet with your Bloomberg Business Flash.
Thank you very much. Happy Friday. We have got the Dow, the S&P, NASDAQ all advancing, ending the week with gains. And looking back, the S&P 500 index up every single day this week, extending a rally to almost 30%, about 83% of companies exceeding analyst profit estimates with some big exceptions. So right now we've got the Dow up 105, up by 0.2%. S&P higher by 14, 63.77, where we stand, up by about 0.2%. NASDAQ advancing another 31 points, up 0.1%. S&P at a record 63.77. Our Mag 7 index higher now by 0.5%. Today we are seeing Tesla shares rebound by 3%. Yesterday, you recall, Tesla plunged by just about 8%. The 10-year, 4.40%, with the 2-year, 3.91%. Spot gold down $39 the ounce, down 1.2%, 33.29. West Texas Intermediate crude down 0.7%, 65.55 for a barrel of WTI. Sarah Hunt is chief market strategist at Alpine Woods Capital Investors on surveillance this morning. She told us it's all about quarterly reports.
I look at those earnings and I think they have to come through because this market has rebounded so fast off the lows. It has anticipated an enormous amount of good things that are coming from a number of the things that are happening on the ground. Right. And it now has to keep that up because I think it is ahead of the earnings.
Sarah Hunt interviewed this morning on surveillance. Intel shares lower after CEO Lip Bhutan sparked concerns that he was more focused on cost-cutting than restoring the chipmaker's technological edge. Right now, we've got Intel plunging by 9.1%. Again, recapping here, stocks pushing higher with the S&P up 16, up by about 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie. We want to take a look at some of the stocks on the move today. Lisa Mateo alongside Isabel Lee. And we are joined by Bloomberg's Red Brown. Red, let's start with Charter Communications.
Yes, Charter Communications is actually the worst performing stock in the S&P 500 at the moment. Shares fell as much as 18.5%, and that's the worst one-day or intraday performance since at least December of 2009. And that move is coming off of the company reporting it lost more internet subscribers than they had expected, than analysts had been expecting this quarter. And that's really coming down to the fact that it's just facing really stiff competition from the big three telecommunication companies. They've been quite successful in their bundling, so now you don't get wireless you get wireless with your phone service as well. So Charter is struggling to kind of continue to attract when all of these other companies are kind of moving in on their territory. But now there is maybe some hope looking forward, but obviously not by the move today. But there is some hope with some of these deals the company's been striking with Peacock, Hulu, adding ESPN, Fox streaming as well, that they might start to be able to kind of turn the tide. But for the time being, investors kind of fleeing Charter at the moment.
What's going on in Estee Lauder? That's a favorite of many of my friends.
Is that right?
Not you?
Mine too. What the heck? No, Estee Lauder it popped on my radar for a couple reasons. One was the stock jumped around 4% today after JP Morgan analyst Andrea Teixeira upgraded that stock. And that kind of surprised me. It took me by surprise this morning, just because of my kind of understanding, and maybe you guys don't know better than me, is just the cosmetics have been struggling, especially abroad. I know China and Europe have seen pretty significant cutbacks on spending there. But it does seem like, and at least, reading some of the analyst reports this morning, that there looks like there could be time for a turnaround here still. Right now, consensus is calling for a 12% decline in sales for this quarter. That's coming 20% drop in Europe as well, but it does seem like as we look ahead in consensus expectations that the company will start to turn around and could start putting up positive numbers by the end of this year. So yeah, definitely something to keep an eye on right now.
If I'm keeping an eye on my daughter's drawer, it is full of cosmetics.
You guys are there.
No, maybe not Estee Lauder, but
you guys are responsible for the turnaround, so keep it up.
Exactly.
Yeah.
Okay, so Paramount, they got some good news from the FCC.
Yes, they did. Hopefully we can finally put this saga behind us. Yeah, one less thing for us all to be looking at. But yes, just checking in on shares for Paramount. That they are trading flat right now after the FCC did approve its merger with Skydance. They have surged 26% this year, so maybe that was just kind of well telegraphed that this was going to go through. It seems like there has been kind of positive developments throughout the last few months. And I think the thing that kind of finally got this over the line was the company made some concessions to the Trump administration. They agreed to end their diversity, equity, inclusion practices, kind of in line with a lot of the Trump administration's push to end these programs in corporate America and higher education across kind of the world. I mean, the country here. And then it also came with some efforts by the company, or at least promises by the company, to improve the political leaning of some of its news coverage. So there has been claims of bias towards the political left. The company is now making an effort to field editorial teams outside of New York and Los Angeles to address some of those issues. But yeah, so shares again not really reacting on this news, but kind of hopefully putting the end to this months-long saga.
Yes, and us reporting.
Yeah, that's more importantly.
Red Brown, thank you so much. For more conversations like this, you can subscribe to our new Stock Movers reports. Listen for those 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. All right, one of those stocks under pressure is actually Charter. Oh, no. Oh, we're not going into that. Yes. Are we going? Oh, we both are. Okay, so Geetha. There we go. We are going to Geetha. Geetha Ranganathan, she's Bloomberg Intelligence Analyst on the latest in the media space. So Geetha, we were talking about Charter. So shares really taking a hit, lost more internet subscribers. If you can explain to us, is it just a lot of pressure from these mobile phone companies? Is that what it is?
It is exactly that. So remember, Charter controls about 28% of the fixed broadband market. They have roughly 29 million subscribers. But what has happened over the past few years is, the telecoms. So think about, AT&T, Verizon, T-Mobile. They've gotten really aggressive. So of course, we know that they are the top wireless providers, but where they're competing now with the cable operators is in fixed broadband. So your home internet connection, for instance, right? So what they're doing is they're offering something called 5G home internet, which is really cheap. It's just very easy to hook up. It costs about $50 a month, and it's much cheaper than cable. And so people are really saying, you know what, this is great. I don't have to deal with, the endless heartache that everybody usually has with their cable company. Plus, it's cheaper. And so that's where we're seeing a lot of the competitive pressure for the cable operators, both Charter and Comcast, and they are losing subscribers. And they're losing subscribers at an accelerating pace. And that is what is really spooking investors today.
So we have Charter CEO Chris Winfrey saying that the company has been fighting back with streaming service additions and noted that the new tax legislation will save the company several $billion in cash taxes in the next 5 or so years. Do you think that's their next life vest?
So one thing, yes, I think that definitely helps on the margin, but it's really not doing a whole lot for, the stock today. But yes, bonus depreciation, 100% bonus depreciation is something that will help boost cash taxes and ultimately help boost capital spending. And I think that is the whole, idea behind having this tax incentive to kind of boost capital spending all across. So yes, we will see some uplift from there. But as of right now, I think what Charter is really going to have to focus on is about a month ago, or maybe just over 2 months ago, they announced a deal with Cox Communications. It's a $35 billion deal, which actually will make them the largest broadband operator. And so I think what's going to happen at this point is a lot of focus is going to shift to that deal and how that can potentially help them stem losses a little bit, kind of regain their footing a little bit financially. But as it stands right now, things are looking pretty bleak for all of the cable operators and Charter also.
So that was with Charter. What about their mobile Charter mobile offerings? Because I see that got a little bit of a bump because they're, I guess, agreeing with Verizon for certain things. How is that working out for them?
Yeah, so, just like, you had the telecoms that really are the incumbents in wireless and cable that is the incumbents in broadband, we have both of them kind of crossing over into each other's territories. So you have telecom now kind of crossing over into cable's territory and kind of offering broadband service. And similarly, you have cable kind of crossing over into telecom space and offering wireless and mobile services. And they've actually made a pretty decent foray, I would say, into the wireless world. Charter actually has been extremely aggressive. So one of the strategies that they're following is they're bundling their mobile service along with their broadband in order to actually stem the subscriber loss. So as long as you're within the Charter footprint, you can get a mobile line at a significant discount. It is helping on the margin, but again, as we are seeing today, not really enough to move the needle.
I want to talk about another big development happening in the media space. We have FCC Chair Brendan Carr saying that he was pleased by Skydance commitments when it comes to the concessions. How significant are these concessions for regulatory precedent when it comes to future media mergers? And I'm talking about the Skydance and Paramount deal.
So I think this FCC was definitely expected to be much more, M&A friendly. So we're kind of expecting this whole wave of deregulation to happen with a broadcast. But for Skydance and Paramount in particular, you had that big CBS News lawsuit that was kind of pending. There were the DEI issues that you kind of just mentioned before the segment. So all of those concessions, I think, really kind of helped get the deal. We know that the Ellison family also met with the FCC. They met with President Trump to kind of get the regulatory approval for, this deal. And I think at the end of the day, that kind of does signal that as long as, you're willing to work with the FCC, and the administration, I think a lot of the media deals can potentially get done.
All right, Geetha Ranganathan, thank you so much for your time. She's Bloomberg Intelligence Analyst on U.S. media. All right, so we turn from the media, and let's go to stocks, right? Because they closed at all-time highs yesterday. S&P 500, well, they notched its 10th record in 19 trading days. But the question is, how long is this rally going to last? Well, let's get some insight. Who better from Gina Martin-Adams? She's Bloomberg Intelligence Chief Equity Strategist. Gina, so investors kind of worried about inflated share prices, meme stocks. I mean, should this be a concern for all of them?
I think that there's some valid concerns when valuations for the S&P 500 are back near all-time highs. We're trading at levels about 50% premium to the rest of the world equity markets. So very clearly there are some, at least pockets of excess valuation, which does mean stocks are vulnerable to potential disappointments emerging. When you're trading at elevated premiums, it does suggest elevated expectations. So when those expectations are dashed are usually when stocks prove vulnerable. But broadly, the price momentum is very strong. Generally, investors are rotating back into U.S. equities because the earnings environment has proven to be a little bit stronger than was anticipated just a few months ago. And that stability and high quality is definitely trading at a premium right now.
We have Bank of America's Michael Harnett saying that the risk of a bubble in stocks is rising, and that's as monetary policy is loosening and just, easing in financial regulation. What do you make of that school of thought? Because we've spoken with a couple of strategists this morning, and some have disagreed.
I think that there are pockets of excess, without a doubt, but the internal dynamics of where the pockets are tell you a lot about what investors' sort of sentiment is. And a bubble really is a bubble in sentiment, right? Typically, you would define a bubble as excessive exuberance about stocks at large. I don't think that you have excessive exuberance about stocks at large. I think you have excessive exuberance about high quality, high profitability, high growth prospect stocks. When you look at the small cap index, it's still trading at an incredible discount relative to the large cap index. When you look at stocks outside of the United States, you're still sitting at valuation levels that are right in the norm relative to long-term average, if not discounted. So I think you have pockets of bubbly type conditions, but broadly, it's more of a bubble in high quality, persistent, very mega cap growth stocks. Not necessarily this sort of irrationally exuberant, broad love of equity markets that would typically characterize a broad bubble.
So what's it going to take to keep the rally going? What are you watching?
Yeah, I think that you can have it manifest itself in a couple of ways. Obviously, price momentum can carry you a very long way, and price momentum currently favors the high quality, high profitability companies, which have generally outperformed over the last several months, have outperformed really since the post-pandemic lows in 2022, and continue to carry a lot of sort of investor interest. You can see that continue to lead the market as long as there's not a profit disappointment that comes out of that group. Outside of that group, the longer term sort of most bullish story you can paint for stocks is that we see better profitability emerge, better earnings conditions emerge for some of the stocks that have just been left behind in this rally. The small caps, for instance, the value plays in the S&P 500. The generally smaller capitalizations inside large caps, the global stocks that have, just started to catch up to the S&P 500's rally since those 2022 lows. So you could see a broadening trade emerge in an environment where economic conditions start to improve, where rates may become a little bit lower, where you see some stability potentially emerge in policy making. You could see a broader market sort of rally emerge that benefits some of the stocks that just haven't participated nearly as much in the last 3 years bull market.
A lot of analysts we talk to highlight AI as the core thesis behind their sector calls. But how do you separate real earnings leverage from speculative multiples?
Yeah, I think it's a really interesting point because what we're seeing right now is AI is trading as a theme for the AI producers, not necessarily the AI users. And that's where I think you're going to see things start to shift in the years ahead is the implementers of AI, the buyers of AI in non-tech industries should start to see profitability improvement as a result of this AI implementation. We're seeing a lot of AI, the AI trade really concentrated in the tech sector naturally and the communication space. The companies that actually develop AI are the beneficiaries right now, but eventually you may see the users of AI become the longer term beneficiaries. That could be a massive margin improver, profitability.
Gina Markin Adams, so sorry, I gotta cut you off. We are out of time. She's Bloomberg Intelligence Chief Equity Strategist.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all higher. S&P at another record, just about the best level of the session. And this update is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. A rally underway on this Friday, on track for a winning week with the S&P up 14 now. That is a gain of 0.2%. S&P, by the way, up every single day this week, extending a rally to almost 30%. We've got the Dow up 57, up 0.1%. To be sure, S&P at a record. NASDAQ up 45, gain there of 0.2%. Our Mag 7 index is advancing 0.7%. Tesla, after yesterday's 8% plunge, up now by 4%. The 10-year 4.41%, with the 2-year 3.92%. Spot gold down $35 the ounce, 33.33 right now, down 1.1%. A retreat for crude, down 0.8%, 65.53 a barrel. And Bitcoin now lower by almost 3%. Bitcoin at 115,400. Intel shares tumbling after earnings, down by 9.3%. Also, shares of Pinnacle Financial and Synovus Financial plunging after the companies agreed to an all-stock transaction valued at $8.6 billion that will combine two sizable banks in the attractive southeastern market. Right now, Pinnacle shares, they are trading down. We've got Pinnacle down by 12.3%. Synovus also dropping by 12.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, from Focus on Munis, it is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM-insured municipal bonds. Protect your investments with an added layer of security and guarded income. Invest with strength, build a stronger tomorrow with BAM Mutual. So let's dig into it. Okay, infrastructure funding, tax advantages, municipal bonds, they are playing this growing role in portfolios. So joining us now to tell us more about it is Pat Haskell. He's head of Muni Bond Group at BlackRock. Pat, thanks for joining us this morning. So explain to us how BlackRock is positioning your municipal bond portfolios in today's environment when you have different interest rates and people talking about it. How is BlackRock positioning itself?
Good morning. Thanks for having me on. We are long the municipal bond market. We think there's a bunch of attractive opportunities, but probably right now the most attractive opportunity is high-grade securities in the long end of the curve. You're getting tax equivalent yields there with AA rated securities in the 7.5% to 8.5% range on a tax equivalent yield basis. It's on a nominal yield behind, they're behind 5%. We haven't seen those yields for a sustainable period since 2011.
How should investors balance duration risk in munis with potential Fed cuts on the horizon?
Well, the duration risk in munis, you're getting paid for because the tax-exempt curve is over 100 basis points steeper than the taxable curve. So you're getting paid to take that duration risk. With the looming Fed cuts, typically retail then tends to pile into the muni market and chase returns. So what I would expect tax-exempt duration to perform well in that environment.
Well, what's your outlook on muni credit quality over the next, let's say, 12 to 18 months, especially sectors like healthcare, higher education?
Yeah, muni, first of all, we're starting off in a very good spot. We've got 49 of 50 state budgets done. Muni credit is as healthy as it's been in well over a decade. So we're starting out in a very good spot. Healthcare and higher ed, we tend to like to stay towards, the larger healthcare systems, larger flagship universities, even with some of the headlines around different changes in legislation coming out of the various things in Washington. For the most part, those sectors are still doing very well.
And BlackRock favors high-quality state and local debt, according to your note. How differentiated is credit risk among states today, especially, in terms of pension burdens or some volatility when it comes to revenue?
I mean, like I said, the broader market's in a very good spot. There is definitely differentiation. There's 3 or 4 states that headline, have pension issues. That's not something that's looming in the next 12 to 36 months. But over time, certainly everybody, endeavors to get to a balanced budget state.
And are there specific credit sectors, geographies you're kind of overweight or underweight right now?
We tend to like states that have their that have their balanced budgets in place, within each micro geography, there's high points and low points. So we tend to not have one broad swath and say we like the Northeast and don't like the Southeast, for example. We don't do that. We have different AI-driven tools that follow economic activity across the United States, and we can cut that economic activity by zip code, by county, and really get into the weeds to see where what's going on in those various zip codes to make sure we understand what the economic activity level is and what we're investing in.
You mentioned favorable summer supply and demand. How meaningful is seasonality in today's market when we have ETF flows and institutional demand dominating, and you repeatedly made a point earlier that we are in a good market?
So it's interesting. Supply's up over 21% this year. So that seems to be at this point, as we're sitting in the 3rd week in July, to be overwhelming some of that seasonal positive. A lot of that has to do with, I think there's a pull forward in supply based on ambiguity around public policy as we have a new administration coming in. Having said that, as the big beautiful bill was passed, most of that is now, that ambiguity is behind us. So I would think the second half will be a little bit lower in supply, which speak well for positive technicals.
All right, bottom line, give it to us, Pat. Why should people put munis in their portfolio?
Because you have super high credit quality that can create durable sources of income to offset the rest of your portfolio.
All right, there you go. That is Pat Haskell. He's head of Muni Bond Group at BlackRock, talking about the Muni Bond market. All right, so from that, we want to go to stocks. We have Puma shares. They've really been taking a hit. The reason behind it, that's what we want to find out. So we want to go to someone who knows it. It's Poonam Goyal. She's senior U.S. e-commerce and retail analyst at Bloomberg Intelligence. Poonam, so explain the issue. I mean, is it just tariffs? Is that the issue for Puma?
No, it's not just tariffs. It's a lot more than tariffs. So there's multiple things going on here. The first that probably applies to everyone is Forex issues. So there's Forex pressure. The second is tariffs, which is about an $85 million impact for 2025. And the third is wholesale weakness. And the wholesale weakness is a Puma specific issue. And I think that's really the biggest here. They've been challenged over the past few months. We've seen them, sales kind of decelerate, especially in North America, and they have lost momentum. And that just completely was evident in 2Q results. And the fact that they had to cut guidance, they were expecting a low to mid-single digit increase in 2025 for revenues. That is now expected to be down low double digits. So a big shift here, and I think it's largely demand driven.
Yes, and it's low double-digit revenue drop, as you pointed out. So then how credible is a proposed turnaround timeline given in 2026 as they transition through the year?
Yeah, so a turnaround, we need to know what they'll do. They have a new CEO in place. He is expected to provide some direction on that at the end of October. So between now and October, he's learning, he's trying to figure out the turnaround. At best, 2025 will be a reset year, and 2026 a transition year. So there's a lot to be done here. I think the one thing that they can work on in 2H is inventories. Inventories on a constant currency basis were up about 19%. That's clearly significantly higher than the 2% decline we saw in sales for the second quarter. So a big gap there. They need to work that down. That's probably priority number one and something they can tackle. As far as figuring out how to rebalance the portfolio between wholesale and digital and how to really reignite demand, I think that's a longer term push, and we need to hear more on that.
All right, Poonam, I also want to ask you about Amazon because they gave shoppers a little bit more time, right? It was 4 days instead of the 2 days. And a lot of those shoppers went to Walmart too. So did that actually help give Walmart a little bit of a boost at the same time?
Yeah, so Amazon Prime Day went from 2 days to 4 days this year. Around Amazon Prime Day, every year for the past few years, other retailers have added their own sales events that have been longer in duration. What we learned from alternative data at Bloomberg, which is some of the second measure data, there are two things. One, Amazon sales over Prime Day, when adjusted for the 4-day period for both years, were up 4%. That's relatively in line with where they have been in previous Prime Day years, a mid-single digit gain. Walmart sales in that same time period did grow more, but you have to remember that you're comparing apples and oranges here. Amazon has a GMV of over $700 billion based on our estimates. Walmart's over $100 billion. Walmart's younger when it comes to the e-commerce push, and therefore growth rates are higher. Did customers move to Walmart because Amazon gave them longer duration? Some, yes, but the second measure data clearly shows that 91% of shoppers that shopped Amazon shopped one retailer over Prime Day. So there was an increase to Walmart. It went from 4% to 8% of Amazon shoppers that shopped Prime Day. But the bulk are still loyal to Amazon in our view.
That's what I was thinking, whether this is a shift in consumer sentiment or a shift in consumer loyalty or just really better discount or timing on Walmart's part. But it did show that Walmart can be quite a formidable rival to Prime Day.
Yes, absolutely. They can. They absolutely can be, and they are, because the one retailer that can compete on price and also make investments to support their logistics platform is Walmart. They have the deep pockets and they have the scale to compete with Amazon. But that said, Amazon's Prime members are very loyal. We saw that in the survey we ran ahead of Prime Day, where when asked where you're planning to shop, Amazon remained top of mind. People who wanted to sign up for Amazon wanted to stick with the subscription even after the Prime Day deals. So we do think there is a lot of loyalty there too.
Now, at the same token, Amazon going longer to 4 days, I mean, in the last minute or so we have left, was it because they could get more ad revenue out of it too? I mean, was that kind of the thought behind it?
I mean, that's definitely a plus.
Sure.
Was it part of it? Sure. But I think it was really just to strategically implement deals by category through the days and the hours within the days. So others were doing it for a week. I mean, if Walmart goes from 2 to 4 days, it's not that big of a deal.
All right. Thank you so much, Poonam. That was Poonam Goyal, Senior U.S. E-commerce and Retail Analyst at Bloomberg Intelligence. All right. We've got a lot more coming up here on Bloomberg Intelligence, including Intel. We're going to be breaking down their report and find out why shares are down about 9% right now. We'll have that coming up on a day right now where the markets are rising. We have the NASDAQ up 0.2% or 57 points this morning. We go to the Dow up 0.1%, 80 points. The S&P 500 up 0.2%. Taking you over to the yield space. The 2-year, 3.92%. That's a little change. And we have the yield on the 10-year, 4.41%. That's up about 1 basis point. In the commodities, we have Brent crude down 0.7%, $68 a barrel. And if you're tracking gold, we have COMEX down 1% at $3,388 an ounce. The Bloomberg Dollar Spot Index, that's up about 0.3%. We'll have much more coming up right here on Bloomberg Intelligence. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. The Dow, the S&P, NASDAQ solidly in the green, with the S&P 500 index trading at a record, up another 15, up by 0.2%. S&P up every single day this week. Stick with Bloomberg Radio for the latest on these markets, and of course find out how things shake out at the close. So the S&P at 63.79, up 0.2%. The Dow now higher by 74 points. That is a gain of just about 0.2%. Likewise for the NASDAQ Composite Index and the NASDAQ 100 Index, they're both trading higher by 0.2%. Our Mag 7 Index is up 0.8%. We do have shares of Tesla gaining today, up 4.5%, in sharp contrast to yesterday's 8.2% plunge. The 10-year 4.40%, with the 2-year 3.92%. Gold is down almost $40 the ounce to $33.28 for gold. That is a drop of 1.2%. West Texas Intermediate crude down 1%, 65.35 for a barrel of WTI. And Bitcoin down 2.9% at 115,311 now on Bitcoin. Marta Norton is Chief Investment Strategist at Empower Retirement, and on surveillance this morning, she talked about the market backdrop specifically for technology.
We see valuations in technology look expensive, but the Mag 7 look a bit cheaper. They have idiosyncratic issues that are also going on. So I almost think that the concentration risk is less extreme than it was because it's not combined with that valuation concern.
Marta Norton of Empower, which does provide retirement planning services to Bloomberg LP. She did mention the Mag 7 index up by about 0.7%. Tesla robotaxi service launching this weekend in San Francisco. This according to an internal memo seen by Business Insider. The Tesla robotaxis will have a safety monitor in the driver's seat. And Lyft is partnering with Benteler Group, that is an Austria-based manufacturer, to deploy autonomous shuttles in the U.S. in late 2026, trying to catch up with rival Uber. Uber shares down 0.3%, Lyft lower today by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you very much, Charlie Pellet. All right, so the turnaround efforts at Intel's new CEO, they're under question. The latest earnings report, that's the reason why. Here to explain more about it is Kunjan Sobhani. He's Bloomberg Intelligence Senior Semiconductor Analyst. Kunjan, if you can explain to us, there's some concern that the new CEO, he's a little bit more focused on cutting costs than making the company more competitive. I mean, is he, or what's leading to those thoughts?
I don't think it's as clear as we stated. The results were a mixed bag. The new CEO is definitely taking some steps in the right direction, aka cutting costs, which was necessary for this company, turning around the culture, focusing on making things simpler and focusing on the core assets as he's divesting the non-core assets. The issue here is investors had been promised a lot from the previous CEO, right, which is still on their mind, namely that the foundry business, that the 18A was going to be the key node where Intel would get external customers and start getting a lot of external foundry revenues. From what we heard last night, it seems that goalpost is sort of moving farther out now to 14A. So that was a disappointing fact that investors will now need to wait quite a few years before we can start seeing billions of dollars of external customers bringing in foundry revenue.
Despite the turn to AI and foundry services, Intel continues to lag behind NVIDIA and AMD. So what signs show that Intel is closing that gap in AI leadership or foundry relevance in the second half of the year?
Well, there are no signs as of this point, right? They are changing. It's clear they've lost out on the AI race. They are changing the way they think about AI under the new CEO, but that will take time. You cannot just close a 3-year gap suddenly in a second half. So we don't have any trackers right now. We have to wait. I think sort of in the second year they might announce what their strategy is, and it's not clear what the timing of that closing of the gap will be.
And you mentioned the new CEO. So how is his approach different from former CEO Pat Gelsinger?
Well, it's like two complete opposites, right? The prior CEO was very aggressive, like to put goalpost at the star, so at least you get the moon, and really promise and try to aggressively achieve it, which didn't happen on all metrics. Lip Bhutan is very practical and very conservative, right? So which we saw from the results last quarter. They had given a very conservative guide, which helped them to get some breather and finally deliver a good beat both on the print and the guide. But that's a two very different approaches. A clear example here is, under Libbu, they've decided that they're not going to aggressively promise that they are going to have external customers right away on 18A. They will first make that node work internally, get it to better yields, and then market it to customers, which, if you ask me, it's a very right and practical way to go about this. Versus in the prior CEO, it was like before even the process was ready, promising the investors, promising the customers that this is what we are going to give to you and get external revenues.
And we know that Intel has canceled or delayed major factory projects in Germany, Poland, and even Ohio. What impact does that have when it comes to their ability to meet future AI chip demands, or like how credible are the timelines for those as well?
Yeah, given the timeline of the nodes that I spoke about, we think this is a good move because it helps them with near-term liquidity and free cash flow. And keeps them still makes them be flexible, that if external customers do come suddenly to them and have a lot of demand for these nodes, they still have the flexibility to start ramping up in a given amount of time. So this is actually a good move in our regards.
So they had a resurgence in the PC industry. Manufacturers kind of built up this inventory before the tariffs hit. Has that slowed just a bit?
We definitely see that signs. If you look at their typical seasonality, the first half results that they delivered in the PC were above seasonal. That suggests that there was some tariff fear-driven pull-in. And now that the tariff risks have sort of calmed down since the April 1st, the guide that they provided implies a sub-seasonal, below seasonal second half, which suggests that the customers which bought those inventories are sort of now slowing down. So they did see the benefit of that in first half, but now they are going to see the opposite side of that in the second half.
And Intel is cutting around 15% of its core workforce. We have reported that. Do you think that will have operational impacts? Because when you cut headforce, that will affect, obviously, some product developments and all that.
It's a difficult situation to be in. From an investor perspective, we like this move. If you look at Intel and compare it to most of others compute players, they definitely have significantly high headcount per revenue that they're bringing in. So there was definitely a headcount reduction needed. The management layer had become one of the most bloated management hierarchy stacks when you compare in the industry. So this was definitely needed. But yes, you're right. When you're going through headcount cuts, the morale does get impacted, right? And it's also difficult to now attract and keep the best talent that you have, which they are trying to do to sort of bring up their AI competence again and close that gap.
Kunjan, so how does Intel move forward from today's results?
I think it will be a hard few years for them, but they need to keep doing what they have been doing in the last 2 quarters. We like the direction that Libbu is taking. Slowly, if he continues to stay consistent on his communication, on his conservative path, slowly and surely, and as long as keep delivering on those 18A milestones and getting up the yields, slowly and slowly, investors will get used to this new way of looking at Intel, sort of under-promising and over-delivering, and that should help them in the long run. But it's definitely going to be a long, hard path ahead.
All right, we'll be watching. Thank you, Kunjan. That was Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst, talking about Intel. Coming up next, well, we're going to be talking about the railroad. We have Brooke Sutherland, Bloomberg's Boston bureau chief. She's going to be talking about her insight into it, what it means, the regulations possibly behind it. So stay tuned for that. Bloomberg, now in your dashboard. Apple CarPlay, Android Auto, if you want access to every Bloomberg podcast, live audio feeds, headlines at the click of a button? Well, you can download the latest version of the Bloomberg Business app now. All right, back to the markets we go. The S&P 500 up 0.2% or 15 points. The Dow rising 0.1%, 55 points. The Nasdaq up 0.2%, 54 points. Over to the yield space. We have the 2-year, 3.92%. That's little change. And the yield on the 10-year, 4.40%. And that's up about 1 basis point. Stay with us. Bloomberg Intelligence coming right back.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Hello and welcome back to Bloomberg Intelligence. I'm Lisa Mateo. Alongside Isabel Lee, Paul Sweeney has the day off. Isabel, so I did this story this morning. So it was about this app called T, and it lets women anonymously review guys on it. So they post about it, and T meaning like spill the tea, you know, like gossip and talk. So it is actually #1 on Apple's list. So,
that's amazing. Is it per jurisdiction?
It's no, like women go on there and they just kind of like post about a guy that they dated, and it's kind of like a warning to like other women, right? So they either give red flags or green flags. Like it's this whole thing.
It reminds me of, so I'm married, but I'm part of this Facebook group for fun because my friend added me, she's single, and they post guys there too. And then they're like, oh, watch out for this guy. He's a serial dater, shows up first date, doesn't show up second date. But That's cool that there's an app now and it's the most downloaded because
And it's
it
the most
really
downloaded.
it highlights that there's demand for it. Because the Facebook group, I don't know. I mean, I don't think that even generates revenue. It's just a Facebook group, but this is very cool.
It is, and I hear like single life. I'm like, okay, I'm glad I'm not single.
I know
right now. It's a tough world out there.
That's what everyone says, that it's tough these days.
Good luck, ladies out there. All right, we have some big news in the railroad sector. Union Pacific in talks to combine with Norfolk Southern. It's the latest topic of the Industrial Strength newsletter. We are lucky to have the brains behind it. That is Brooke Sutherland. She's Bloomberg Boston Bureau Chief. Brooke, thank you for joining us this morning. You really get into the details of this this deal if it were to go through. But one thing you bring up is how it comes at the right time. So how so?
Sure. And, so one thing to understand about this deal is it would really be monumental because you would have one of the West Coast railroads tying up with one of the East Coast railroads to create a true coast-to-coast network. That's not something that we have had in the U.S. ever. And so that would be really significant and a really seismic change for the industry. But in terms of this coming at the right time, I mean, you've seen a number of railroad CEOs calling for consolidation for years. And part of that is that they just have really struggled to grow. The rail industry has been losing market share to trucking over the past couple of decades. And that led a lot of railroad operators to really focus on cost cutting, a strategy called precision scheduled railroading that involves running the train with fewer workers, running longer trains, closing rail yards. And that worked for a while. They were able to squeeze, a lot more profit out of their operations. But we're several years into the PSR era for the railroads, and they're running out of sort of juice to squeeze from that strategy. And so, if you're trying to come up with a way to grow and a way to cut costs, then, really the best bet right now, if you're a railroad, is a mega merger, assuming that you can get it past antitrust regulators.
But when you look at this deal, is it more a pro for you or a con? Because you highlight the tension in your notes so well. You said a merger of one of the West Coast railroads with its East Coast brethren has long been a holy grail of sorts. But such a deal would shrink the already heavily consolidated North American railroad industry down to just 5 major companies, or more likely 4. So how do you square the two together?
Sure. I mean, I guess it's a question of like a pro for who. Like a pro for the railroads. Probably. And their argument would be that creating, that true coast-to-coast network would really increase the efficiency, would increase the service that railroads are able to offer, particularly because you would get rid of the need to interchange in Chicago, which is a really congested pain point that the railroads have long complained about. And that would just make the railroads more competitive with trucks. If you think about it, trains are really limited to the tracks that are laid, where trucks can go more or less anywhere. And in that free-flowing capability has been very attractive to shippers. In terms of the bigger picture, I do think there's a question of, is this good to have even more consolidation in an industry that is already extremely consolidated? And when we've had merger talks in the past, you have seen substantial pushback from those shippers, from those customers who say the railroads already have too much power. And I think if this deal does come to fruition, you would certainly expect to see that again, with some of the customers not being happy about, even more consolidation in the rail industry.
Yeah, you had mentioned that earlier, Brooke. So if they can get past the regulators, I mean, how much of an uphill battle will that be?
It will be significant. So what happened was the Surface Transportation Board, which is the primary regulator for the railroads, approved new merger rules in 2001 that requires any kind of combination to meet a public interest standard. And that means that the companies have to show that not only does their deal preserve competition, but it also enhances competition and it creates other sort of public interest benefits. That's a very high bar that as of yet has not been met. We did see Canadian Pacific and Kansas City Southern successfully complete a merger, but that deal was a special case. There was actually like sort of a loophole written into those 2001 rules for Kansas City Southern in particular, because it was the smallest of the major railroads. Canadian National tried to buy Kansas City Southern and actually failed on that public interest standard in its quest to sort of set up a voting trust to do that deal. So this is a very high bar. I think the expectation would be that, the rule books are going out the window in many different ways for the Trump administration. And maybe this might be another example of that. The administration has taken a pro-business attitude. There is a new commissioner ahead of the STB who some rail watchers think might be more open to consolidation. I don't think this is a done deal by any means, though. The Trump administration has actually given mixed signals when it comes to antitrust. Yes, they are very business, but the antitrust chiefs at the FTC and the DOJ have said they will keep in place those tougher Biden-era rules.
We shall see if it does happen, Brooke. Brooke Sutherland, thank you so much. She's Bloomberg Boston chief and author of the Industrial Strength newsletter. You definitely got to check it out for yourself. For our listeners in the U.S., a reminder, you can listen via satellite radio on Sirius Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. You're listening to Bloomberg Intelligence. We've got global business stories and headlines coming up. Sorry. That was the wrong promo. It's balanced.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. For a second day, the Justice Department is questioning Jeffrey Epstein co-conspirator Ghislaine Maxwell. President Trump was asked this morning if he's considered a pardon for her.
Would you consider a pardon or a commutation for Ghislaine Maxwell?
It's something I haven't thought about. It's really something. I'm allowed to do it, but it's something I have not thought about.
Maxwell's attorney, David Marcus, says she has information to give.
Ghislaine has been treated unfairly for over 5 years now. If you looked up scapegoat in the dictionary, her face would be next to the dictionary definition of it.
President Trump was asked this morning the status of trade talks with a tariff target approaching.
August 1st is going to come, and we will have most of our deals finished, if not all. We haven't really had a lot of luck with Canada. I think Canada could be one where they'll just pay tariffs.
The president said there's a 50-50 chance of a trade deal with the European Union. He's right now on his way to Scotland.
He's expected to meet Prime Minister Keir Starmer to discuss trade issues. Protesters, including Ukrainian and Palestinian advocacy groups, will be demonstrating. A widespread security operation has been underway for weeks and is scaling up before his arrival. Huge transport planes carrying military hardware and Trump's helicopters have been spotted at local airports. Many roads and lanes have been sealed off and airspace restricted. Catherine Arms for CBS News, Bath, England.
Well, here at home, the heat dome that's made for a rough week in the Midwest and South settles in the East. CBS News meteorologist David Parkinson.
We've got record high temperatures being forecast in Baltimore, in Philadelphia, and in New York City as well. Could even see some records on up into New England.
Former Congressman George Santos is due to report to serve his 7-year federal prison sentence for wire fraud and identity theft today. The New York Republican was ousted from Congress in 2023. Santos says he's been assigned to a minimum security facility he describes as a camp. Concession workers at Boston's Fenway Park could call a strike today, as we hear from CBS's Michael Wallace.
The union representing Aramark workers at the ballpark is demanding better pay.
Folks at the park are paid poverty wages.
Union President Carlos Aramayo.
They need to be respected, and if they're not respected, there will be a strike at Fenway Park.
Aramark says if there is a strike, it has contingency plans in place to make sure fans still get their food and drinks.
And checking Wall Street, right now the Dow Jones Industrial Average up 56 points. The S&P is up 16. This is CBS News. The creators of TV's South Park are responding to a controversial episode.
The government can't cancel the show. I mean, what show are they going to cancel next?
South Park's Trey Parker issued a tongue-in-cheek apology at Comic-Con in San Diego a day after the season 27 premiere. Took aim at their new streaming partner, Paramount, CBS's parent company, for putting The Late Show with Stephen Colbert on the chopping block.
We're terribly sorry.
Little did he know the FCC, led by President Trump's pick, Brendan Carr, would greenlight Skydance' $8 billion merger with Paramount hours after the episode debuted. The White House slammed it, calling South Park a fourth-rate show that hasn't been relevant for over 20 years. Deborah Rodriguez, CBS News.
Kristen Cabot, the HR chief at the tech company Astronomer, has now resigned. She was the woman in the viral video that showed her embracing CEO Andy Byron at a Coldplay concert. He quit earlier. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump leaves a cyclone of news in Washington. Welcome to the Friday edition as the president takes off for a trip to Scotland this weekend, but continuing the pressure campaign against Jay Powell, including some comments in the driveway on his way out the door today. We're going to discuss this strategy, what might come of it, if anything, with Bloomberg's Michael McKee here on the Friday edition. Lawmakers leaving town, too. That means town hall season is about to open. We'll talk about what's in store for Republicans this summer with Lisa Camuso-Miller, the former communications director at the RNC. The U.S. and Israel are withdrawing their negotiating teams from Qatar. The president today saying Hamas is not acting in good faith. We'll talk about chances for Middle East peace with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour. And we start, as always, with a look at Wall Street. The Friday trade right now with Charlie Pellet at World Headquarters in New York. What's up, Charlie?
What's up? The market, along with the thermometer, the Dow, the S&P, NASDAQ, all moving higher right now. Joe Matthew, we have got the S&P 500 index up 15. That is a gain of just about 0.2%. But the key takeaway at this hour, it is trading at a record, up every single day this week on the S&P 500 index, running the weekly numbers right now on the Bloomberg, looking at a gain this week of just about 1.3%. So the S&P at 63.78, the Dow also higher, up 49 now, up 0.1%. The NASDAQ Composite Index higher by 0.3%. Our Mag 7 Index up 0.8%. Tesla up 4.8% today after yesterday's 8% plunge. The 10-year 4.40%, and the 2-year 3.92%. Gold is down $41 the ounce, $33.27 on the precious metal, down 1.2%, and a 1% drop for West Texas Intermediate crude now at $65.35 a barrel. Greg Dacco is chief economist at EY. He was a guest this morning on Bloomberg Surveillance. He told us he does not see the recently passed tax and spending bill providing a lot of stimulus to the economy.
The major thing the One Big Beautiful does is prevent the expiry of a number of tax provisions from the Tax Cuts and Jobs Act. That prevents a drag on the economy of 1%. But the actual net boost to the economy, we calculate, will be around 0.2, 0.3 percentage points of GDP. Not a big benefit for the cost of that bill.
Greg Dacco of EY, interviewed on Surveillance. You can hear more of that conversation on the Surveillance podcast, and you can download it wherever you get your podcasts. Intel shares are plunging today by 9.1% after last night's earnings report. CEO Lip-Bu Tan sparking concerns that he's more focused on cost-cutting than restoring the chip maker's technological edge. Again, Intel right now, worth repeating, down 9.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, here he is, Joe Matthew.
Okay, Charlie, happy Friday and welcome to the thresholds of the weekend. It's great to have you on Balance of Power here on Bloomberg Radio. You can always hear us on Sirius XM satellite radio as well. We're channel 121. And if you want to watch the program, Bloomberg Originals live on YouTube as well, search Bloomberg Business News Live, and you'll find our stream from Washington, where things are getting hot and quiet around here. At last, we have the city to ourselves. Stocks rising, so are temps. This is really something. Where Charlie is in New York right now, 93 degrees. In Washington, D.C., we've got 93 degrees. The heat index today, 107. Producer James has instructed us not to go outdoors. In Boston, by the way, on 92.9 FM. 92 degrees, going to feel like 103 later, and they want people to avoid refreshments at Fenway Park this weekend? We'll see how that goes with the Dodgers in town. Here in Washington, you can pick your parking spot. There was no traffic on the way in this morning. Just like that, they go poof. Summer has arrived officially, along with at least mostly the August recess. Senators are going to come back to do some nominations next week, but that's it for Capitol Hill. President's on Air Force One as we speak. He's on his way to Scotland for a golfing weekend. Although, as he told reporters in the driveway at the White House today, it's a trip more about trade. He's going to meet with the UK Prime Minister as part of this trip, but he's also going to open a new golf club. He's going to, well, play a bunch of golf. Leaving behind a swirl of news. It was just this time yesterday he was being fitted for a hard hat for his visit to the Federal Reserve Building here in Washington, D.C. That was quite a display. And when we got together this morning to talk about, well, what are we going to do here with producer James? It's Friday. We got to hang out with Michael McKee and talk a bit about what took place yesterday at the Fed. The president, the morning after here, says it was a great meeting about interest rates. Listen to what he said.
We had a very good meeting. Forgetting about the building, that's out of control, all that. But I think we had a very good meeting on interest rates. And he said to me, now I don't know if he's going to say this on Thursday or whenever he speaks, but he said to me very strongly, the country is doing well. He said, congratulations, the country is doing really well. And I got that to mean that I think he's going to start recommending lower rates.
Did you see the president punch him yesterday? That was the moment for me. I'm surprised this hasn't gone viral. You know, he was asked by the reporters, you going to fire? What do you want to, what can he say to make you stop criticizing? He's getting lower interest rates. And he knocked him in the arm, almost knocked him over, it looked like. I can't imagine what Jay Powell had to talk about at the dinner table last night after he got home. I'm sure Michael McKee's been thinking about that, too. Bloomberg International Economics and Policy Correspondent. He covers the Fed for us, and we'll be back here next week for the next big meeting where Donald Trump wants a 300 basis point cut, Michael. Let me just back up here. What did we see yesterday? Was that the end of Fed independence as we know it?
No, I think it's quite the opposite. I don't think that the president is going to fire Jay Powell. I think he will continue to critique Powell and call him too late and things like that because Donald Trump needs to vent when Donald Trump needs to vent. But I think that he has figured out, or he has been told in strong enough terms by Scott Bessent, that there is no percentage in him trying to fire the Fed chair, because then the Fed sues, they go to court, it lasts until Powell's term is up anyway, and just creates a lot of unnecessary distraction and maybe pushes Fed people to be more stubborn about cutting interest rates. So I think it's just going to be where it is. And you noticed yesterday the president came out and said he was honored to visit the Fed, and the Fed came out this morning and posted that they were honored to host him. So maybe both sides are trying to back off a little bit.
Does he play golf? Do Grateful Dead fans play golf? I mean, is there a chance these two guys become friends? I'm probably pushing it here because I'm trying to figure out what the point is then, Michael. If it's not about firing him, he said he wasn't going to be fired or didn't rise to the level of a firing offense. Is it just pressure to cut interest rates just going to keep looming over him until he does?
I think what you've got is two things going on, and both of them are sort of related in their in the intended effect. One is Donald Trump is a master of squirrels. If you have a dog and you yell squirrel, dog goes running off in the opposite direction. You've got the Epstein files out there, and the president would love to change the subject. And so I think that's part of what's been going on. He was not originally scheduled to go to the Fed yesterday. Other members of the administration were going along with Senator Scott, et cetera. And then they decided at the last minute he was going to show up. So I think that's part of it. But the main part, and what's been driving this for a while, is the economy is doing well, but there are signs of weakening. We have some slower growth. We have signs of inflation starting to pass through from tariffs into some sectors of the economy, and more of that is expected. The labor market has cooled off some. And so if things do go south for the administration, he's looking for somebody to blame. And he's setting it up like, I told you that Jay Powell was too slow. It's not my tariffs, it's the Fed. And I think those are the kind of the reasons that we're seeing this go on.
Reading between the lines with Michael McKee today, we've got an important headline. Breaking news on something I was just talking about, Michael. I'm sure you've spent some time in your day at Fenway Park. Aramark workers, the concessions workers at Fenway Park have just decided to strike. They're going on strike ahead of a homestand against the Dodgers this weekend. So you're going to presumably go to Fenway Park and sit on your hands when it's 100 degrees out, not be able to order a beer or a hot dog? Is that going to come out in the data, Michael?
It won't come out in the data, but it wouldn't be a good look. It'd be interesting to see if the Aramark workers picket, whether fans will cross the picket line. I think if you paid $100 for a ticket, you might be incented to do that. But the Sox are going to have to come up with a number of additional workers to pump out those Fenway Franks and some of that Goose Island Ale.
Hot dogs here. It's going to be a soupy weekend on Lansdowne Street. I want to go back to a moment at the Fed yesterday, Michael McKee, in which President Trump brought out the prop. He had a piece of paper in his pocket, and this was some sort of receipt showing expenditures at the Fed. And the numbers did not match up with what Jay Powell had seen before. Let's bring everyone back to that moment.
I know Fed at about 3.1 as well. 3.1.
Maybe we don't have that, do we? All right, I guess we don't. Anyway, he said that it was 3.1 billion overrun, as opposed to 2.5 billion. Michael, he was including another building that wasn't actually part of this project. That leads me to believe that the president may not be done with some of the allegations here against the Federal Reserve if he's willing to put up a number with no basis in fact in front of the media like that yesterday, with the Fed chair standing right next to him.
You never know with Donald Trump. We have been told over the course of his couple presidencies that he's not somebody who spends a lot of time absorbing the details of an issue or learning much about it. And he certainly was taken by surprise when his numbers were challenged by the Fed chair. So maybe the White House didn't do its homework correctly. Basically, the Martin building, which is the second Fed building, was remodeled first. And 5 years ago, as they pointed out, and somebody put that into the total for the remodeling of the Eccles building, which is the one on Constitution Avenue, and the East building, which didn't belong to the Fed, but they have now taken over so they can consolidate staff. So it was kind of a staffing. In previous presidencies, we'd call it a staffing error.
Mm-hmm. Michael McKee, Bloomberg International Economics and Policy Correspondent. You're going to be down next week for the meeting, right?
Yeah, and you're telling me I can pretty much park anywhere, right?
Yeah, I mean, right in front of the building. It'll be great.
Excellent.
See you then.
All right.
Live from New York, the great Michael McKee with us, Professor McKee on Balance of Power. An hour from now, we have a special conversation for you when Lael Brainerd joins us. Following her op-ed in the Washington Post, the real reason Trump wants to fire the Fed chair. And by the way, it's nothing you haven't already heard on this program. Peter Navarro said it himself. It's about debt management. Lael Brainerd will talk about the potential risks that come along with that strategy. We'll have a lot more straight ahead here on Balance of Power. Lisa Camuso-Miller is going to join us, the former comms director of the RNC, veteran of the House Speaker's office, as lawmakers fly home for the August recess. It's open season on town halls, and we'll have a lot more on that next year on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We got a Friday rally underway. Right now, the S&P 500 index very close to session highs, up 19, 63.83 where we stand on the S&P. That is a gain right now of 0.3%. Dow Industrials up 81 for the Dow, a gain of just about 0.2%, while the Nasdaq Composite Index higher now by 75, up by about 0.4%. The 10-year, 4.39%. The 2-year, 3.91%. Spot gold down $38 the ounce at $33.30, down 1.1%. West Texas Intermediate crude down 1.1%, $65.29 a barrel. And Bitcoin right now at $115,600. Bitcoin down 2.7%. Meta Platforms, which reports earnings next week, says it will stop selling political and issue-focused ads in the European Union, citing new regulations that the company believes creates an untenable level of complexity and legal uncertainty. Again, Meta Platforms up now by 0.4%. And Joe Matthew in Boston, your old stomping ground at Fenway specifically. You can't get your beer here. Aramark workers at Fenway Park have begun their strike. And by the way, it is the first strike at Fenway in the ballpark's 113-year history. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Hot dogs, yeah. Charlie, I don't know. I was thinking we were going to meet for the Dodgers game this weekend. That's going to be hot. It's 100 and something degrees in Boston today. At least, it feels like 100 something degrees. They call it the best bar in Boston, Charlie, Fenway Park. I don't know how you do it without the taps on.
Without a doubt. We'll see you there. Big Green Monster, you're buying.
Okay, that's a deal.
If we can get him.
He's live from New York.
Exactly.
Well done. See, I know Charlie knows Boston. If you're with us on 92.9, we see you and feel you, and maybe we'll smell you later after a weekend, I guess, without concessions workers at Fenway Park. The Aramark folks have gone on strike as everybody heads home here. They say D.C., we just saw this yesterday. We've got the worst traffic in the country now, topping Los Angeles. How's that for a superlative? The worst traffic in the nation, dethroning L.A., for its famous congestion. This is according to a Consumer Affairs ranking. The average daily commute is the longest in the United States at over 33 minutes. And by the way, most people I know around here are doing well over an hour. And you can thank everybody coming back to the office, private sector organizations following the feds to get everybody back to work. But this weekend and for the next month, not so much, as House lawmakers head home with a whole schedule full of town halls waiting for them, fundraisers and so forth. And they're going to be talking about the big, beautiful bill. Unless, of course, George Santos, you're going to prison today. I don't know if you heard about this, but it's real. The curtain falls, the spotlight dims, and the rhinestones are packed. Yeah, there it is. Good job, Cece. George Santos on X saying goodnight, Irene. He reports to prison today to begin a 7-year sentence. Did a whole bunch of interviews on the way out. I'm guessing it won't be too long before the jailhouse interview takes place. Lisa Camuso Miller has probably known a couple of lawmakers who took that path, but that's not why she's here tonight. The former RNC Communications Director, Republican strategist, and host of the Friday Reporter podcast is with us right now to sort of get a sense of what is waiting for lawmakers in the month of August. Lisa, it's great to see you. I hope you're ready for the rest of this summer, because this is when it gets real in Washington, right? Lawmakers are going to start holding town halls, and they have got a pretty tough argument to make, according to the polling we saw this morning in the Wall Street Journal. Forget Donald Trump's approval rating right now. Look at the polling on the approval for the big, beautiful bill. 42% think it's a good thing. 52%, a majority of Americans, disapprove. This is the Wall Street Journal once again. There you can see it on screen if you're with us on YouTube. Lisa, how do you sell that message in a town hall in the weeks ahead?
Joe, I think each and every one of these members that's going home is probably Republican or Democrat. It's a bipartisan, difficult time to talk about these issues, because the big, beautiful bill, as they're calling it, was supposed to really answer some of those concerns that voters had when they went to the polls last November. And now it's not just a game of getting the work done. It's a messaging game. It's become a back and forth. There's been some question about what will happen to rural hospitals. There's been some question about what will happen to access to care, access to resources. And so I think that this is going to be a really big challenge, not only for Republicans who supported and enacted this legislation, but for Democrats who were there in Washington who couldn't stop it from happening. And so regardless of who's in charge, it's a very thin margin. It's a very thin amount of power that each party has in Washington today. And the town halls are going to be spicier than ever before. And I think that that really makes it very difficult. And it's going to make it that much more discouraging for them to come back in August to get appropriations done and all the other work that has to happen before the end of the year.
So bring me inside this whole process here. You're a lawmaker, you head home, you're on the phone with your chief or whomever. Hey, we've got a schedule. You're talking to the home office. You're going to do 2 town halls. Do you have any control over who attends these? Because Republicans always tell us, well, it's Democratic activists showing up. They hated us to begin with, and they didn't like this bill. But who are the actual voters showing up at these events, and how authentic is their message?
Well, you know, Joe, it depends on the district. Every district handles it differently. But the truth of it is that once you're elected, you are the elected for the entire district, regardless of what party affiliation you have. I mean, party affiliation is about getting elected. But once you're in place, you are supposed to govern for all in your district. And I suspect that the ones that show up at these town halls are the ones that are the most irritated and concerned about what the direction is that's happening not only in the district, but in Washington, D.C. And so, yes, of course, there's going to be back and forth about whether or not it's filled with Democrat operatives and Democrat mischief. But the truth of it is that regardless of your party, people are not pleased with the way things are going in Washington, D.C. They want to see action. They want people to stop talking about things that don't seem to affect their lives all that much. And I'm referring to that list of bad actors as we talk about that Epstein disgusting and deplorable activities on that side of the message meter. There's so much to talk about, and it makes it that much harder for the members who then have to stand before their constituents, Republicans, Democrats, or otherwise, and talk about what it is they're doing in Washington without getting sort of mired down in the political back and forth that happens inevitably every time we have a town hall.
Well, you went there, so let's talk about Jeffrey Epstein. I'm guessing that this is going to come up at all of these town hall meetings as well. And while we're talking about polling, we had new numbers from Ipsos yesterday that Cliff Young brought us here. Take a look at this. Approval of the handling of the Epstein files, the way the administration is handling them. GOP support is only at 35%. Democratic support, 4%. Everyone else is at 17%. The president couldn't get out of the White House this morning without being faced with at least a half dozen questions about Epstein. He didn't really answer any of them. All he did was talk about how Todd Blanche is a great lawyer and how what you really ought to be looking at is Bill Clinton and the Democrats who are on this supposed list. Lisa, what should lawmakers be saying about this?
I think lawmakers, regardless of their party, ought to say that this is a disgusting and deplorable situation, what had happened under Jeffrey Epstein and his reign of terror and everything else and anyone else that was involved in it. But it deserves a full-throated investigation. It should not be treated as politics because there were real human beings involved and hurt in what happened here. And the president and everyone else that has anything to say about it ought to act swiftly and act responsibly to get to the bottom of the issues that are at hand here. Make sure that those that are guilty are called to action and that we can get back to the issues that the American people care about. Because, Joe, I think some people will ask questions about Jeffrey Epstein in the town halls. But more importantly, the American people want their real issues, their home inside the house budget issues addressed so that they can get back to feeling like the American government is doing what it's supposed to do to serve them well. And that's the big distraction. That's the one thing that I think is the greatest disadvantage to what's happening today, is that we're distracted by a horrible thing that happened. I think everyone agrees that Jeffrey Epstein and the reign of hideous things that happened with him and all the people involved ought to be addressed. But we can walk and chew gum in Washington, D.C. Yeah, it's true.
Yeah, I don't know what you thought about this. I don't know if other speakers would have acted the same way, but there are great worries that this is actually going to keep us from getting a budget together with the limited time that they'll have when they get back between, Labor Day and the end of September. We're going to be dealing with this. And as lawmakers get home, it's not just voters who will be bringing it up, Lisa. The DNC, as I'm sure you saw, is making ads to run the rest of the summer about Jeffrey Epstein in a dozen Republican-held House districts. It's going to coincide with the recess, according to Axios, and will run. These videos are online. They'll run right before you see something on a right-wing YouTube channel. They're also going to be on some Fox videos as well. I don't know if these are necessary, though, because people, from what we're hearing, are calling Republican lawmakers' offices all day long demanding the release of these documents. What do the ads do?
I think there's a real risk in those ads, Joe. I really hope that the Democrats are thoughtful enough, as someone who's an operative, who sees all the contours of these kinds of issues. I really do hope that they're mindful that there is a danger in overstepping and a danger in pushing this too much to be too political, because it very well could backsplash on them in a way that's not helpful. Yes, people want to know more. They want answers to this Jeffrey Epstein issue, and in general, they'd like to see the list. What they really want is they want a scalp. And I think Democrats think that there's an opportunity here to inflict harm on the president. And I think that Republicans see this as a distraction from Republicans in Congress, specifically the Speaker himself, saw this as something that was standing in the way of progress. So set aside politics. It was definitely holding the Congress away from the possibility of advancing legislation and getting work done. It's another distraction and another political football. It ought not to be a political football. It ought to be addressed, and questions ought to be answered. But the back and the forth, I think, is just another example of how the American people look at Washington and think we're not serious because we're letting all of these other things get in the way of them doing their job.
Can't argue with that. The president today, when asked about it, Lisa, said he has not considered granting a pardon to Ghislaine Maxwell. What would happen if he did?
Oh, I think people would probably assume that that's just another example of how the president is somehow entangled in all of this nonsense that's gone on. I mean, it seems to me the way his handling has been of this has been one that appears to be a guilty behavior. His behavior is concerning to people. And the fact that he continues to talk about it continues to make people wonder what role he has had in any of this. But more importantly, he's doing everything he can to distract from that by pointing at others that were involved, by pointing at other issues, by raising up other. There has been a huge amount of distraction in terms of the news every single day coming from the White House. But Joe, you and I both know that sooner or later, there's either going to be someone to answer for this, or it's going to be just another thing where either we overreact or we do nothing in Washington, D.C. And that's always the criticism of how we do work here in the Capitol.
Unbelievable. I feel like there'd be a riot in Lafayette Square if that pardon came along. Interesting, when he was asked about potentially pardoning P. Diddy, he said he might think about it. This one, not so much. Lisa, it's great to see you. We're overdue. Lisa Camuso-Miller, Friday Reporter podcast, former RNC communications director. Look for her on LinkedIn. She makes magic out of that platform. We'll have our panel straight ahead, only on Bloomberg.
Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all pushing higher right now, trading at or near the best level of the day on the S&P at 63.87. Higher now by 23 points. That is a gain of 0.4%. Dow Industrials up 94 right now, with the Dow gaining 0.2%. NASDAQ up 86 for the NASDAQ Composite Index, an advance of 0.4%. The NASDAQ 100 Index also up by 0.4%. Our Mag 7 Index now advancing 1%. Tesla, part of that index, up 5.5%. You recall yesterday, Tesla plunged by 8.2%. The 10-year, 4.38%. Spot gold at $33.27 the ounce. Gold is tumbling 1.2% right now. West Texas Intermediate crude down 1%, $65.35 a barrel on WTI. Bitcoin below $116,000. Bitcoin tumbling by 2.5%. A big bank deal and shares of both companies are tumbling. Pinnacle Financial and Synovus Financial lower after the companies agreed to an all-stock transaction valued at $8.6 billion that will combine two sizable banks in the attractive southeastern market. Shares of Pinnacle, they're down by 12.3%. Synovus down by 12.5%. Again, recapping here, stocks higher, S&P up 23, gain there of 0.4%. Balance of power continues. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie, many thanks. Live from New York, Charlie Pellet will have more on the markets coming up at the top of the hour here as we follow the bead on a Friday. As we've told you, President Trump is in the air today. He's on his way to Scotland for a weekend of golf. We were told he's going to be opening a new golf club there, apparently visiting the old one, but also dealing with trade. We knew there would be a meeting with the Prime Minister of the UK, Keir Starmer, but now none other than Ursula von der Leyen posting on Twitter, following a good call with POTUS. I guess they got on the line today. We have agreed to meet in Scotland on Sunday to discuss transatlantic trade relations and how we can keep them strong. Of course, the elusive trade deal with the EU is something that we've talked a lot about this week, with the likes of Peter Navarro, Howard Lutnick, Scott Bessent, knowing that this deal struck with Japan could be on the eve of something even bigger with the European Union. It hasn't happened yet. Apparently this weekend we might see some progress here. But we're also watching what's happening in the Middle East. And I'll tell you what, between everything with the big, beautiful bill, the rescissions, the pressure on Powell, the trade talks, we haven't had a chance to talk about what is happening in Gaza. And there is news. The president was talking about it in the driveway this morning. As the U.S. and Israel withdraw their negotiating teams, they're pulling out. They're leaving the table in Qatar. Having spent weeks and weeks talking about a ceasefire, the president, remember, not unlike Joe Biden, just a couple of weeks ago said there was a deal. After Benjamin Netanyahu came to town, 60-day ceasefire, remember? Not so much now. Israel and Hamas agree on the broad outlines of that deal, but disagree on everything else, and especially the extent to which Israeli forces should be pulling back. Steve Witkoff, the president's special envoy, says Hamas does not appear to be coordinated or acting in good faith. There are questions about whether Benjamin Netanyahu is as well. President Trump was asked about that this morning on his way out of town. Listen.
I'd speak to him, but I can't tell you what I spoke to him about. But it was sort of disappointing, although I told you. I told you, when you get down to those last 20 hostages, you get down to that last 10 or 20, it's going to be very hard for Hamas to make a deal because they lose their shield, they lose their cover. We got a lot of them out, a lot of them. We took a lot of bodies out, too.
He went on to say, we're down to the final hostages. And they know, saying Hamas, they know what happens after you get the final hostages. Let's assemble our panel. Rick and Jeannie are both with us on the Friday edition. Bloomberg Politics contributors Jeannie Shanzano, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress, and Rick Davis, Republican strategist and partner at Stone Court Capital. Jeannie, what does the president mean when he says they know what happens after you get the final hostages?
Yeah, this has been the sticking point, or one of the many sticking points is, how permanent is this ceasefire? And I think the president is right here when he says Hamas knows that their leverage, which is, horrific to say, are these hostages. Once they move forward with that release, what leverage do they have left? So Hamas is asking for some kind of support from the U.S. and assurances from the U.S. and Israel that any ceasefire is going to be permanent. And Israel has not been willing to agree to that. And so they have been at this, this really standoff for some time on that big issue, let alone the other issues. And you mentioned one of them, which are things like in the 60-day first period, how far back does Israel pull? So, but the standoff, the big one is this ceasefire permanent, or in 2 months, once the hostages are home, does Israel march right back into Gaza? And of course, Hamas is saying they can't accept that.
President said today, Rick Davis, Hamas didn't really want to make a deal. I think they want to die. It got to the point, he said, where you have to finish the job. If this opportunity didn't present even a 60-day ceasefire, when will it?
Look, I don't know if these parties can actually finish the deal. It's not like previous ceasefires have been that great for Hamas, right? I mean, if they think for some reason that it's going to get worse if they give up these hostages, I think they're just fooling themselves. The idea that they have any leverage on anything at this stage, the entire country is entering a state of starvation, and they're lording over it as if it's some kind of a paradise. Now's the time to drop all these pretenses. It's been almost 2 years that these hostages that remain have been in the captivity of Hamas. And I think part of what the Israelis are pointing out is that there's nobody in charge in Hamas anymore. Either they're dead or they've run for cover. And so even delivering these hostages may be a difficult task because they don't even know where they are. So, I mean, it's a mess. And I'm not surprised that negotiations are broken up because you have parties who are absolutely captivated in their own sort of culture and scenarios that aren't reality. And the reality is, if something isn't done soon, it isn't going to matter to the Hamas what's going on because they're going to be in a famine situation where most of their population of 2 million people are into starvation.
Here's what we know, by the way, in terms of numbers. 50 hostages, 50, are still in Gaza. Roughly 20 are thought by Israel to still be alive. As Rick said, that's where we are 2 years later. Now, in this time, more than 59,000 Palestinians have been killed in the war that is, according to the Hamas-run health ministry, which some people have called into question, but that's the closest thing we have to a real number. Israel has lost more than 400 troops in combat in Gaza. I don't know how you end this, Jeannie, before this gets much worse. Rick pointed to the famine, the starvation that's happening in Gaza. Many more people could die even without combat around them.
That's right. And we've talked about the hostages and we need them to come out. And you mentioned the 60,000 people who have been killed in Gaza, the 400 Israeli troops. And what we are hearing in the last several weeks is this famine. And there are dozens of people, mostly women and children and elderly people, dying of starvation every day. Because when you have an active war zone, it is difficult to get humanitarian aid in. And many humanitarian groups are warning that those numbers are going to increase dramatically. That's why you have President Macron saying that in September, he will come to the UN and he will recognize, France will recognize the Palestinian state, making it the first G7 country to do so. So I want to be clear here. It is not just Hamas on its back feet here. It is also Israel. They are quickly 2 years into this war because of the way they have executed this war, losing the support of countries from around the world, even close allies. all except for the United States. That includes Germany, France, Australia, Canada. I mean, the list goes on and on. People are demanding that they get humanitarian aid in here. And this group that has been set up to do that has been woefully ineffective, and people are dying on the ground. So we can't just talk about the hostages and those people killed. It's all horrific. The people who are alive still barely, that are starving to death because humanitarian aid is not in.
And a lot of them little children. Rick, I'd love your thoughts on what Jeannie mentioned about Emmanuel Macron. This decision to acknowledge the Palestinian state before the UN. President Trump was asked about that today in the driveway of the White House. He said, quote, "Here's the good news. What he says doesn't matter," unquote. Would that move by way of the UN add pressure to this process at all?
Yeah, I don't know how much this is going to spur UN action. UN has been impotent to influence the outcome of what's going on in Gaza. We have to remember that Macron is the president of a country with almost a third of its population being Muslim, the highest per capita Muslim population in Europe. So he has a particular domestic demand that tends to pull him in certain directions on this issue specifically. And so whether it's just good local politics or actually trying to create momentum on a global scale, it's kind of hard to tell. But it's not solving the problem on the ground. And the reality is we may be running out of potential solutions because, as Cindy McCain, head of the World Food Program, has pointed out, global relief agencies have not had access to Gaza for some time, and those private ones aren't getting the job done. And so I think this is almost going to get to the point where none of these issues are going to be relevant other than being able to try to feed a starving population.
How do you get the food in, Jeannie? I mean, this has been confounding the effort here since long before Donald Trump was in office. You remember the attempt to build a pier and how well that went. You've got relief workers who are being fired on. Many of them have stopped showing up because of this. And now, of course, with Israel controlling the access points, there are real questions about whether this can be solved.
There are, and just this week, Israel moving people into Gazans into smaller and smaller areas. And the way that this war is being executed has been Israel's decision to make their very small checkpoints. And when you have an active war zone and you have millions of starving people, large groups of those people will try to show up at those points, those distribution points. And that's where you see this chaos. So we have the violence, the chaos, and the starvation. And, you know, I do think it's important to say that you also, on top of that, this is not good domestic policy for Israel. They are losing support of people from around the world in startling numbers over the last 2 years. You have scholars who have worked carefully on the Holocaust and genocide saying this is a genocide. And so Israel, the right-wing government, is what people are frustrated with. And of course, you can't get in and help these starving people until you see some form of a ceasefire. So hopefully that is what we're seeing. There is a proposal on the table, but the ceasefire needs to be permanent, not just temporary. And that leaves the United States as really the only country who could possibly push Benjamin Netanyahu and the right-wing government in that direction.
The images we're showing on YouTube say everything. There's thousands of civilians walking miles with bags of rice trying to feed their families. Rick, we're talking about the element here involving Emmanuel Macron, France, and a Palestinian state, the introduction of this effort at the UN. Does this impact or color in any way trade talks between the U.S. and the EU that will kick off this weekend?
Probably not. You know, this is a pretty isolated foreign policy issue. And even Donald Trump has had frustrations with Israel when it came to their handling of the humanitarian crisis that exists in Gaza. So at the end of the day, I think the EU trade negotiations are pretty mature at this point. And I doubt if President Trump is going to take a side trip to Paris to sign a deal, Maybe the only motivation to go to Brussels. Why anybody would go to Brussels confounds me. But yeah, I don't think this is going to get in the way of a deal. But that's assuming that there's a deal to be had anytime soon right now.
Right. Yeah, we'll see about that as the president is now set to meet in Scotland on Sunday with Ursula von der Leyen. We'll have more on that as we make our way through the day. Rick Davis and Jeannie Shanzano, great conversation. Will be back with us in our second hour, as always, here on Balance of Power as we welcome our global television audience to the conversation. We'll bring Tyler Kendall in and an important conversation that you'll hear moments from now with Lael Brainerd, just a day after President Trump put on the hard hat with Jay Powell. That's all ahead on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump says it was a very good meeting on interest rates. Welcome to the Friday edition as the president leaves a storm of news behind in Washington today, flying to Scotland for a weekend of golf and trade talks, it turns out. But the pressure on Powell continues. I'm Joe Matthew alongside Tyler Kendall. Live in Washington. And Tyler, we're going to explore ahead what's motivating the president here to continue this campaign in a special conversation with Lael Brainerd.
Right, exactly. And we heard President Trump yesterday saying that there's, quote, no tension with Jerome Powell. He's going to let him serve out his term, but also gave him a little tap, a little punch on the arm there when he mentioned wanting to lower interest rates next week when the FOMC meets.
It manifested itself physically at one point as the two showed up with hard hats. But of course, he talked about it again in the driveway at the White House, Tyler. He kept saying again that he thinks Powell will do the right thing. He said they had a great talk on interest rates. Powell told him that the economy was strong. It sounds like he's holding out hopes for the Fed meeting next week, and I'm not sure anybody else is.
It certainly does. It's something that, of course, we're going to be watching closely, as well as the markets are watching, which is where we start now with Bloomberg's Charlie Pellet reporting from World Headquarters in New York. Hey, Charlie.
Thank you very much, and good day from steamy New York. We have got the Dow, the S&P, NASDAQ all advancing. S&P 500 index up 24 points right now. We are trading at a record 63.88. Gain there of just about 0.4%. Stocks rising with the temperature. We've got the Dow up 117, up by about 0.3%. A NASDAQ up 79 for the NASDAQ Composite Index, an advance right now of just about 0.4%. Our Mag 7 index climbing by 0.9%. Tesla part of that index, of course. It is up by 5%. I mentioned Tesla because yesterday it sold off by 8.2%. Your 10-year 4.38%. Your 2-year 3.91%. Spot gold at $33.30 the ounce, down 1.1%, while West Texas Intermediate crude oil is now lower by 1%. WTI 65.39 a barrel on WTI. S&P 500 index, by the way, advancing every single day this week, right now on track for a gain of just about 1.3% on the week. The stocks move higher, a notable exception, Intel. After earnings, Intel is plunging by 9.3%. CEO Lip-Bu Tan is sparking concerns that he's more focused on cost-cutting than restoring the chipmaker's technological edge. Again, Intel down now by 9.2%. Recapping, S&P 500 index is advancing up by about 0.4%. And in Boston, specifically at Fenway, concession workers on strike. Their contract with vendor Aramark expired at the end of last year. The strike took effect today. First pitch for the Red Sox. Dodgers game 7:10 tonight in Boston. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Tyler Kendall.
All right, Charlie Pellet from World Headquarters in New York, thank you so much. I know Joe, as a former Bostonian, is paying close attention to that last story there. But we here right now are tracking a few different threads as we head into the weekend. President Trump heading over to Scotland, a headline breaking on the Bloomberg terminal last hour that he's going to meet with the EU's Ursula von der Leyen to continue trade talks. But another big focus, and definitely the focus of yesterday, was President Trump's recent comments about the Fed chair, Jerome Powell. And he was asked about his visit to the Fed's renovation site yesterday as he headed out on his trip. We want to bring you part of what he said earlier.
We had a very good meeting. Forgetting about the building, that's out of control and all that. But I think we had a very good meeting on interest rates. And he said to me, now I don't know if he's going to say this on Thursday or whenever he speaks, but he said to me very strongly, the country is doing well. He said, congratulations, the country is doing really well. And I got that to mean that I think he's going to start recommending lower rates.
Hot out there today in the nation's capital. It's 90-something degrees right now. It's supposed to feel like 107 later, so maybe his timing was right, as opposed to those going to Fenway Park this weekend. That ought to be something, although I guess they're making some concessions to make that work. Tyler Kendall. The president said one thing yesterday. By the way, we're going to be talking about this with Lael Brainerd in a moment, and I can't wait to hear her thoughts on this, having written an op-ed in the Washington Post about this very matter. Wendy Benjaminson, the president, yesterday said, I think he's going to start recommending lower rates because of that conversation. That is a continuation of the pressure campaign.
It absolutely is a continuation of the pressure, just when we thought after that meeting that the pressure had eased up a bit, right? Because he toured the construction site, which is something former developer Donald Trump loves to do. He put on a hard hat, he walked through the construction site, and he seemed to deem it under control. Yeah. Slapped Powell on the back, made a joke about interest rates. Powell stunningly fact-checked him publicly in real time, seemed to have gotten away with it. And markets reacted positively to that whole scene, thinking, well, now Powell has his job. Now, this morning's comments could mean that Trump still feels very confident that now Powell sees things the way he does. But come Thursday, if those interest rates don't come down, I think he'll be back to being what Donald Trump calls a numbskull and too late and a disappointment and all that. And this nice little bromance that brewed up yesterday will be over again.
Well, let's look at this broader picture, because we have a great story on the Bloomberg terminal this morning that I know that you edited, Wendy, about this idea of how Trump's strategy when it comes to pressuring the Fed is about flooding the zone. Exactly. Can you talk to us what led to us to this point? Because this originally started with the administration, right, pointing to economic data, for example. And now we've taken a turn and there's this highlight on the Fed's recent renovations.
Right. And Nancy Cook wrote this brilliant story about this. And it is one of Trump's absolute techniques that he uses for a lot of different things. We see it with him trying to distract people from the Jeffrey Epstein story. What he does is something called Steve Bannon coined flooding the zone. So Powell, isn't lowering interest rates. The Fed is renovating its building. This is wrong. He's a bad person. He just attacks from so many angles that it's impossible for the target to respond to one thing because another thing pops up over here and something else pops up over there. And that's what this renovation scandal, and I'm doing air quotes, was all about, because there was no scandal. It's a building built in the 1930s. It was filled with asbestos and lead. It hadn't been renovated since the 1930s. Yeah. And, it needed a little touch up. And I do think Trump sort of got that when he walked through yesterday.
He didn't find Versailles.
He didn't find Versailles.
I guess when he got there, as Russ Vought suggested. So again, is this simply about pressuring Powell to cut rates? Or does Donald Trump want him to resign? He says it's not a fireable offense. But if you make life miserable enough for someone, and I know that Jay Powell has said he's going nowhere, is that the aim here?
Right. I think he really wants the interest rates down. I don't think he cares. Okay. I mean, he appointed Jay Powell in the first place. Yes, and so at some point they saw eye to eye on things, enough for him to become the Fed chairman. And I think if Powell were to do that, then everything would be fine. If he doesn't, I also think Trump knows the blowback, not only politically but from the markets, of firing a Fed chair would be so severe that he's just going to keep needling Powell and needling him probably until his term is up in May 2026, because Powell is showing a great deal of confidence. Yeah. He doesn't need this job, right? And so he's showing a great deal of confidence and saying, this is what I think. Fire me if you will, but this is what I think is right for the economy, which the Fed chair gets to do in our country.
That's the way it works.
Yeah.
All right. Exactly. A lot to watch for here. Wendy Benjaminson, senior editor at Bloomberg, we thank you so much. And to continue this conversation, we want to bring in Lael Brainerd, former director of the National Economic Council under the Biden administration, former vice chair of the Federal Reserve, now distinguished fellow at the Georgetown Center for Financial Markets and Policies. Lael, thank you so much for joining Bloomberg. I just want to pick up on this conversation. President Trump says he's not going to fire Jerome Powell. So is this just all about trying to see lower rates next week when the FOMC meets?
There's probably a few things that are going on. One, I think it is an effort to pressure the Federal Reserve for lower rates. It's also a distraction. That was a picture for the ages yesterday. The president standing next to the chairman of the Federal Reserve wearing hard hats. Quite a story. And it also serves to find a place to have blame to the extent that the economy is not as strong as the president has said that it would be at this juncture. You heard him say that the Federal Reserve should be lowering rates, and that's the only thing standing in the way. So I think it does serve multiple purposes in terms of the storyline. But we also know that Federal Reserve chairs go down in history for actually following their mandate and not caving to political pressure. And those that do cave to political pressures tend not to be viewed very favorably in the history books.
Lael, it's great to have you with us. I want to ask you about the op-ed that you wrote Recently in the Washington Post, an opinion piece with the headline, "The Real Reason Trump Wants to Fire the Fed Chair." You say it has everything to do with debt management. The president, you're right, wants to reduce the debt service on the trillions his mega bill will add to the national debt. So now we're connecting the dots to the president's big, beautiful bill. The fact is, and you say this in your piece, they are saying it out loud. Lael Peter Navarro sat right at this desk a couple of days ago and talked about the need to lower interest rates in an effort to save $1 trillion when it comes to our debt. Is this the new mission creep? We hear a lot about mission creep in the central bank. Is this a version of that in your eyes?
Well, certainly this is the kind of diversion of the Federal Reserve from its core inflation fighting mission to supporting the administration's desire to finance this big new increase in the national debt cheaply. That is traditionally the way that central banks in other countries like Brazil or Turkey, Argentina, go awry and lose that credibility on inflation fighting. So I have to say that I was surprised to hear the president say it out loud when he says every percentage point reduction in interest rates translates into $300 billion. What he's talking about is interest payments on the national debt. And when he says, you know, if the Fed will cut by 3 percentage points down to 1 percentage point, that'll save us $1 trillion in debt service. That's what he's really referring to. And he said it quite explicitly. And economists have a term for it because it has happened so many times in history. It's called fiscal dominance, when debt management becomes more important for the central bank than fighting inflation. And what happens is you lose control of inflation, and ultimately long-term interest rates actually go up.
Well, we did actually get a different sort of answer when we posed this question to Joe Livornia, senior counselor to the Treasury Secretary Scott Bessent, about concerns when it comes to the long end of the yield curve. He joined us on Balance of Power last week. I want to play you some of his reaction and then get your reaction on the other side.
I don't see how markets are going to be worried about that. In fact, if you look at where yields are, they're lower than where they started the year. And when a lot of the people who are worried about the market selling off because of credibility and things of that sort, these are many of the same folks who back in April said the U.S. was uninvestable. And yet we had Treasury data that came out today that showed essentially record inflow into the market with Treasury demand virtually at an all-time high. So these arguments I don't think hold up to really scrutiny into the facts.
We should say that response was last week on July 17th. But Lael, I'm wondering what you make of that defense when it comes to this issue.
Well, what we did see when the markets were really reacting to news that this administration would really pressure the Federal Reserve and might fire the chair of the Federal Reserve back in April. That was the first time I think market participants really were digesting that news, and there was a lot of repositioning, as you'll recall. And what we saw is that the long end of the curve did actually go up quite a bit, and the dollar weakened. That is the kind of response that you tend to see in circumstances where central banks lose credibility on the fight against inflation, because investors demand more compensation to hold longer-term securities, sovereign securities, treasury securities, if they think that the currency is going to be weaker and inflation is going to go up. So that is just the traditional kind of market reaction. We have seen it. We certainly saw it back in April. Now, I believe markets have seen the president back down, say that he's not going to fire the Federal Reserve chair. Yesterday, he was even somewhat complimentary. And I think that's why you're not seeing those kinds of reactions right now in markets. But I do think the reaction we saw in April was a cautionary tale.
It did seem the president came fixing for a bit of a fight yesterday. Lael, I'm sure you were watching as the two wore hard hats. The president pulled a piece of paper out of his suit jacket to prove to the Fed chair that not only was the renovation at the Eccles building running over in terms of money, but more than he thought, and he added a whole new building to the list. Let's bring everybody back to the construction site. Watch and listen.
It looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed. You're including the Martin renovation. You just added in a third building is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago.
Well, I'd love him to lower interest rates, but other than that, what can I tell you?
Complete with a knock on the back there. Lael, I'm wondering, as you watched this and had a chance to digest everything that happened yesterday, does this go down as a good day for Fed independence?
Look, I think what was interesting is that the Federal Reserve had a chance to explain what was going on with their renovations. These are very old buildings. They have two buildings that really haven't been renovated, I think, since the 1930s, and one that just was renovated for the first time since the 1970s. And I thought what was interesting is that the president really came out of those discussions, really showing his long experience as a real estate developer. He talked about how hard it is to build on a former swamp and the kind of very expensive renovations that are necessary to really be secure in pushing down when there are concerns about the water table. So in a way, it was interesting to see the president getting into the complexities of the renovation. In that sense, yes, I think it was a good day just for transparency around the Federal Reserve, which is so important because the Federal Reserve has to be accountable to the public.
Well, I do want to go back to this idea of so-called mission creep that Joe had mentioned earlier. We've heard this critique from Treasury Secretary Scott Bessent, from Kevin Warsh, who we know is potentially in the running to be the next Fed chair. Do you think that it would be healthy for the Fed to conduct a review of its non-monetary policy activities? Is that something that you think would actually be a good thing for the Fed to look into, whether or not that's an external review, for example?
So I always think that the Federal Reserve benefits from being accountable and transparent to the public and particularly to Congress. I mean, it's really Congress who has oversight of the Federal Reserve, who wrote the Federal Reserve Act that governs the monetary policy and the Dodd-Frank Act that governs their responsibilities in financial stability policy. So I do think those kinds of reviews are very beneficial. And there are many mechanisms that the Federal Reserve could use to undertake such a review. The thing that would concern me, I have heard the Secretary of the Treasury saying that the administration would undertake a review, and that does raise some concerns.
Lael,
in
I'm
the
sorry we're out of time.
Sorry.
We'd love to have you come back to finish this conversation. It's wonderful to have you back on Balance of Power. Former Director, National Economic Council, former Vice Chair of the Federal Reserve, Lael Brainerd, with us live from Washington, only here on Bloomberg TV and radio.
121. On Wall Street, we do check markets all day long. Here at Bloomberg, hot Friday in July. The bull run powers on with the S&P 500 index hitting another record, up 24 right now, very close to session highs, up 0.4%, 63.87 where we stand on the S&P. We've got the Dow up 139 right now, up by about 0.3%. NASDAQ also higher by 0.3%. Our Mag 7 index is up 0.7%. Right now, Tesla shares are advancing 4%. Tesla, you recall, sold off by 8.2% yesterday. The 10-year, 4.38%. The 2-year, 3.91%. Gold down $34 the ounce, 33.33, down 1%. West Texas Intermediate crude down 0.9%, 65.44 a barrel on WTI. And Bitcoin right now down 2.2%, 116,174 on a Bitcoin. A big bank deal in the work, but shares of both companies are lower. Shares in Pinnacle Financial and Synovus Financial are tumbling after the companies agreed to an all-stock transaction valued at $8.6 billion. Pinnacle down 11.7%. Synovus shares, they are down by 12.4%. Recapping, stocks at a record with the S&P up 25 right now, up 0.4%. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Tyler Kendall.
All right, Charlie Pellet from World Headquarters in New York, we thank you so much. And right now we're waiting for President Trump to touch down in Scotland. He's heading overseas, and lawmakers in Washington are actually heading home for their August recess, where, Joe, they're going to have to answer to their constituents when it comes to perhaps the big achievement from the last few weeks, the big beautiful bill, and a lot of other things that have happened recently in Congress. And one of the things we're watching for, though, new polling out showing that despite perhaps unpopularity with that bill, President Trump's popularity has actually maintained course.
Yeah, and I mean, it's not just the bill. It's the Jeffrey Epstein scandal. It's the stuff we've been talking about regarding trade, the uncertainty over tariffs. And look at this, unchanged really since April. Slightly underwater when you consider 46%, but not bad with all of the headlines that we've been looking at. Disapprove at 52%, Tyler, and you could potentially have a much different situation for Republican lawmakers, to your point, when they get home for August recess and getting an earful at town hall meetings are about to begin.
And it was such a good point about the tariffs, too, because we have to keep in mind that President Trump really ran on his handling of the economy. Poll after poll leading up to the election kept telling us that that was really where he was significantly ahead, and that ultimately helped him clinch it. So amid so much uncertainty, as we're still waiting ahead of that August 1st deadline for some more tariff deals, these numbers are pretty remarkable.
Well, true. There is actually something really interesting that pops out of this poll. It's really important to go beyond the headline numbers sometimes. The fact of the matter is 47% in the survey rate the economy as excellent or good. That is a significant increase, an 11-point jump from April, and by far the highlight in this poll for Donald Trump. We're going to talk about this and what lawmakers are going to experience in the weeks ahead here now that recess has begun with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is, of course, our Republican strategist and partner at Stone Court Capital. Jeannie is Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. Rick, what's your thought here on how you rationalize these approval ratings? We talked about some different numbers from Ipsos yesterday against some of the vitriol that lawmakers are expecting to hear when they get home.
Yeah, obviously, Joe, the point you make about the big jump in the approval of the economy is the standout number here, right? That's what's driving the sustainability of the Donald Trump approval rating. And it's different than any other poll I've seen, including the Michigan Consumer Sentiment Index for the month, which I, of course, have to bring up, which actually is noticeably more depressing in the consumer attitudes than this poll would indicate. That being said, what's also really interesting is it's not arguable that the reconciliation bill is wildly unpopular. Most polls, including this one, give it approval at negative 60%. Immigration, even in this poll, has gone down in popularity for Donald Trump, and tariffs are wildly unpopular. So even though the three signature issues that have defined his presidency in the first 6 months are underwater with the electorate. You know, he has sustained relative stability in his job approval rating.
Well, to that point, let's talk about the power of the base, Jeannie. This poll finds that 88% of GOP voters approve of President Trump's performance, with 66% strongly approving. With numbers like these, what kind of signal does that give to Republicans ahead of the midterms? Do they have to expand the base here when you have such a high number, 88% overall approving of his performance?
They do. It's a very strong number, and I've seen it in other polls on the base as high as 90+%. So he is doing very well in his base, despite their frustration with or concerns about the Epstein issue and some of the issues that Rick just talked about, including his signature issue of immigration, where his poll numbers with his base have gone down. You know, I do think what this means is that they're going to have to focus on the midterm and shore up that base and make sure they can get them out to vote. And one thing we know is it's a lot easier to get people out to vote when they're angry rather than when they're satisfied. I will give Donald Trump credit for this. He has done already 6 months in a lot more work towards the midterm than I think most presidents do, and much more than he focused on it in the first term. I mean, he is really focused like a laser beam on this midterm election. So Democrats who think they can sort of run on a history where the other party will do worse, they have their work cut out for them, but they have some things going for them, including this dislike of everything he's done on the big, beautiful bill, the tariffs, and immigration, 3 signature issues.
I suspect we'll hear the name Jeffrey Epstein at most all of these town hall meetings. 76% of voters in this new poll in the Wall Street Journal, by the way, that includes 64% of Republicans, say they believe the Justice Department is hiding important information when it comes to Jeffrey Epstein. Rick, they're going to be Democratic trackers at all of these town halls, right? If you're a Republican lawmaker, how do you manage this?
Yeah, I think you're going to see a slew of viral videos coming out of town halls over the course of the next couple of weeks for these House members doing so, indicating a lot of anger and frustration over their inability to make public the documents they promised they would do related to the Jeffrey Epstein case. And everyone already is on defense in Washington, right? This thing has turned into a mess. But Democrats are taking advantage of it, as well they should. And there's trackers are going to be in all these swing districts. And there's, as Ricky Ricardo used to say, there's lots of splaining to do, you know, to these constituents who are wondering, hey, you promised to get this done and you haven't done it yet. So Republicans are going to have to be pretty agile on how they manage this situation at home.
Well, is that the strategy then for Democrats on the other side, Jeannie? Because yes, we have some of these pretty good talking points when it comes to Epstein and how unpopular we know the big, beautiful bill is. But we already are hearing from Republicans starting to message around the idea of a government shutdown in the fall when they get back in. Talk about the potency here of all these different threads that Democrats have the ability to pull on, but they're also up against that pretty hard messaging from the GOP.
They absolutely are, Tyler. I mean, the issue of the shutdown, we're going to really see how agile the Democrats can be. I think there is a message there for them to say that the administration, Republicans, are not willing to cross the aisle and deal with them in a fair, bipartisan manner. But it's not an easy message to make. They are starting to get out there more on the Epstein issue. I saw recently, when I was venturing through TikTok, some video of Ron DeSantis fending off some of the people talking about the Epstein case. We're going to see a lot more of that, to Rick's point. Also, we are seeing billboards around the country already talking about the big, beautiful bill and labeling the shutdown, particularly in rural communities of these hospitals and medical centers, as Trump's doing, the Republicans doing. So Democrats will try to run against the big, beautiful bill on repeal, on holding Republicans rather to the fire on Epstein, and they're going to have to watch their back on this shutdown message. So it's going to be a fun midterm, to say the least, Tyler. We're going to have a lot of fun.
And it starts now, Jeannie. And, you know, when you talk about Jeffrey Epstein, you have to mention a half dozen other stories that the White House has thrown up in the air to get us talking about other stuff. Look no further than this headline, with the Senate Judiciary Republicans John Cornyn and Lindsey Graham now calling on the Attorney General to appoint a special counsel to investigate President Barack Obama, his staff, members of his administration. The president saying in the driveway today that the Supreme Court ruling on presidential immunity probably means that Obama's going to be fine. Everybody else, not so much. Is this the kind of overreach Democrats are hoping for?
It absolutely, you know, this puts the Republicans in a difficult situation. They don't much like special counsels, as we can remember. And when Laura Loomer was calling for one in the Epstein case, they shied away from that. So, yeah, they're going to have a difficult time then calling for just certain special counsels and not others, and getting over their dislike of special counsels to begin with. So, and by the way, Donald Trump is right. He is protected as well as Barack Obama when it comes to immunity.
Well, Rick, just in our final couple minutes here, I'd love your perspective on this too. Is this going to be too far of a push when it comes for Republicans? Could this backfire?
Yeah, I really don't get it. We're kind of all falling into this, you know, sort of conspiracy theory trap. And that stuff's great, you know, sitting around the fire in the winter when you got nothing else to do but drink whiskey and talk about, you know, conspiracy theories. But, like, you know, arguably the polling we were just talking about indicates that Donald Trump's got a little bit of wind at his back. Assuming he can get these tariffs done, immigration is now down to 0 on the border, and the economy seems to be starting to percolate along. I mean, certainly a record day on the markets today. Why in the world would you distract anybody from that message set? I mean, like, it's like the administration is going out of their way to distract people from what's really important to them. These conspiracy theories are only important to the core base of the MAGA movement that are going to do nothing but vote for Donald Trump no matter how many times he runs for president. And so, like, you know, there is indications that independents are starting to get a little fed up with this stuff, and they've got to focus on those guys if they want to have a Republican Congress in 2027.
Wow. We've just got a minute left here, Jeannie, as you consider the options ahead here for President Trump. He's going to be meeting with the Europeans on Sunday. To Rick's point, if he can land a deal with the EU, does that approval rating get back above water, over 50, in his first year in office?
I don't know if the EU will be enough, but it's certainly a step in the right direction. I think China is going to be critically important. And Joe, I can't get over Rick talking about winter fires and whiskey. So I'm having a hard time answering your question as I think about these days and Rick around the fire. But yeah, it would help, but I don't think it'll change it completely.
All right, our political panel today, Rick Davis and Jeannie Shanzano, both Bloomberg Politics contributors. We thank you both, and stick with us. We're going to talk more about the future of the Israel-Hamas conflict next on Balance of Power on Bloomberg TV and radio.
140 on Wall Street. We do check markets all day long here at Bloomberg. The stock bull run powers on. Best level of the day on this Friday. The S&P this week has been up every single day. Right now looking at a gain of another 29 points at a record 63.92 on the S&P 500 index as we head into the weekend, a hot weekend for a lot of people. S&P right now up 0.5%. We've got the Dow up 182, up by just about 0.4%. The Nasdaq Composite Index also advancing up 82, up 0.4%. But again, the S&P trading at a record right now. The 10-year 4.38%, with the 2-year that's currently yielding 3.91%. The 30-year 4.92%. Gold is down $34 the ounce. Spot gold down 1%, $33.34 the ounce. West Texas Intermediate crude down 1.4%, $65.13 a barrel on WTI. And Bitcoin holding just above $116,000. Bitcoin now is down by 2.2%. Charter Communication shares are plunging after the company reported it lost more internet customers than expected during the second quarter amid increased pressure from mobile companies, 5G, and fiber home internet offerings. Shares of Charter Communications down now by just about 18%. The FCC has approved Paramount Global's merger with Skydance Media after the Trump administration extracted concessions on the news and entertainment company's political coverage and diversity practices. Shares of Paramount Global, PIARA on the ticker, down now by just about 2%. The other stock we continue to monitor, Intel, after earnings. It is plunging by 9.5%. CEO Lip Bhutan sparking concerns that he is more focused on cost-cutting than restoring the chipmaker's technological edge. As part of the company's second quarter report, Tan said the company will cancel some factory projects and take a more conservative approach to future spending. Tan called the investments begun under his predecessor, Pat Gelsinger, excessive and unwise. Again, Intel shares lower right now. Intel down by 9.5%. Also keeping an eye on a bank deal. Shares in Pinnacle Financial and Synovus Financial are tumbling after the companies agreed to an all-stock deal valued at $8.6 billion that will combine two sizable banks in the southeastern market. Right now, we do have shares of Pinnacle down by 11%, Synovus down 12%. That is a Bloomberg Business Flash.
All right, Charlie Pellet, many thanks. Live from World Headquarters in New York, watching Wall Street for us here on the fastest show in politics. I'm Joe Matthew, alongside Tyler Kendall in Washington. Thanks for joining us on Bloomberg TV and radio. As we turn to an important story that has been underreported this week with the storm of news coming out of Washington, everything from Jeffrey Epstein to pressure on Jay Powell, uncertainty over tariffs. Tyler, it's kind of hard to get noticed sometimes in a 24-hour news cycle like this, but we want to turn to what's happening abroad with some pretty important stuff happening in the Middle East.
Right, a big development that the Gaza ceasefire talks were essentially dealt a new blow yesterday. We saw the U.S. and Israel pull out their negotiating teams, and we had heard from President Trump that a deal was going to be imminent, so this did come as a surprise. They've pulled off the table in Qatar. The president was asked about it this morning as he left the White House on his way to Scotland for why and what comes next.
I'd speak to him, but I can't tell you what I spoke to him about. But it was sort of disappointing, although I told you. I mean, I told you. When you get down to those last 20 hostages, you get down to that last 10 or 20, it's going to be very hard for Hamas to make a deal because they lose their shield, they lose their cover. We got a lot of them out, a lot of them. We took a lot of bodies out, too.
He went on to say that Hamas didn't really want to make a deal. I think they want to die. That's a direct quote as we bring in Hagar Shamali, the former director for Syria and Lebanon on the National Security Council in the Obama administration. She's CEO and founder of Greenwich Media Strategies. Hagar, it's great to see you as always. Welcome back to Bloomberg TV and radio. Some pretty stark comments coming from the president earlier today. He says, as you just heard, we're down to the final hostages, and they know, referring to Hamas, what happens after you get the final hostages, suggesting, of course, that they lose leverage here. Hagar, how significant is this latest development?
That's right. That's President Trump really telling it like it is. You know, he's not sugarcoating it at all. It is a significant development because there was real hope that this round ceasefire talks would work. That's why Steve Witkoff went to Rome and then Doha. That's why Ron Dermer was involved. And Steve Witkoff himself said he wasn't even going to participate or travel if they weren't actually going to be serious. But things started to look a little bit hairy earlier this week when Hamas responded initially to this latest ceasefire proposal with demands apparently that were so absurd that the Egyptians and Qataris told Hamas to go back and come back with new demands because they weren't even going to present them to the Israelis. And so from the beginning we see that, but it's, Trump put it very succinctly, and the fact is that Hamas is standing on its last leg, and there's a pro and a con with that when you're talking about negotiations, because on one hand, they want to survive, and the only bargaining chip they have left are the remaining hostages. So on one hand, you kind of have them by the neck against the wall. But on the other hand, that's why they want the ceasefire talks to include a permanent end to the war, because that's the only thing that's going to assure their survival. And if they give up hostages, they know that that 60-day window that this ceasefire would have given likely wouldn't have reached an end of the war, because Israel and Ron Dermer himself has said this publicly numerous times, that the goal ultimately is to obliterate Hamas completely. Its military capabilities, its ability to govern Gaza, and Hamas knows that. And that's why ultimately, no matter what you do, Hamas is not going to want to make a deal that doesn't include a permanent end to the war.
So, Hagar, if that's the backdrop here and what ultimately perhaps led to this blow to the negotiations, how do the parties regroup from here? Is this the end of diplomatic talks? How do they get this back on track?
Well, so I've heard some people call it an earthquake when the U.S. in particular walked out. And I would agree that that's a big earthquake because they've been negotiating for months. And Trump, in his statement today, he said also, this is just Hamas wants to die. They're asking to die. And for the Israeli government, by the way, where you have a set policy and strategy set out by Netanyahu and the cabinet to completely obliterate Hamas, this is basically the go-ahead as well, right? But to finish off the job in Gaza, which is what Trump said. And so it's not impossible for talks to start up again. The Israelis have said that if Hamas comes back to the table with demands that are negotiable, they said, by the way, that those demands were related to the number of Palestinian prisoners that Hamas wanted released. I also know separately that a lot of the sticking points had to do with the extent to which the Israeli army withdrew from certain areas, that Hamas wanted them to withdraw even further. And so, you have, like, as with any negotiation, those final sticking points. It's not impossible, but it's certainly a blow, and I would expect the Israeli government to amp up its efforts again in Gaza at this point.
Enter Emmanuel Macron. I want to ask you what the French are doing here, Hagar, and if it matters. As we reported yesterday, the French say they will recognize a Palestinian state, the first Western nation, the first of the G7 to do so, and will do that before the UN Security Council. President Trump, Hagar, was asked about that in the same romp with reporters this morning, referring to Macron. He said, quote, "Here's the good news. What he says doesn't matter," unquote. Is Donald Trump right?
Yes, I mean, to put it very bluntly, and as you know, I tell it like it is, the French are making dumb moves. And it's true, in the world of geopolitical power, if we are very honest with ourselves, the entire world could recognize a Palestinian state. And if the U.S. doesn't, and if Israel doesn't, then it doesn't really mean much at the end of the day, because you need those two to recognize a Palestinian state for that state to actually exist the way it needs to. Now, again, I am not a proponent, by the way, of the status quo. I think the status quo is awful. I am myself a two-stater. I always have been. And I actually would even go, by the way, on this point, and as you know, I tend to be quite hawkish when it comes to my foreign policies. But on this point, I tend to lean quite liberal, and I believe that you could recognize a Palestinian state at the outset, even, of Israeli-Palestinian peace talks, meaning talks between the Israeli government and the Palestinian Authority. But doing it at this time only sends one message, and that message is that violent resistance can be rewarded. That after a while, and after pressure, and after screaming, and after pursuing October 7, and after having movements around the world where they're calling to globalize the Intifada, that yes, you can win and have a Palestinian state. But at the end of the day, what does it mean? We don't know the borders. We don't know what it would look like. No one else is going to recognize it the way a state should be recognized. And on top of it, for the French to do it simultaneously while releasing a convicted murderer He was a Lebanese individual. His name is George Abdullah, who was convicted for murdering an Israeli diplomat and U.S. military official 40 years ago in France on the supposed pro-resistance, pro-Palestinian movement. They released him today. He went back to Lebanon. He received an embarrassing welcome parade, and to do that on the same day only reinforces that message. So if the French goal was to say, hey, we want to move forward and we want a Palestinian state, I'm not against that goal. But to do it at this time in the middle of a war with no strategy attached just comes off like all talk without any goal actually achieved.
Well, I want to actually build on this too, and this broader idea about allies when they do put pressure perhaps on the U.S. What does that do to the U.S.-Israel relationship when you see France come out with a decision like this? When we're talking about the broader policy here, does that perhaps actually bolster the U.S. in the other way? I'd love your perspective on sort of the dynamic that we see emerge.
Yes, I would argue that it would bolster it the other way. In fact, you've seen, right, throughout these several months, or even if you look back to October 7th too, the U.S.-Israeli relationship has only become stronger. But if you look at just the last few months where there have been these suspicions that, the U.S.-Israel relationship is strained, things between Netanyahu and Trump have been strained, I think that really couldn't be farther from the truth. And we're seeing that play out over and over again. Where this could undermine alliances and relationships is actually among the UN Security Council membership, the G7, the U.S.-French relationship. I mean, Trump, he said it, again, he doesn't sugarcoat it, right? He says it like it is, and he said about Macron, he said, I like the guy, but what he said doesn't matter, and this isn't going to do anything. And I agree with that. So I don't think that this is going to undermine the U.S.-French relationship so much so that you see this big chasm. But I will tell you, for U.S. efforts to pursue peace in the region, with this kind of move, the French are not going to be involved. And that's something the French president has to think about, because he is trying to be relevant. He's trying to find a place for himself and for the French government in moving forward on the Middle East. And doing this kind of move just makes it look like they're not coordinated and that they're on the outs. And so the French really stand to lose a lot with this move, in my view. It might undermine things in particular with the U.S. and France, but I certainly don't think it'll undermine the U.S.-Israel relationship. As you said, on the contrary, it'll only bolster it.
Heard from Steve Witkoff, the president's envoy to the Middle East, of course, among other things. He says Hamas does not appear to be coordinated or acting in good faith. Is that actually true?
Yes, of course. I mean, it's a terrorist organization, so of course they're not going to act in good faith. And that's always the case, right? They're always dragging their feet. And that's going to be the case whether you're negotiating, by the way, with Hamas, with Hezbollah, with the Iranian regime. And fundamentally, that's because we have to understand their goals. Hamas, at the end of the day, and they state it over and over again, is to have an Islamist caliphate where you have the state of Israel and the West Bank and Gaza. And their goal is to kill Jews and Americans. In fact, you have two militants just this week who went out to say that after they succeeded that the next thing would be that they're going to kill Christians and Americans next. This is what Hamas is. So how really can you negotiate in good faith? At the end of the day, when you have negotiations, every party is going to have their goals, and their goals are always going to be very different. In this case, they're completely contradictory, because Hamas just wants to survive, and the Israeli government has made it very clear that they cannot, following October 7. So you're going to have that. But the process with any negotiation is finding something that other side wants that you can give, so that you can try to get closer to your goal. And it's very hard to see how you're going to bridge that gap with this effort as you get closer and closer to a situation where Hamas loses all of the hostages, right? That's the only reason Hamas has any leg to stand on left, is because of those hostages. But no, I absolutely agree. Of course, they haven't negotiated in good faith this entire time, and they never will, and they never did. But I really do think that they are writing their names in the tombstones. The problem is that Hamas, unlike any other fighting machine, is putting its civilians in front of them as their shield. And so, unfortunately, I think that I really do expect things to get worse over the next few months. Unfortunately, it's really unfortunate. Wow. I really wish that weren't the case. But I see that's the only way it's going to go.
Does sound like things are getting worse, not getting better. Hagar, it's great to have you back with us, as always. Hagar Shamali with us live on Bloomberg TV and radio. Having spent time on the White House National Security Council with Syria and Lebanon, the Middle East in her portfolio, now at Greenwich Media Strategies, and a voice that we rely on here a lot on Bloomberg. I'm Joe Matthew in Washington alongside Tyler Kendall. We appreciate you spending some time with us today on the fastest show in politics, and we'll meet you back here at 5 p.m. Eastern for the late edition of Balance of Power. We're going to have a lot to wrap up. The president will just be arriving in Scotland a bit later on today as well. And we'll have much more next on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, good afternoon. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City. Across Bloomberg platforms, and stocks are on track to finish the week at a record close. Earnings, trade deals, Fed pressure abound. There's a lot going on, but Like I like to say, Tim Stanovic, everything is awesome.
Yeah, investors brushing off any concerns about Fed independence after yesterday. We're going to talk about that in just a few minutes. Charlie Pellet is going to have an update, too, on the trade. Speaking of that, Carol, under pressure, Fed Chair Jay Powell. Can President Trump legally get rid of him?
I don't know. We're going to find out. We're going to talk to someone who knows a lot about that. We're also going to check in with former president of the Dallas Fed, Rob Kaplan, is going to be in the house. We're going to talk to him about the chair, the institution, and also, we're going to talk a little bit about monetary policy. We've got a Fed meeting next week.
One stock not moving higher is Intel. Shares are tanking. The CEO is struggling to show the turnaround is on track. The big question I have is how much time are investors going to give him?
Yeah, Intel front and center. So too was Alphabet this past week. They reported results. They were boosted in part by cloud demand. So we're going to check in with Google Cloud's Chief Operating Officer, Francis D'Souza. He's going to join us to talk about AI, growth, and so much more. It's all coming your way in the next 60 minutes.
First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And here's what's going on. We have got an absolutely sizzling day on Wall Street, not just because of the temperature outside, the Dow, the S&P, NASDAQ, all advancing right now. We are looking at records as we head into the weekend with the S&P up 28 right now, 63.91 where we stand. That is a gain now of 0.4%. The Dow up 189, up 0.4%. NASDAQ up 75 for NASDAQ. That is a gain there of 0.4%. Our Mag 7 index higher by 0.7%. We do have Tesla, a part of that index, up by 3.7% right now. Tesla, you recall, plunged more than 8% yesterday. 10-year at 4.38% with a 2-year currently yielding 3.90%. Gold is down $32 the ounce, down 1%, 33.36. West Texas Intermediate crude 65.13 a barrel, down now by just about 1.4%. Intel shares are plunging after CEO Lip-Bu Tan sparked concerns that he is more focused on cost cutting than restoring the chipmaker's technological edge. Right now, Intel is down by 9.9%. In Boston, concession workers at Fenway Park are on strike. Their contract with vendor Aramark expired at the end of last year. The strike took effect today. First pitch for the Red Sox, by the way, 7:10 tonight in Boston. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are up to date on the markets. Well, trade and tariffs also top of mind for U.S. investors. We are awaiting some deals to be worked out with the European Union, maybe China. Of course, that's going to be a focus next week. European President Ursula von der Leyen said she will travel to Scotland this weekend. She's going to be meeting with President Trump as the two sides aim to conclude a trade deal ahead of that August 1st deadline when 30% tariffs, Tim, on the bloc's exports are otherwise due to kick in.
Here's President Trump. Before heading to Scotland a little earlier today, he addressed where we are with the European Union.
We have a 50-50 chance, maybe less than that, but a 50-50 chance of making a deal with the EU. And it'll be a deal where they have to buy down their tariffs, because they're right now at 30%. And they'll have to buy them down, maybe, or they could leave them the way they are. But they want to make a deal very badly. I would have said we have a 25% chance with Japan, and they kept coming back and we made a deal.
All right, that, of course, was President Trump earlier today. Okay, so as we said, trade definitely on the minds of investors. So, too, is next week's Fed meeting, amid a Fed chair that is continuing to be in the crosshairs of President Trump. Let's get into today's macro, all that's coming at us, all that's coming at the Fed chair. We've got with us Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. Mike, first of all, are we getting more certainty about the U.S. economic outlook because of what we're seeing in the data points, because we're starting to get movement on trade agreements? Any signs that things are settling into a clear economic trend here in the United States?
I hate to disappoint you, but no. We've had indications that we're getting some tariff pass-through into inflation from the CPI and PPI. Not a lot yet. But the biggest problem is Donald Trump's tariffs, for the most part, have not gone into effect. August 1st, in theory, is the deadline. We don't know if there'll be a a taco on that, some sort of delay. He's suggesting that that could happen if they're negotiating with the European Union at that time. But if and when the tariffs do come in, it's obviously going to put pressure on companies and company margins. And so we will then start to see who passes through, how much, and what kind of impact on inflation and consumer psychology there is from all this.
The president earlier today, Mike, was asked about the money that the U.S. has brought in or is bringing in when it comes to tariffs. He was asked by reporters before he made his way to Scotland. And he did say that we could use the tariff money for rebates to Americans. Help me out with that from the perspective of something inflationary, but also less on the inflation side and more on how much money has the U.S. brought in when it comes to tariffs?
They brought in about $100 billion so far, but bringing in the money is kind of a misnomer. I mean, somebody's got to pay that, right? We're not printing money here. This is not coming as a gift from the clouds, nor are the foreign countries paying it. Some of the costs may be absorbed by foreign companies, foreign exporters lowering prices, but most of this is at the moment either coming out of consumers' pockets or coming out of corporate pockets, say compression of margins. Now, that still means that somebody's paying it because that comes then out of shareholders' pockets. So there is an effect on the economy. We just haven't seen a huge impact yet because there haven't been a huge amount of tariffs in place, but we are seeing higher prices for cars. We are seeing higher prices for appliances, things made out of steel. So we are going to have an effect. The question is how much and who's going to directly affect, whether he gives people money back or not. That seems like a weird idea to me because he's campaigned so much and people have campaigned so much on the deficit. And he's argued that his big, beautiful plan is not going to increase the deficit. Well, if I get some revenue that is supposed to offset the deficit and then I start handing it out to people, I'm not going to reduce the deficit.
All right, really good to keep kind of all of these things in mind. One of the things I'm thinking too, though, is about the trade deals yet to come, China, EU. These are some of the big ones.
Right. And the question is, what are these deals actually going to be? So far, we don't have any signed actual point-by-point agreements. The British are still working out the details with the United States. And so you can imagine for China, it's going to be very complicated. For Japan, it's going to be very complicated. And then the most complicated of all is going to be the EU, because the EU, while it negotiates as a bloc on trade, is 29 different countries, and some of them aren't going to like parts of this.
The president also today saying that on trade deals, most of the deals are letters instructing tariff rates. So those letters we got a couple of weeks ago that say 10 to 15% tariff rate, some higher, some lower, depending on your country of choice. He's calling those deals.
He's calling those deals because he's trying to make this all look good. And to the extent that he's allowed to put tariffs on, and that's an open legal question. And next week on August 1st, they're also hearing this case at the appeals court on whether or not he can impose the tariffs under the International Economic Emergency Act that he has cited. If he can't, then all this falls apart. If he can, then the question is, how legal are these agreements in terms of both sides living up to them? He made a deal with China, in theory, in the first term, which they didn't live up to. And any kind of real trade agreement has to be ratified by Congress. So, we don't quite know where this is all going to end up, and this is just sort of the ongoing chaos that we have been seeing.
Mike, the assumption that we're going to have all this investment going on in the United States, building of factories, manufacturing happening here. I keep going back to this quote from a story I read, I think it was on Monday, and this was a senior economist for emerging Asia at Natixis, the individual said, at a 15 to 20% tariff level, it's still profitable for U.S. companies to import from abroad rather than produce similar goods at home. So she said this in a Bloomberg story. So if we are thinking that there's going to be a lot of economic momentum out of all of this investment, that's not something we should assume, or I don't know. How do you?
No, you can't assume it. And it's one of the interesting things about the Japan deal is they said they were going to invest $550 billion. Well, is that $550 billion new dollars over what period? Or does this include factories that are already under construction? It's really hard to tell what any of this means. There was a lot of money lined up to build factories under the Inflation Reduction Act, the kind of misnamed one from Joe Biden. And are they counting that? We just don't know, and we don't know whether companies are going to follow through. We've had a lot of cases where we've seen promises made that were not kept in the long run. So it's all kind of amorphous at this point. The only thing we know for sure is if the tariffs do go on, we will see inflation, even if we don't know how much.
You weren't here with us yesterday.
I'm sorry. I apologize.
We could have used you. I wanted to get your reaction to what happened at the Federal Reserve yesterday afternoon, the back and forth between the president and the Fed chair, the tensions kind of actually seeming to dissipate a little bit.
Yeah, I think both sides kind of wanted that. As I've been saying on this program for a long time, and now I'm copying on other programs, Trump is a master of the squirrel. And he's been using these Fed attacks lately to distract from Epstein, and that's pretty obvious. But also, he set up a fall guy. If we do get a lot of inflation, or if we do see the economy start to weaken, then it's Jay Powell's fault. It's definitely not going to be President Trump's fault, according to President Trump. So you've got that going on. But then you had the president after yesterday's meeting saying it was an honor to go to the Fed, and the Fed today saying it was an honor to host the president. I think both sides want to back off a little bit from this. Trump's decided probably not worth it to try to fire him and go through all that. And the Fed's going to just say, we're going to do our job and stick to our knitting. We'll still get a tweet on Wednesday or Thursday after the Fed decision and they don't cut rates, but I don't think we have to take it too seriously anymore.
All right. That's good to know, but certainly keeps us on our toes. Mike, thank you. Have a great weekend. Bloomberg TV and radio, international economics and policy correspondent, our own Michael McKee. Also, we're going to have a little bit more on the Fed and Jay Powell joining us in about 20 minutes. We've got the former Dallas Fed President Rob Kaplan, so looking forward to that. Now we're going to talk about one stock that's really on the move big time.
Yeah, and that is Intel. A new headline just about an hour ago, a report from CRN that Intel plans to spin off its networking business. It cited an internal memo. This, Carol, on a day when Intel shares are tumbling, the most in about 4 months, after Lip Bhutan, the company's new-ish CEO, sparked concerns that he was more focused on cost-cutting than restoring the chipmaker's technological edge.
Let's see what our Ian King has to say about this. We were tracking everything he wrote after the earnings yesterday. He's Bloomberg News U.S. semiconductor and networking reporter. He's out there in our bureau in San Francisco. Ian, first up, that headline, you know this company inside and out. Let's just talk to the news about an hour ago, or at least the headline. Is this anything new or significant?
Yeah, I mean, we and others have reported that this was in the works, and this is confirmation of it. We actually have a statement in our latest story that from the company confirming this. So yeah, this is another example of them saying, look, this isn't part of what we do in terms of mainstream businesses, and we're going to try and make some money out of it by effectively spinning it off. And they confirm that to us just now in a statement.
Surprising though, like I mean. The question that I had yesterday, and we didn't get to ask you this question, is the Intel that you've been covering for years, does that Intel continue to exist and indeed thrive in the future, or is this company kind of going to be sold off for parts?
The whole sold off for parts thing was a debate that happened sort of before Lip Bhutan became the CEO, and he kind of largely squashed it, because there's a key difference between here where they were talking about its fundamental business, which is its manufacturing and its chip design efforts, and other things that it does, such as the networking, such as the programmable chips and Altera that it's already spun off, such as Mobileye. All of these kind of peripheral efforts, they're gone or they're going to be monetized. What is still a key question, and this is what happened on the call yesterday, is how do we move forward? How do we make that core design business and that core manufacturing business great again, for want of a better expression, because for many decades they were the best in town.
You know, it's interesting too. It feels like a lot in last night's earnings release I mean, there was so much in there as we were going through it, and I'm sure as you were as well, about cuts and cancellations of factory projects. Stock down, as you noted, Ian, in your story, that the CEO is more focused on some of those cost-cutting measures than restoring the chip maker's technological edge. You put that's in your story. Isn't, though, that all part of the process? And isn't Intel's CEO also making changes to improve Intel's technological edge? And it just kind of takes time? Or, I don't know.
So, yeah, you've gone to the heart of the matter there. If you'll remember, we liked the earnings release. Earnings were actually a little bit better and everything was groovy. Okay, he's being more rational. Okay, we're cutting costs, we're improving things. And then we got to the call and then we talked about a new manufacturing technology, which we'd been told is the future of Intel. It's going to make Intel more competitive, its own products, its manufacturing will be better and therefore others will want to use it. And then, he kind of went through an explanation saying, well, maybe we'll do it, maybe we won't, was the takeaway that everybody took from what he said. And that was like, because if they don't do this, if they stop going with new manufacturing technology introductions, then they're not Intel anymore.
Just real quick, I want to jump in with the headline that just crossed the Bloomberg terminal. Microsoft is investigating whether a leak from its early alert system for cybersecurity companies allowed Chinese hackers to exploit flaws in its SharePoint service before they were patched. That's according to people familiar with the matter. Microsoft shares still higher right now by about 1.3%.
All right. Ian, as we continue to, and you continue to cover this story, I mean, I feel like we're always constantly saying, what's the future of Intel? Is that TBD? I mean, or should we not be so naive to count this company out? It's still a big deal, right?
Well, if you read the reports that came out in reaction to what they said yesterday, it's become more of a TBD, more of a we don't know where they're going, we don't know what to expect anymore from them. And that's the problem, and that's why the stock is down nearly 10% today.
Yeah, it was a $100 billion company yesterday. It's about an $90 billion company today. That was it going into earnings. It's shed up about 2% so far this year. But it's a shadow of its former self, no question, Ian. On that, and whether it can compete with the other players out there, what is the opportunity that the company has moving forward? Like, what is its strategy here in a world that has changed a lot since it dominated?
Yeah, I mean, Mike was talking about we don't know so many things about what's going on with the Trump administration and their policies. You can project the same kind of viewpoint at Intel. We know that they're being more cautious. We know that perhaps they're spending less, but that's not enough, right? You do not cut your way to leadership in the chip industry. This is the sport of kings, right? These plants cost multiple tens of billions of dollars. You've got to spend big and spend early, or else you're out of the race. TSMC is spending big and spending early. Samsung is trying to run that race as well. If Intel is saying, no, we don't fancy this anymore, then who are they and where do they go? And the answer is, as Mike was saying about other policies earlier, we don't know. And that is not a good position. And investors clearly do not like that.
Yep. Investors never love uncertainty, that's for sure. Hey, Ian, thank you so much. Have a great weekend. Bloomberg News U.S. semiconductor and networking reporter Ian King out there on the West Coast. Coming up next, Alphabet earnings, as you know, this past week, boosted results, I should say, boosted by AI and cloud demand. We're going to talk about Google Cloud's business with the company's COO, Francis D'Souza. That's coming up later.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Once again, best level of the day on the S&P 500 index, now looking at a 31-point advance. That's a gain of 0.5%. The Dow up 213, up 0.5%. S&P, by the way, at a record. NASDAQ pushing higher as well, up 90 points now, up by 0.4%. The NASDAQ 100 index also up 0.4%. Broad-based rally on this hot Friday in New York, with the Russell 2000 index up now by 0.3%. Our Mag 7 index up 0.8%. Tesla, part of that index. Tesla shares higher today by 4% than after yesterday's 8.2% decline. 10-year 4.38%, with the 2-year 3.91%. Gold tumbling $30 the ounce, down 0.9%, 33.38 on the precious metal. A retreat for crude, down 1.2%, 65.23 a barrel. And Bitcoin now down by 2% to $116,500 on a Bitcoin. So it is an update for the Dow, the S&P, and NASDAQ. Record on the S&P, but Pinnacle Financial and Synovus Financial both plunging. The companies have agreed to an all-stock transaction valued at $8.6 billion that will combine two sizable banks in the attractive southeastern market. Synovus down 12%, Pinnacle down by 11%. Recapping, S&P now higher by just about 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, shares of Alphabet are up for a second day following earnings late Wednesday. The company, as you know, said demand for AI products boosted quarterly sales and now requires an extreme increase in capital expending, heightening pressure on the company to justify the cost of keeping up in the AI race. That's kind of the big picture. Google Cloud revenue, and that's something we want to focus on, and operating income, top analyst projections. Our own Bloomberg Intelligence's Mandeep Singh writing after earnings that Google's increased CapEx view by $10 billion for the full year suggests that cloud segment growth is likely to remain above 30% through the second half. Well, our next guest is the Chief Operating Officer of Google Cloud. In fact, its first COO. Great to have with us is Francis D'Souza. He joins us from the Bloomberg News Bureau out in San Francisco. Francis, welcome. So nice to have you here with Tim and myself.
Great to be here. Thanks for having me.
I want to start with AI and cloud demand. As you know, it feels like so many conversations start with AI. AI contributions to Google Cloud growth, 32%. What are you seeing currently and continuously when it comes to AI and cloud demand?
Yeah, right now it feels like there are two powerful megatrends that are playing out in the enterprise market. The first is, the continued move by companies of their workloads to the cloud, of their applications to the cloud. And the second, much bigger trend that's playing out right now is the adoption of AI by companies. And those two powerful megatrends are driving our business and fueling the growth that you saw in the quarter. And so what we're seeing on the AI side is, this is the fastest in my career that I've seen a technology move from pilots to production. And so what we're in talking to customers, what they're telling us is they're recognizing the benefits that AI can bring into their company across the board. We have companies like Verizon that are using AI to help do customer support. We work with Seattle Children's Hospital that's using AI to inform physicians in their communications with patients. We also have companies like Papa John's or McDonald's that are using AI in the franchises. And so we're seeing broad adoption by enterprises across a number of places where they can see the benefits from AI.
You just mentioned a few examples of companies that you work with. There are a lot of small businesses, though, and even large businesses that I think it's fair to say haven't fully harnessed what you view as the opportunity when it comes to AI. How big of an opportunity is it for Google Cloud? What's a number? How can you quantify this?
Yeah, I think you're absolutely right in that we're the very early stages of what is a very large sort of adoption market in front of us. Now, you look at the numbers we delivered, last quarter in Google Cloud, we delivered $13.6 billion in revenue. And as you said, that's up 32% year over year. So although the numbers are already big, we're still just at the very, very beginning of AI adoption by companies. And that's true whether you look at small companies who are starting to use it in terms of their outreach to customers to scale up their presence from a marketing perspective, all the way to large enterprises. We're just at the very beginning of this big wave.
One of the things, Francis, and I'm so glad we could get some time with you, is that, everybody kind of throws out AI and large language models generally, and we're just trying to get more of an understanding of how this all impacts our world. Drill down a little bit further in terms of the customers that you are working with, big, medium, and small, and how they are using AI and how it's going to impact our lives.
Yeah, we are seeing it show up in enterprises in a whole bunch of different ways. And so let me give you some examples. You know, some large manufacturers like Toyota, for example, or Honeywell are using AI on the factory floor to provide information to the people working on the factory floor to improve their operational ability, and also to provide access for their customers to engineering and technical support documents around the product. So make it easier for customers to navigate and find the information they need. We're seeing some hospitals, as I talked about, using AI to help provide physicians access to whether it's guidelines or any background information. In addition, we're seeing hospitals use AI to automatically transcribe the communications with their patients. So what AI will do is actually take the notes automatically and then upload it into the systems that it needs to. What that does is it frees up time for the medical professionals to do what they do best, which is deal with patients. We're seeing small businesses that are using AI to create marketing materials and do that much more efficiently. We're seeing large retailers like Wayfair that are using AI to create more personalized experiences for their customers when you come to the website. So you can imagine, as you're using Wayfair, you can imagine how the furniture items will look in your environment, and that provides a better shopping experience for customers. So we're seeing a wide swath of ways that AI is being used in companies.
I'm so glad you mentioned kind of the medical area and what they're doing, because I think a lot of folks come on our air and talk to the Bloomberg audience and talk about how AI might significantly impact not just hospitals, but just how we get medical care. You are the former CEO of Illumina, and I think about DNA sequencing and all of the information and data that could potentially improve how we are treated when it comes to healthcare. How are you thinking about that space and what it might mean for Google Cloud and demand there?
Yeah, I think AI is going to have a very big impact in a number of ways across healthcare, right? So if we talked about some ways where it's helping in the delivery of care by freeing up medical professionals from administrative tasks and using more of their time to actually interact with patients. In addition, it's also helping medical professionals, get access to the information they need across a whole swath of information. So, they need to be able to stay on top of guidelines as they emerge, new research that's being published, as well as all the information on the patient. And increasingly, we're getting more and more personalized information on a patient. You talked about genomics, there are a lot of images, as well as previous lab tests. And so what AI can do is sort of take all that information and present it in a more digestible way so that you can make better decisions. In addition, AI can also help, earlier in the process of drug development. We've seen fantastic advances with tools like AlphaFold, which allows you to, deduce a 3D protein structure across hundreds of millions of protein types. What that does then is it allows you to identify maybe new druggable targets that allow you to treat diseases. AI can also help bring information together, the genomic information, the phenotypic information, the imaging information, and help us get better understanding of what causes diseases and how they develop. And that could give us new insights that allow us to think about how we can treat those diseases better. So in almost every part of the healthcare industry, you can see how AI can help improve that industry.
We're speaking with Francis D'Souza, Chief Operating Officer over at Google Cloud. Francis, I want to talk a little bit about competition. For years, Amazon has been #1. According to our Bloomberg Intelligence team and data from IDC in 2023, AWS had about 47% of the infrastructure as a service market share. Microsoft in second place was 16%, and then Google coming in with about 6%. How do you get to #2 and then #1?
What's really interesting is that as I talk to customers, what they're saying is there's a convergence of two really big important spaces. One is the cloud space, as you talked about, and two, AI. So nearly every customer conversation I have now and prospect conversation I have is really all about AI and how it'll impact businesses. And we are the only hyperscaler that actually has our own AI stack. So if you think about every part of the AI technology stack, Google has leading technology. So for example, on the chip side, we're one of the largest partners in the world with NVIDIA on GPUs, but we also have our own technology, TPUs, that are very highly performant, and we run them in our data centers. In terms of the models, we work with a number of other model providers. So if you go into our model garden, you can access models from companies like Anthropic and DeepSeek, but we also have the world's leading model with Gemini 2.5, which is performing really well on the top of the leaderboards in almost every part of AI. And so here too, we provide our own leading technologies, and it's Gemini, but it's also our image models, our video models, our time series models, our weather models. And then we also provide our own applications on top of that, like Agent Space, that allow companies to easily develop their own agents. And then we have a leading cybersecurity portfolio. And so where we are differentiated in the market is that as we talk to customers, we're really the only hyperscaler that can talk about our own native AI stack that's leading technologies in each part of the stack, as well as our cloud. And that's playing really well. And that's driving a lot of the results that you're seeing, including the results we just published yesterday on the earnings call.
I got to say, it's the thinking models, the Gemini 2.5, that really kind of are blowing everybody's minds. Hey, one thing I want to ask you, speaking of customers, Tim and I, full disclosure, we talk about it a lot, are a little bit obsessed with Waymo. How much is Waymo using Google Cloud? I'm just curious in terms of keeping that all going and running.
Yeah, I totally understand why you love Waymo. I love Waymo too, living in San Francisco. I've been using it for a few years, and my daughters and I love it. As you can imagine, being sister, parts of Google, we leverage technologies that Google Cloud is building as well as DeepMind is building. And so as you could imagine, there's really close interactions from a technology perspective across these different parts of Google.
Hey, just 30 seconds left. Security. As we know, your former background, Symantec, you understand the importance of security specifically. And I'm just curious, what do you keep top of mind when you think about the security of Google Cloud and keeping it secure?
Yeah, as you point out, security is a really important area for us to focus on, and it's a core part of the value that we deliver to our customers in terms of providing a very resilient, protected cloud. There are a number of things that that are top of mind for us and for our customers as we talk about security, especially in a world of AI. One is it's important that security companies are leaning deep into leveraging AI to improve their security capabilities. So we offer agents, for example, that customers can deploy as part of their security operations center, as part of their threat intelligence gathering. And so we're also doing research on how AI can be leveraged by the bad actors, and think about how you can stay on top of providing defenses for things like, altered images and videos and deep fakes. It's also important to our customers that the security we provide works multi-cloud, so not just for Google Cloud, but that they can have the same security posture for workloads that they have on other clouds as well. And so that's an important part of the conversation too. So provide leading edge technologies, stay on top of AI and the expanding sort of threat landscape that opens up, and then also make sure that whatever you give us, works across clouds.
So glad we could get some time with you. Francis D'Souza, he's the Chief Operating Officer at Google Cloud, former CEO of Illumina, and also former president at Symantec, where he oversaw the security and data management portfolio. All right, now we want to get back to talking a little bit about the Fed. That has certainly been top of mind, I want to say, over the past week or two, easily, and certainly in the last 24 hours.
Yeah, as we saw with President Trump yesterday, whose unprecedented walkthrough at the Fed's now controversial building renovation project with Fed Chair Jay Powell ultimately ended with a sign of relief for the Fed chair, who's been under pressure for months to slash interest rates.
I have one dispute, and the dispute is there could be some things with money and, where it comes from, how it's come from, how it's printed, where it's printed, all of the standard things with the Fed. But I just want to see one thing happen. Very simple. Interest rates have to come down. I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing.
That's President Trump yesterday after he toured the construction project at the Fed with Fed Chair Jay Powell. Amid the continued presidential criticism of the Fed chair, we continue to wonder in these unprecedented times whether or not legally the president can actually get rid of the Fed head. With us is Catherine Judge Harvey J. Goldschmidt, professor of law at Columbia Law School, also the author of Direct, the rise of the middleman economy and the power of going to the source. Her research focuses on banking, financial crises, regulatory architecture, and intermediation design beyond finance. She joins us from New Jersey. Professor Judge, simple question, can the president fire Fed Chair Jay Powell?
Not based on what we've seen so far. He does have the ability, if there's causal reason to fire Jay Powell, to fire Jay Powell. But I think what yesterday's visit made clear is he's nowhere close to satisfying that legal standard. The very fact that we saw him try to trump up an inflated cost estimate based on trying to bring in a third building was in many ways a concession by the president that he really didn't have the case that he needed for removal. So I think right now, Powell and the Fed should feel very good.
All right, so maybe he can't fire Fed Chair Jay Powell, but he can still do some damage, right, by the constant criticism?
He can do damage. He can do damage, and I really, what's hard there is it's damage not just to Powell, it's damage to the Federal Reserve as an institution. And I would actually say a lot of damage has been done, and more is likely to still come. I mean, one of the challenges is that right now, the markets really trust Jay Powell, and for a very good reason. He has been an incredible Fed chair. He's been clear about what he's trying to achieve and how he plans to achieve it. And both during President Trump's first term and during this term, when he has faced pressure that he feels like is not warranted given kind of economic conditions, he is focused on serving the long-term aims of, keeping inflation in check while also promoting employment. And so the real challenge that the president is creating is he's creating an environment where it's going to be very hard for the next Fed chair to come in and build up that same type of credibility.
Yeah, talk a little bit about that and the potential response. And I know you focus on this from the law perspective, but what would that mean if the Fed chair doesn't necessarily have credibility, the next Fed chair?
It could mean a lot of different things. I mean, so first, one of the challenges is that the president wants lower rates. A Fed chair can't necessarily deliver lower rates. A Fed chair is one vote of 12 votes on the Federal Open Market Committee, the FOMC, that determines monetary policy. So one of the first challenges that a new Fed chair is going to face is how to get 7 votes, how to get the support that he needs in order to drive through the agenda that it seems like the president clearly wants to see. Longer term, the challenge is not just to the president, but to the country. I mean, at this point, we have an incredible deficit. One of the easiest ways for any country to reduce the effective burden of its deficit is just to inflate it away. And so our creditors are going to be looking very carefully at whether or not we're willing to maintain a central bank that has the independence needed to be able to assure creditors that we're not going to try to use that technique. And I think without that credibility, there's going to be significant costs in terms of financing.
Professor Judge, one last question. We are next talking with Rob Kaplan. He's former president of the Dallas Fed. Curious what you might ask him when it comes to Jay Powell and that presidential pressure and anything else related to the Fed.
Yeah, I mean, actually, I think Kaplan's a wonderful person to talk to because the reserve banks are an underappreciated element of how the Fed has stayed independent. I mean, if you actually go back to the 1935 Act, a lot of the question was how much power are we going to give to the board in the centralized position? How much presidential influence is there going to be over the board? And how much are we actually going to reduce the capacity of any administration to shape policy by putting meaningful authority in the hands of the 12 reserve banks across the country, which again have 5 of the 12 seats on the FOMC. So I think one of the things to really focus on with Kaplan and that we should be looking at generally is when are the threats going beyond the chair? Because we've seen tussles between presidents and chairs in the past. And when might the president take steps that really endanger or threaten the broader institution, including the reserve banks?
All right, you're a gem, and you set us up so well. I'm so glad we could get some time with you. Catherine Judge, she's Harvey J. Goldschmidt, professor of law at Columbia Law School, author of Direct, The Rise of the Middleman Economy and the Power of Going to the Source. We're going to stay with the Fed. Delighted to have with us Robert Kaplan. He's former president and CEO of the Federal Reserve Bank of Dallas, vice chairman currently of Goldman Sachs, and he joins us from the Bloomberg News Bureau in Dallas. Rob, it is great to have you here with us. How are you?
Great to see you. Great to see you. Doing well.
All right. So I want to follow off of what we heard from Professor Judge. She made some really good points. I mean, first of all, what do you make of the back and forth between the president and Fed Chair Jay Powell? Not really between the two, but really coming from mostly the White House.
So I'm going to talk to you about it as if I were in my former seat at the Fed. And I would tell you I would be aware of it, but I would be striving to make sure it does not enter into my thinking at all. And I think for most of the folks at the Fed and around the FOMC table, they're very focused, as I would be, on trying to make the right decision in July and then in September. And I would basically expect them to extend humanly possible, screen out some of the activities going on externally.
How do you do that? I mean, this is a psychological question as much as it is a question about data and the Fed's dual mandate. But how do you drown out the noise when it seems to be coming, at least in our world, almost 24/7?
So the way you drown out the noise, I would say, is the task of figuring out right now with some of these cross currents we have, the task of figuring out what's the right way to administer monetary policy, that's consuming enough. And I think there's a real ethic and culture at the Fed and around the table to divorce your decisions from political pressure or political considerations. And that's really firmly ingrained. And I think it's also, between colleagues, it's self-reinforcing. You reinforce it with each other. I think the current situation, which I can get into, is complicated enough. That would be consuming all of my attention, and I would be having my team very focused on how to weigh these trade-offs.
Well, and the president continues to say, Rob, that, Fed Chair Jay Powell is going to do the right thing. You look at the economy, you do so for, your team over at Goldman Sachs and some of the clients. How do you see the economy? What is the right thing in terms of monetary policy right now, in your view?
So here's what I'm seeing in the economy, and I spend bulk of my time with clients across our divisions globally. U.S. economy is solid, but I would say growth is sluggish. And what do I mean by sluggish? We expect GDP growth this year, 1 and a fraction, not a recession, but sluggish. The labor force is tight, but the reason it's so tight, it's that businesses are not hiring very aggressively, but they're also not firing. And we've got a lack of immigration. We've got a real uncertainty with 10 million plus undocumented immigrants that are in the workforce. So the unemployment rate's likely to stay sticky. In addition, in the macro elements are such, you've got enormous global overcapacity in goods, driven heavily by China overcapacity. We've got an AI, artificial intelligence boom, which should be disinflationary. And the counter to this is we've got this tariff situation going on, which still isn't yet resolved. But I would say the following. The range of outcomes for tariffs in April were very wide. They've now narrowed down. They may be as low to mid-teens. They may be as high teens to low 20s. That's allowed businesses to get a pretty good grip on what their strategies will be. How much they want to take from suppliers in negotiation, how much has to come out of margin, how much will go in price. And so the thing I'd be struggling with at the Fed is, in this disinflationary context, how much will these tariffs lead to more persistent price pressures, or are they more likely to be a one-time price issue, cost issue, which then over the horizon will get absorbed, and we will return back to a more disinflationary environment, which I would argue is where we are predominantly globally outside the United States. And I'm not ready to conclude that it's time to act in July, but I'd be getting my team ready to be prepared potentially to take action in the September meeting.
In the United States, okay, potentially take action in the September meeting. So it's a ways away, but not really a ways away, just after Jackson Hole in August.
That's right.
So if we think about this from the perspective of the United States economy and what you said about immigration and the uncertainty around the 10 million plus undocumented workers, or 8 million, however, whatever number we're using to measure this difficult to measure workforce here in the U.S., is the net effect of President Trump's immigration policy inflationary or disinflationary?
The net effect on the workforce is you have a very tight workforce. And this is why businesses are reluctant to fire. That means that wages, and this I think is a good thing, are probably firmer. You do not have, though, on the fiscal side, some of these big government-directed programs like the American Rescue Act, Inflation Reduction Act, Infrastructure and CHIPS Act. You know, that spigot of government-directed spending has been stood down. It's probably been replaced, though, by more stimulus, tax on overtimes, tax on tips, accelerated depreciation, and others. And I think the net effect of what's going on over the horizon, it may, in fact, when we're looking back a year from now, may say that the overall trend has been disinflationary. The tariffs have basically interrupted that, but only for a period of time, and we're returning to a disinflationary trend. But I'm not sure yet, and that's what I'd be trying to figure out, and I think that's what the Fed participants are trying to figure out right now.
What is the biggest risk to the U.S. economy right now? Is it the tariffs and the deals that are being worked out?
I would say the following: we're gonna go into 2026 with some additional stimulus coming from the bill that was just passed. We've got a very tight labor force. I think a risk is most businesses I talk to are struggling to find workers, particularly in the service sector. I think there may have to be a look at increasing legal immigration and/or clarifying the status of these millions of undocumented immigrants, because businesses are telling me they're struggling to find workers. And then, yes, on the tariffs, if we're in the low to mid-teens, I think the risk of being able to manage this is lower. I think if they're mid to high teens or 20%, I think it will take longer. And I'm still, though, overall optimistic about next year. The biggest concern I have for the U.S. economy is the deficit. We're now net debt to GDP over 100%. We're going to run this year as high as a 7% of GDP deficit, although we'll have to see. And I still think our ability to sell long-duration treasuries is still our biggest challenge, and it's the biggest thing I'm concerned about.
We are, of course, talking with Rob Kaplan, Vice Chairman over Goldman Sachs, former President and CEO of the Federal Reserve Bank of Dallas, joining us from the Bloomberg News Bureau in Dallas. Hey, Rob, one thing I wanted to ask you. Former Treasury and White House National Economic Council Chief Larry Summers said on Bloomberg Television's Wall Street Week with David Weston that he backed Treasury Secretary Scott Bessent's questioning of the Fed's non-monetary policy activities and saying that there were some areas that are distinct from the broader issue of central bank independence. I think it's safe to say that even some that really fiercely defend Fed independence say it is a good idea to review. Do you think the Fed has overreached in some areas?
I think there's two or three areas that are healthy to look at. One, the Fed has very aggressively used its balance sheet, increased its balance sheet, QE, in the last number of years. I think there's an argument, and it's worth a debate, maybe the bar should be higher to roll out the balance sheet in the midst of a downturn. Emergency powers, yes, maybe a higher bar for using that balance sheet because it has a distorting effect on the Treasury market and financial markets. I think some of the changes that are being made now to do a revamp of bank regulation, I think, are constructive, and I think those are good moves. And then to the points that have been made, I think it's always a good idea to take a look at the Fed. How can we operate better? There's 12 reserve banks. There's a big board of governors. Are there operations that could be integrated? Could there be more efficiencies created to make it more economical? Sure, there are opportunities there, and I think that kind of review, though, is healthy and constructive, and I think should be expected, and I think is a positive thing for the Fed.
Rob, forgive me for going back to kind of where we started, and I think about, man, I would be super rich and living probably on Anguilla if I had a buck for every time I said we were living in unusual and times. But watching yesterday, Tim's been doing this a long time, I've been doing this a long time, to see a president with a Fed chair touring the Federal Reserve, I think it's fair to say that was super unusual.
It hasn't happened in 2 decades.
So tell me, someone who understands the Fed, the importance of Fed independence, you know, your conversations or the things you were being asked around that and what you think is the productive takeaway from seeing that, or were you as shocked as kind of we all were?
Yeah, well, I thought Jay Powell handled it very well, and I really think that as a leader of the Fed, and I would guess what they're saying inside the Fed, please screen this out. Let's focus on the job at hand. We've got a big job to do. The job is not finished. Let's make sure we're focused on the July meeting, the September meeting, our role in bank supervision, and all the other community activities we do. That has got to be the overwhelming focus. To me, watching the events of yesterday, it reminds me back to what I said earlier. We are much more highly leveraged than we were pre-COVID, whether we like it or not. Now, it's spurred economic growth in the last 3 or 4 years, but some of that was due to excess fiscal spending. I do think the big looming issue for the country, and I'm optimistic generally, we are going to have to find ways to moderate our debt growth, to be aware of the fact we're running a historically high deficit at a time of full employment. We tend to run big deficits when we have high unemployment, not at low unemployment. So this sensitivity to the cost of everything, I think that part of it, I think, is a constructive development. And we're going to have to do more to find ways to deleverage and moderate our debt growth for the good of our kids and our grandkids, and to have a healthier economy.
Do you think Fed Chair Jay Powell concludes his term in May 2026 as chair of the Federal Reserve and then serves until January 2028 on the Board of Governors?
I'll leave it to Jay to talk about what he does after he's done being Fed Chair. I would guess. I believe strongly he will finish out his term as chair. It wouldn't surprise me if he made the decision then to step down at that time, but he'll make that decision. But I'd be optimistic that he will finish out his term as chair.
Do you think, wait, I got to just add, because Professor Judge asked this, when the president might take any more steps to put more pressure on Fed Chair Jay Powell, do you think it's just going to be the same drumbeat, or do you think he could take it even further?
So, listen, I will say this, the sequence of events over the last several months have meant that the next Fed chair will have a onus on him or her to demonstrate that they are divorced from political pressure and political considerations. Very critical to the leadership of the Fed that they demonstrate that. And I think it's critical to people in the economy and the financial markets, not just here, but around the world, that person demonstrate that. And I think this just increases the emphasis on their need to demonstrate that. And I'm hopeful they will.
All right, don't tell anybody, Rob, but I know we're not supposed to have favorite interviews of the week, but this was definitely a fave. Robert Kaplan, have a great weekend. He is former president and CEO of the Federal Reserve Bank of Dallas and, of course, vice chairman at Goldman Sachs, joining us from Dallas.
We are a little over an hour from the close of equity trading here on this Friday afternoon. The S&P 500 set to close at another record, up about 0.5 percentage point right now. The NASDAQ Composite up 0.4%, while the Dow up 0.5 percentage point. I'm Tim Stanovic along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Denitsa Sakova. Stocks may be higher, but one prominent tech name, chip name, lower today.
Yes, all eyes on Intel today. The stock is down 9% now. Obviously, this comes off the chipmaker reporting second quarter results and plans to make significant workforce cutbacks. Of course, the ticker is INTC. The biggest concern is that their new CEO, Lip Bhutan, there was so much excitement about it. But the big concern was that he was more focused on cost cutting than restoring the chip maker's technological edge. So what we saw in the report is that they will cancel some factory project and take on a more conservative approach to future spending, and clearly investors are not reacting very well to that. When it comes to the job cuts, their goal is to end the year with 75,000 employees. This is actually a 20% cut. So that's perhaps one reason investors are reacting. There is actually a lot of support from the PC industry, but what we're seeing there is that maybe some of that is coming from build-up in inventory, and analysts are not so optimistic about that despite the strong first quarter. they're saying that obviously this may not happen in the second part of the year. That said, Intel gave an upbeat third quarter sales forecast, but still, the year-to-date rally, less than 3%. It's really lagging behind the big names.
But it was up.
It was.
Prior,
it was after
remember
the CEO.
this, right? This is a huge haircut today, and so it was doing better than it certainly is. All right, so I feel like we're going to go from high tech Intel to a little bit low tech. Sorry, Deckers.
Okay, Uggs, Hoka, Teva. What's going on?
Exactly. These are the brands driving the stock higher. The ticker is DECK, and the stock is up 12% today. Of course, it comes after reporting net sales for the first quarter that beat the average analyst estimate. And the two brands that are driving it is Uggs and Hoka. That's an interesting one where for Uggs, they're releasing new items. They have like all year round items. I don't know if you've seen the sandals and then the lifestyle sneakers.
Those platform Uggs that came out a couple of years ago or a year and a half ago.
And they're everywhere. I see them a lot. Hoka is also raising prices, so that seems to be paying off. Their CEO, Stefano Carotti, has been steering Deckers through tariff pressures. It's actually been a pretty rough year. Despite the big jump today, the company is down more than 30%. So this is much needed relief. But we see a lot of buzz across their famous brands.
Yeah, I mean, the famous brands are driving the driving sales there. I mean, Hoka brand net sales increased close to 20%. UGG brand net sales increased close to 19%, while other brand net sales decreased 19%. So it's being powered by UGG and Hoka right now.
Love me some Uggs. Love me some Sam Adams.
Yes.
All right, that's a transition.
I do love this ticker, SAM. We're talking about Boston Beer. I always say that.
Very good Friday transition. Shares are up 6%. The alcoholic beverage maker reported earnings per share for the second quarter that beat the average analyst estimate. The most important bit that is bringing relief to investors, the company expects a more moderate effect from proposed tariff rates and revised lower their expected financial hits to earnings. There are near-term factors such as economic uncertainty and household budget tightening that are definitely weighing on demand. That's what the CEO is saying. But they also have an interesting new brand. It's called Sun Cruiser, and it's been boosting sales, and they expect this to continue. So this is like a vodka iced tea. This is the first time I see it, but it looks very interesting. It was launched last summer, but it continues to grow its volumes week over week. Distribution expands to the big chains. So, you know, millennials are not drinking, but clearly this one is doing well. This, even though Boston Beer is still down almost 30% year to date.
Sorry, give me a glass of red wine. I'll be happy. We got to run. Bloomberg News cross-asset reporter Denitsa Sikova. Check out our Stock Movers podcast episodes of Big Winners and Losers. You can find it on Apple, Spotify, or anywhere you get your podcast. Tim, we've got a rally underway and another record on the S&P.
We do. Taking a look at how things are looking on the S&P 500. Poised to close at another record today, up 0.5 percentage point. The Dow up 0.5 percentage point. The NASDAQ up 0.4%.
The close coming your way on TV.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Heather Bosch. Deportation flights have begun from the immigration detention center dubbed Alligator Alcatraz. The latest from CBS's Christopher Cruz.
Florida Governor Ron DeSantis said the flights, operated by the Department of Homeland Security, have transferred about 100 detainees to other countries. He expects that number to increase soon.
The cadence is increasing. We've already had a number of flights in the last few days.
Officials say there have been 2 or 3 flights, but they aren't saying which countries they've gone to. About 2,000 people people are now being held at the facility, which has the capacity to hold double that. Christopher Cruz, CBS News.
Jeffrey Epstein's convicted accomplice Ghislaine Maxwell faced a second day of questioning by the Department of Justice. More from CBS's Natalie Brand.
The meetings with Deputy Attorney General Todd Blanche took place in Tallahassee, Florida, where Maxwell is serving time for her conviction of luring and grooming teenage girls for sexual abuse. Her attorney, David Marcus, spoke afterwards.
Ghislaine answered every single question asked of her over the last day and a half. She answered those questions honestly, truthfully, to the best of her ability.
The meetings come amid growing calls for the Epstein case files to be released. Disgraced former U.S. Representative George Santos is expected to report to federal prison today to begin a 7-year sentence on fraud charges. Trial attorney Michelle Thomas weighs in.
I think it's serving notice that no one is supposed to be above the law. It's serving notice and creating accountability for elected officials in their campaigning and reinstating the need for integrity in the process.
Santos served less than a year before being ousted from Congress. The extreme heat that has baked much of the central U.S. this week is slowly shifting east ahead of the weekend. CBS News meteorologist David Parkinson.
Your feels-like temperature from Washington, D.C. up to Baltimore, probably about 110. And then even in the New York City metro area, your feels-like temperature hovering right around 105.
Say it ain't so. Concession workers have gone on strike over pay at Boston's Fenway Park.
Our tips have been almost cut into a quarter of what they once were.
Amarak says it has a contingency plan in place to make sure fans can still buy food and drinks. Overseas, a major police operation is underway in Scotland as President Trump visits his Scottish golf resorts. Protests are planned in Edinburgh, Aberdeen, and Dumfries. Israel's prime minister says his government is considering alternative options to ceasefire talks now that Hamas and the U.S. have recalled their negotiating teams. Israel is allowing outside countries to drop food into Gaza now. This is CBS News. The Trump administration is pushing for a redesign of portable gas cans. CBS's Michael Wallace explains.
Gas cans have been destroyed by government regulation.
Social media are filled with complaints about the newest gas cans. Federal regulations enacted in 2009 require cans to have special vents in the spouts to stop vapors from escaping. A study had found the nation's 80 million gas cans were contributing to ozone pollution. But a lot of users have complained the filters in newer cans make it harder to fill tanks and lead to more gas spills. Yesterday, the EPA sent a letter to gas can manufacturers asking them to improve their designs. Michael Wallace, CBS News.
The U.S. Postal Service is turning 250. Saturday's anniversary comes as the agency faces financial challenges. The Postal Service was established in 1775 when the Second Continental Congress appointed Benjamin Franklin as Postmaster General. The agency was launched nearly a year before the colonies declared their break from British rule. I'm Heather Bosch, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily, with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. We are just under 55 minutes away from the closing bell on this Friday, July 25th. Man, July is flying by. We have also had a week where we've seen a few records here on the S&P 500, and we continue to see so. Seesaw?
I don't know what you're saying, but whatever it is probably correct, because that's how it goes.
I wouldn't be so sure about that.
No, you're right, Carol Masser.
S&P 500 up about 0.5%. We're up 29 points, 63.92. We're just off our best levels of the session. Dow up about 0.5%, Tim. And the NASDAQ 100, a gain of about 1/3%.
Spot on.
Spot on. Done.
Hey, one thing I'm thinking a lot about is this potentially seismic deal that would create the country's first transcontinental railroad operator. I had to read that twice because I was like, we haven't had a transcontinental railroad operator here in the U.S. And then I thought, oh, antitrust has prevented that in the past. What's different right now?
I don't know. Oh, maybe who's in the White House?
I think so.
All right, we're going to get into that in just a moment. Hey, everybody's talking about that South Park episode because it's certainly part of the just approved Skydance Paramount tie-up. We have the guy who wrote the book on HBO.
And are you a burner, Carol? I know I asked you this question yesterday and you said no.
I am not a burner.
Yeah, neither am I. We are going to get to this story today as long as there's no breaking news, okay?
Yeah, we're going to try.
It is worth the wait, everybody. It is one of the most read stories of the week. It's in Bloomberg Business Week. It's about Burning Man facing an existential financial crisis.
All right, looking forward to that in our 4 o'clock hour. Hey, first up, let's get a check on the rally that we're seeing. A little bit of a rally. I don't know, I want to be careful how we characterize it, but Charlie Pellet, take it away.
I will stick with the numbers because as we see so, we have got stocks moving higher right now with the S&P up 29, 63.92. Yes, closing in on 6,400, up now by 0.5%, and that is a record right now. Again, the S&P up 29, Dow Industrials up 222. That's an advance of 0.5%. NASDAQ, the composite index, up 74, up 0.4. We've got the NASDAQ 100 index up by 0.3%. Broad-based rally. That means that we include the Russell 2000 index up 0.4%, and the MAX 7 index up 0.6 right now. Tesla, a member of that index, up 3.2%. It plunged, you recall, yesterday by more than 8%. 10-year 4.38%. Spot gold down $30 the ounce, down 0.9%. And West Texas Intermediate crude 65.15 a barrel, a drop there of 1.3%. Key earnings reports next week will include Microsoft, Meta Platforms, Apple, and Amazon. Bloomberg Television and Radio are going to be all over those numbers as they drop. Alicia Levine is head of investment strategy and equities at BNY Mellon Wealth Management. On surveillance this morning, she talked about the importance of those tech earnings.
But you need tech to work, and it must work because the behemoths of cash flow and margin growth are driving the rest of the S&P margin, right? The margins of the Magnificent Seven are double the margins of the rest of the S&P. So that has to work, and the CapEx spend must produce earnings. Must. It cannot just go into a black hole.
Alicia Levine of BNY Mellon Wealth Management. So again, we do have a mixed picture for some of those tech names. Apple right now is trading little change to the upside. Amazon down by 0.2%. Again, the S&P up 29 at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Say so. Charlie, I just love you. He just doesn't miss a trick.
I know.
See so? Say so? See so?
Seashells.
She says.
At the seashore?
She says, yes.
Okay. Planes, trains, and automobiles. Actually, let's just talk trains.
Let's do that.
Union Pacific disclosed on Thursday that it's in advanced talks for a combination with Norfolk Southern in what would be the industry's largest deal ever. It sets up a long-awaited tie-up made easier by the Trump administration's pro-business stance. Kyle Porter is Bloomberg News North America industrials and transport reporter. He writes today about a potentially seismic deal that would create the country's first transcontinental railroad operator. He joins us from Chicago. Kyle, I was pretty shocked when I read your story that there's never been a transcontinental railroad operator. And then our producer, Elizabeth Sedgren, reminded me that railroads are like the bedrock of antitrust policy in the United States historically, and we learn about them when we study American history.
Robber barons, anybody? And so on.
And I'm wondering if this administration makes it so the railroad operators finally don't have to be concerned about antitrust when it comes to these tie-ups.
I mean, it's certainly possible. The STB, I'm sure, would tell you that they're setting a very high bar for this. The people they've got running it have spoken, positively about, come and show us a deal. These rules have been in place since 2001 as a result of a couple of disastrous mergers in the late 90s, which involved Norfolk Southern and Union Pacific.
When we think about the railroad business, I want to take a step back for a moment. I mean, it's something that has certainly garnered attention over the years. Because,
Warren Buffett loves it.
Exactly, because Warren Buffett loved it. Tell us a little bit about the business of running railroads today.
They essentially exist as quasi-monopolies regionally. If they're competing against one other player. So, for example, Norfolk Southern competes with CSX, Union Pacific competes with BNSF, and the two Canadian railroads, CN and CPKC, compete with each other.
How do they compete? Do they compete on the same tracks? Do they have a different?
No, they have their own track networks, which it would be impossible to build these things now. It's absolutely the inverse of the European rail network, where you have an incredible consumer transportation network and an awful freight network. In the US, you have an incredible freight network. If you come and visit Chicago, large swathes of the South Side are dedicated solely to trains. That happens throughout the South. It happens in California. You can ship things a lot easier until you get to your competitor, or you get halfway across the country and then have to hand your load off.
Is it safe assuming that this deal will get through?
No, it's still an incredibly high bar to do, and we're in sort of uncharted territory here. There's only been one deal in the last 20 years, and that was CP buying Kansas City Southern in 2021, and they actually had slightly different rules for that. It was grandfathered in under the previous set of antitrust rules that have been put in place. You've also got to bear in mind that these have large union workforces that predominantly in the South, a lot of these people are, I've been told from having spoken to them, very strong Trump supporters, and they certainly don't think he's going to wave through them losing their jobs.
Well, how would they lose their jobs if this were to pass?
Not all of them would, I'd like to be very clear, but the quickest way to generate increased profitability on a network is through efficiencies. How do you do efficiencies? Well, you essentially make your train longer and higher, stack more stuff on it, and as a result of that, you've got the need for fewer train drivers. You've got the need for fewer technicians.
You write a lot about Jim Vena. Am I saying it correctly? I'm hoping I'm pronouncing his last name. Tell us a little bit about him and kind of his vision for how this all potentially works out in the impact.
I mean, Jim is a fascinating character, and even though he's Canadian, it's that classic only in America story. Immigrant child, comes over, started on the trains, straight out of school, rose through the ranks, became a senior executive, has worked at multiple railroads through his time, but never really thought he was going to get a top job. He'd been in consideration for a few and it hadn't happened, and then in his 60s he becomes CEO of Union Pacific.
It's an incredible story. It's a great profile of him. What about the perspective of prices here? When we have less competition, more consolidation, prices tend to rise. In the past, it isn't always good for customers of these services. How would antitrust authorities look at that part of this portion?
Well, that's a really interesting point, because if you go back to the rules set in place in 2001, there were additional thresholds put in to ensure that any transaction would increase competition. To your point, it's difficult to see how consolidation does that. So there may be a revised test for how that comes about. They may choose to reject the deal because of it. No one has come out and said we're abandoning these rules. There's just clearly been enough mood music that UMP feels that it can try.
Hey, one of our producers and technical directors, Sebastian Escobar, is saying, he's listening, and he's saying, how would this pass union hurdles? I do wonder also about that, right? Unions are a big part of the railroads here in America.
It's a big open question, and people that I've spoken to on background around the union movement are skeptical of this transaction happening. That's what I can confidently say.
All right.
But why are they skeptical? Because of their power?
No, because they go back to the STB rules and they just don't think it could happen.
All right. So as you continue to report out this story and watch it, it's just so funny. Like in a day, a week where, I feel like almost every other conversation is about AI and other things. We have to, we can never forget that a lot of stuff moves around in this country, right? And railroads are a really big part of it. We know that. So it's important.
And an efficient part of it.
And an efficient part. And there are others who think about kind of the consumer end of it, that wouldn't it be great to build kind of more railroads that for people to get around the country. But I don't know. Kind of your next thinking about where this might go and the impact. I mean, if this deal doesn't get done, then what?
If it doesn't get done, we go back to the status quo, and none of these railroads, as you alluded to at the top of the show, they're not growing. It's impossible to grow meaningfully with the existing constraints that they have on them, unless they start meaningfully taking loads from truckers, for example. The other way to go about it would be you'd really rethink the industry in its entirety, and you'd have the rail network operate much more like the air network that we have in the US and indeed globally. Someone would own the tracks, somebody would own the trains, somebody would own the stations, and they'd all compete with each other, and you do that on a national basis. Now, you'd have to have a real expansive view of antitrust for that to happen, but that's the only way, sitting in my seat, I could see drastic growth and change in the industry.
All right,
What's more likely to happen is if this does get waved through, there's going to be a lot of questions over what happens to CSX.
That's right.
2024 revenues CSX of $14.5 billion, whereas Union Pacific came in with $24.3 billion, this according to reporting.
But if you're
Bloomberg.
left out, right? Like, where does that kind of leave you? Hey, Kyle, thanks so much. Glad we could jump into this story. There was actually a question on the Bloomberg quiz about this
I haven't done the quiz yet. Good.
Shoot.
That's good to know.
Just
Maybe
giving him a big
doesn't mean I'm
hint.
going to get it right.
Giving him a big hint. Kyle Porter is North America Industrials and Transport reporter, Bloomberg News, right there in Chicago. I just want to point out shares of Norfolk Southern, they're up about 1.3% in today's session. Union Pacific shares, let me pull it up on my Bloomberg. That stock is a gain of about 2.2% in today's session.
In today's session, stocks are higher. The S&P 500 up 0.5 percentage point. The Dow up 0.5 percentage point as well. In the S&P 500, you have the majority of names moving higher. 347 are on the rise today. Well, decliners count about 156.
Yep, materials up about 1% as a whole. Industrials a gain of 0.9%. Consumer discretionary up 0.7%. So those are your three top major industry groups in the S&P 500. You've got real estate at the bottom, just down about 0.25%. You're listening and watching Bloomberg Business Week Daily. I'm Carol Massar along with Tim Stenbeck. Coming up next, we're talking about private markets.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks pushing higher with the S&P 500 index just 5 points away from 6,400, up 31 right now. That is a gain of just about 0.5%. Wall Street ending the week on a positive note. Stocks hitting records amid a solid earnings season and hopes for trade deals. So the S&P right now at 63.94 and a decimal, again up by 0.5%. And to be sure, that is a record. The Dow up 227, up 0.5%. NASDAQ up 84. That is a gain of 0.4%. The Mag 7 index pushing higher as well, up 0.6%. Russell 2000 index of small cap shares taking part in the rally, up 0.4%. 10-year 4.38% with a 2-year 3.91%. A retreat for gold down $29 the ounce, down 0.9%. And West Texas Intermediate crude just above $65 a barrel, lower now by about 1.4%. So the Dow, the S&P, NASDAQ all advancing. Sarah Hunt is Chief Market Strategist at Alpine Woods Capital Investors. And on surveillance this morning, she offered up this advice for investors.
Problems have been when people get so nervous that they get out and then they have trouble getting back in again. And I think that what you tell people is, yes, there's some volatility. This is why we've done X or Y, either safing up your portfolio to work on your risk profile. But you have to be careful about getting so worried that you get out, because getting back in, as we've seen in the last 45, 55 days, is really problematic when the market moves so quickly in the other direction.
Sarah Hunt of Alpine Woods Capital Investors. Intel shares now plunging by 9.4%. CEO Lip-Bu sparked concerns that he was more focused on cost-cutting than restoring the chipmaker's technological edge. Again, Intel right now down by 9.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Appreciate it. It's not just buyout firms that want a slice of the $12 trillion pool of retirement savings in 401k and other defined contribution plans. Their private credit brethren want in too.
I bet they do. Yeah. So when word spread last week that President Trump is keen to spur more private assets into retirement funds, the biggest direct lenders, Tim, were more than prepared. I mean, this has been, I feel like, in the works, a lot of conversations over the last couple of years.
I mean, how could they not want it?
Yeah. Everybody's been talking about private credit.
It's an opportunity for money to go into these funds. So we're talking KKR, Blackstone, Blue Owl, already set up partnerships with 401k managers. Trade groups and industry executives have also been lobbying officials in Washington and making their case to the public. It's all part of a long-running effort to expand private credit's reach. Back with us for a check on this and more when it comes to private credit is Christina Paget, Associate Managing Director, Head of Leverage Finance Research and Analytics over at Moody's. She joins us from the Catskills. From your perch at Moody's, where you look at research when it comes to leverage finance and analytics, how do you look at the possibility of private credit becoming available to 401k and other defined contribution plans? What would that do?
Well, it depends how it's done, right? And so from the perspective of the retail investor, you want to make sure that there's broader reporting, that there's more transparency, some of the things that haven't been necessarily incredibly consistent with the way private credit operates. So private credit will probably have to change somewhat if it becomes more available to a retail investor. Some of the other concerns that we have are on the other side of the coin, where if you actually get all this additional capital, do you have sufficient assets to apply that capital to in the right time horizon? So there's finding the right assets, and then there is educating the new consumer of private credit, the retail investor, which tends to be a much less sophisticated investor, and one that has different needs than an institutional investor, particularly insurance, right? There's a big difference between an insurance company that's a long-term investor and a retail investor that thinks retirement, but then has other events in their life that may interfere with that goal.
I'm getting some very heated instant messages, IBs, on the Bloomberg terminal from a listener viewer right now about this. He argues that it's terrible for 401ks. And he says he's curious why you think private credit is so excited to get retail involved.
I would say it's pretty clear why private credit would be interested. They have been seen as sort of a slowdown in their ability to raise capital on the institutional side. They're growing bigger all the time. They see opportunities. So this is another, for lack of a better word, bundle of cash to invest. And if you think for a moment about why there's this need for capital, there are some tailwinds to the industry, meaning that both Europe and the US is looking to grow capital formation. There's deglobalization, which actually encourages some onshoring and investing in onshoring. And then in Europe, you'll have additional defense spending. So there are reasons why there's additional capital that needs to be deployed. The difference is how private credit operates for institutional investors versus how they might operate within a 401k kind of dynamic.
And not only how they operate, but also what products, what private credit products become available to that. I'll just go ahead and say it, like a less sophisticated audience, group of people, a clientele. Like how do you protect that mom and pop investor who's trying to save for retirement from something that might not necessarily be as, I guess a financial advisor might say, prudent as a low-cost index fund?
Well, certainly it may not be as conservative as a low index fund, and it will be more pricey probably, right? Your fees will be higher. The offer is that returns will be higher as well. The things that will have to change for this to sort of happen smoothly is that you will need to do some more educating, and it doesn't mean that every 401k investor will be engaged with this, but you also will probably see changing in reporting requirements. Regulatory environment has been looser lately, but in general, we expect to see better reporting, more transparency when you offer something to the retail investor, and it's hard to judge that in advance because we haven't seen what that looks like.
Christina, what would you like to see? Moody's, right? Like your rating, you guys, have to determine the security, the risk aspects of various, financial instruments. So what do you need to see? What would you want to see to give it more transparency, and so that there are maybe some more assurances or insurances for retail investors, but at the same time, it's a different marketplace.
Yeah, and I don't really know that we're entirely sure how it will evolve. For example, one of the things that private credit experienced advantageously was the illiquidity of the product and the complexity, right? That gave them an opportunity for premiums, and some of those companies actually preferred to be in a private market. So those dynamics are going to inevitably have to change if it's an offer to a retail investor. So you might find something that's in between what we're looking at today. Maybe the returns won't be as high, and maybe the complexity won't be as significant, and maybe you'll be able to have clearer reporting guidelines. That being said, none of this has really emerged yet, so we are still watching it pretty closely. And from our perspective, one of our fundamental assessments of private credit that gives us concern is the opacity in the sector. So that's something, and also maybe, the fact that it hasn't been tested. But there are advantages to the sector, and that has been the patient capital story, right? You'd rather have long-term capital invested in some of these projects. If the 401k investor understands that this is a longer-term investment and that it isn't something that they can take in and out, it may work for them as well.
Yeah, no, I totally get that. Hey, one of the things, and I think about people who are listening, and forgive me, and this is with all due respect, but I mean, you're a credit rating agency, and we think about the financial crisis and things that were missed by the rating agencies. How do we ensure that you guys and everybody else get it right, if indeed there is more oversight and that you are able to have some way of really tracking risk when it comes to private credit investments?
Well, I think we're doing our best to highlight the various concerns as we see them. We have insight into many of the institutions from different angles. So our team that is following the insurance companies, they can look at an insurance company, see their exposure to private credit alongside the asset management team that's looking at Apollo and what Apollo is actually doing. So we have ways of sort of triangulating, hopefully, what's going on in this market. I think everybody in this business is sensitive to reputation risk. That being said, being able to call the next bubble, that's not something that most of us are confident we're going to be able to do in advance, right?
It's interesting. And when you say that everybody has some responsibility, anytime we talk to anybody in the world of private credit, they basically say, hey, listen, if we're doing a bad job, we're not going to get funds and we're not going to get, we can't raise another fund or get more money to invest. Having said that, our own Sonali Basak caught up with Harvey Schwartz, the chief executive of the Carlyle Group, and she asked him about, risk in the cycle. Do you worry maybe that this industry could fly away a little bit if there isn't a bigger set of eyes on it? And so he said, do I think we could have a bad credit cycle? Sure. The question is it systemic in that it actually triggers a broader crisis? Banks have failed, but we haven't seen credit funds fail. And I guess we would all add, yet. Is there an assumption on your part and your team's part that at some point there's going to be something where we see some problems, or not necessarily?
Well, I think it would be hard to imagine that we're not going to see future challenges in the space. That if you think about the strategy here, they are adding leverage, right? And that makes businesses more fragile in a downturn. So the downturn can happen for any number of reasons, right? We've seen it as a consequence of a health crisis, meaning the pandemic, or more sort of financially oriented crises. One of the things that we thought was beneficial about private credit was that insurance companies, institutional investors, they tend to be more patient, and so that reduces the volatility during the period of a downturn. Some of this locked up capital is beneficial. And I think that's why perhaps your Bloomberg texter is saying this doesn't feel like that. And so that's something that we are watching quite closely, because asset liability mismatch is probably one of the major concerns that we have around this market. As it evolves, it's actually been a benefit today.
Great to get some time with you. It's a space that we love talking about. We cover it. We keep increasing, I think, our coverage of the private markets here at Bloomberg, as kind of the rest of the world does as well. Christina, thank you so much. Christina Paget, she is Associate Managing Director, Head of Leverage Finance Research and Analytics at Moody's, a great voice on this space. We're watching the markets. Looking like another record for the S&P 500.
We drive to the close next. It's Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P at a record and just 6 points away from 6,400. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are in the green, with the S&P cash up about 0.5% to a fresh record. The NASDAQ is up 0.3%, and taking a look at the Dow, Goldman Sachs, Nike, and UNH leading, with J&J, Chevron, and IBM under pressure. Centene is up nearly 6% after initially dropping on this morning's numbers, and Charter Communications next its biggest intraday fall ever after second quarter results disappointed. In tech, Microsoft is investigating if a leak in its alert system led to the recent Chinese hack. And in deal news, LVMH is selling Marc Jacobs for a predicted $1 billion. Wrapping things up, gold and oil are slumping, and Trump has landed in Scotland and will meet with the EU's von der Leyen on Sunday. All yours, Charlie.
All right, we thank you very much. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just coming up on about 19 minutes to go until we wrap up trade on this Friday, getting ready to wrap up the day as well as the trading week. You've got a Dow Jones Industrial Average that's up about 0.5%. Same story for the S&P 500, another record there, up 30 points, 63.94.14 is the last print. And looking at the NASDAQ 100, up about 1/3%, up 78 points. I keep thinking about the conversation we had earlier in the week with Gina Martin Adams, who runs our equity here, and it's just like the market seems to be just kind of maybe possibly consolidating. All right, let's head to Ireland. That's where we find President Trump. Scotland.
What is missing in the UK deal that you have to work out?
Nothing. We I think it's more of a celebration than a workout. It's a great deal for both, and we're going to have a meeting on other things other than the deal. The deal is concluded. Well, that's what he does. I mean, that's fine if he does that. That's up to him. It's not up to me. I'm with the United States. I'm not with France.
And the humanitarian situation in Gaza, we hear very dire warnings about.
I think it's terrible what happened with Hamas. They tapped everybody along, and we'll see what happens. We'll see what response Israel has to that. But it's getting to be that time.
Are you concerned about the end? There's a 50-50 chance of a deal. What is left to work out? What are the final sticking points?
I don't know. With the European Union, I think we have a good 50-50 chance. That's a lot.
What are the sticking points?
Well, I don't want to tell you what the sticking points are, but the sticking points are having to do with maybe 20 different things. You don't want to listen to all of them. Yes.
What advice are you going to have for our Prime Minister about free speech? It's very important to people here.
Well, it is, but I like your Prime Minister. He's slightly more liberal than I am, as you've probably heard, but he's a good man. He got a trade deal done. And, they've been working on this deal for 12 years. He got it done. It's a good deal. It's a good deal for the UK. So, no, I'll be seeing him tomorrow, I guess, tomorrow evening. And this is our wonderful ambassador, as you know. He's doing a good job. He's a very, very successful man. He'll be doing a good job.
The Royal and Ancient says you're going to have to improve infrastructure at Turnberry to bring the Open back. Is that something you're going to
I don't know. The best course anywhere in the world is Turnberry. The players all want to be at Turnberry. Everybody wants to be at Turnberry, so we'll see how that works out.
The infrastructure needs to be
I think the infrastructure and the course is good. In fact, the Royal and Ancient, I don't know if you're aware of this, they spent a lot of money, hundreds of thousands of dollars, or probably into the millions of dollars, and they've laid all the wire for television and for electricity under the holes of Turnberry. so that when the Open gets there, they have it all done. They paid for that.
But we're talking about roads and railway stations.
I don't know. See, I don't know what you can do. All I can tell you is that it would be the best place anywhere in your country to have. There's no place like it. There's no place like Turnberg. It's the best, probably the best course in the world. And I would say Aberdeen is right up there also. Aberdeen's great. And while we're here, I'll be with my son, and he's going to cut a ribbon for the second course at Aberdeen, which is just about equal to the first. I mean, it's going to be a battle. It's, as you know, they're very highly rated. Yeah. And the second course is great. Sean Connery helped get me the permits. If it weren't for Sean Connery, we wouldn't have those great courses. No, I was never briefed. No.
Did you ask House, what are you hoping Todd Blanche interviewing Elaine Maxwell? What are you hoping that they get out of that?
I really have really nothing to say about it. She is being talked to by a very smart man, by a very good man, Todd Blanche. And I don't know anything about the conversation. I haven't really been following it. A lot of people are asking me about pardons. Obviously, this is no time to be talking about pardons. But a lot of people have asked about pardon. This is just not a time to be talking about pardons. Todd will come back with whatever he's got. You're making a very big thing over something that's not a big thing. You should be talking about, if you're going to talk about that, talk about Clinton, talk about the former president of Harvard, talk about all of his friends, talk about the hedge fund guys that were with him all the time. Don't talk about Trump. What you should be talking about is the fact that we have the greatest 6 months in the history of a presidency, according to a lot of people. And we had an amazing 6 months. And this is sort of an example of it. Now we're meeting with the European Union, we're also meeting with, as you know, the head of UK, Prime Minister, and I look forward to that. But we're meeting, in terms of a deal, we're meeting with the European Union. And that would be actually the biggest deal of them all if we make it.
Did you ask House Republican leaders to not vote on the resolution about releasing the files?
I was never involved in that. I'm focused on making deals. I'm not focused on conspiracy theories that you are. I mean, I watch you people. It's so sad. You ought to talk about the success of our country instead of this nonsense you talk about over and over again.
You've done an amazing job on illegal migration in America.
I have. Well, I say two things to Europe. Stop the windmills. You're ruining your countries. I really mean it. It's so sad. You fly over and you see these windmills all over the place, ruining your beautiful fields and valleys and killing your birds. And if they're stuck in the ocean, ruining your oceans. Stop the windmills. And I mean, there's a couple of things I could say, but on immigration, you better get your act together. You're not going to have Europe anymore. You got to get your act together. And we, as you know, last month we had nobody entering our country. Nobody. Shut it down. And we took out a lot of bad people that got there with Biden. Biden was a total stiff. And what he allowed to happen, but you're allowing it to happen to your countries. And you got to stop this horrible invasion that's happening to Europe. Many countries in Europe. Some leaders have not let it happen. And they're not getting the proper credit they should. I could name them to you right now, but I'm not going to embarrass the other ones. But stop. This immigration is killing Europe. And the other thing, stop the windmills, killing the beauty of your countries. Thank you very much, everybody.
All right, you've been listening to President Trump just landing there in Scotland. His trip obviously left earlier today from D.C., but a few headlines, and I think what's certainly most important is what he has to say about trade deals, because that is certainly what we are thinking about. In particular, he talked about the EU trade deal and that would be the biggest of all. We talked with our own Mike McKee about so many countries, of course, involved in the European Union, which makes it a trickier deal to be had, but nonetheless, the president saying he would be meeting with EU officials who said, we'll see if we make a deal, Tim, with the EU on Sunday. And he did talk about maybe there being about 20 sticking points to getting that deal done with the European Union.
He said, we'll see if we make a deal with the EU on Sunday, a meeting with numerous executives. He also said, stop the windmills. That's one of the headlines on the Bloomberg terminal before he ended his remarks to reporters there on the tarmac in Scotland. His message to Europe, when he asked that question, what is your message to Europe? His first thing he said was stop the windmills.
There's,
He's for a long time has spoken about his feelings on wind energy.
Exactly.
Doesn't like it.
No, exactly. This is certainly something we've heard from the president. We also should point out he did also, again, say that the UK trade deal has been concluded. He will be meeting with the UK Prime Minister this weekend. So again, the president landing in Scotland will be monitoring certainly his comings and goings. And you can check out the Bloomberg or Bloomberg.com for the latest on news from the White House and the president.
I want to bring in Michael Green over at Simplify Asset Management, where he's chief strategist and portfolio manager. They've got about $8 billion in assets under management. He joins us this afternoon from Philadelphia. I want to start where the president ended with the remaining EU sticking points. He said about 20 different things, though. He said the UK trade deal is concluded and he's going to make a deal with the EU on Sunday. From your perspective, how do you look at I don't want to call them trade tensions right now, but the negotiations that the U.S. is having with Europe? How important is that for the markets?
Well, it's not playing a particularly large role right now, as you know, right? The trade headlines are only modestly influencing the price action as we see it. What we're largely experiencing is an incredibly low volatility environment in which the level of implied volatility on things like options, et cetera, is basically expressing there's very, very few risks over the near term. That is creating a really profitable trade for people who are willing to take the risk or provide insurance to the market through the provision of options, and is in turn causing this sort of low, slow float upwards that we're experiencing in the markets as people are being drawn in to take advantage of that type of risk. I'm just not seeing much awareness or much response to actual trade headlines at this point. I think people have largely accepted that the U.S. is going to gain mostly favorable treatment from this on the good side, which is pretty much what I think we should have expected going in. I think there was a lot of excitement and concerns around a tail risk event of effectively huge responses and basically a giant trade war. The rest of the world seems to have at this point basically rolled over and said, you are the customer is right, and we're going to accommodate that. But the much bigger question now becomes, what is the overall impact of the loss of purchasing power? Because we are starting to see it hit goods prices. We are starting to see purchasing behaviors start to change a little bit. And that's the part that we just don't know yet, right? So we're going to have to wait to see what happens as companies have gone through the planning process and the uncertainty process. Remember that uncertainty doesn't inspire action. Uncertainty inspires planning or knowledge derivation. You don't come to the fork in the road and immediately take one of the two sides. You consider it. And we are seeing that. We are seeing corporations announce continuous restructurings. It is not yet showing up in any sort of flow in terms of the payroll numbers, et cetera. But that's what we have to wait for.
Okay. I want to move on a little bit to something that you note in some notes that you sent to our producer, Aria Gami. You talk about the price of the stock market, and you argue that we've got the most expensive global stock market in history. What type of risk is that for you?
Well, for me, ultimately, this is a question of, is it being driven by liquidity? Or, as you know, I spend an awful lot of time talking about the impact of the dominance of passive investing and the capacity that has to raise market valuations. Ultimately, valuations do matter. There's the old statement that in the short term, the market is a voting machine, and the long term, the market is a weighing machine. And the reality is that the pricing that we have for both the U.S. markets and now international markets, which have joined the fray as well, is that they are embedding an extraordinary amount of growth expectations, whether those are real or whether those are tied to currency debasement and excessive government spending is up to the eye of the beholder. But the simple reality is that weighing machine is at this point suggesting that the returns really do not look very attractive going forward at precisely the time that people are anticipating the highest returns.
Do you buy the bounce back that we've gotten since early April? And do you buy this record after record? Is it consolidating at a new higher level on the S&P 500 in your view, or do you feel like things are getting a little fluffy and overvalued?
Well, what we have seen in this rally off of the April lows has been the lowest quality, the most volatile stocks are the ones that are rising most rapidly. That's actually causing things like metrics of the most shorted stocks relative to the more broadly held stocks. Those indices are rising very rapidly in a manner that's not at all different from what we experienced in the immediate aftermath of COVID. To me, again, this is risk. This is telling you that we are slowly reducing the quantity of short interest in the market. That means there are fewer natural buyers if prices do correct. And at the same time, we are seeing tremendous increase in the use of leverage, whether that is through levered ETFs or whether that is through margin debt, which recently hit a new all-time high. We're just seeing very clear evidence that people are aggressively buying this reaction. We're seeing a return to the meme stocks, et cetera. All of that is telling you that the market is basically suffering from poor liquidity conditions that are allowing prices to move in a manner that forces people to take down risk if they're trying to run a balanced book. And we see this in the relative performance of hedge funds versus, say, very momentum-oriented or high volatility strategies.
So a VIX at 15, does that make sense to you?
I think, it makes sense in the context of what we're realizing. So, at the end of the day, volatility is always going to be a derivative of what the realized levels of volatility are. The potential for arbitrage against that is simply too high. And so, people paid a huge premium for protection in the April time period, and we largely have seen that taken off over the past couple of months. And again, that powers markets higher as people remove their desire to hedge. That effectively raises the long positions in markets, pushes them higher. And that does appear to be what we're seeing at this point.
Just 20 seconds. What scares you out there? Like, what would you see to make you say, okay, this is going to be the beginning of something that looks like a pullback?
Well, the thing that worries me most continues to be on the employment side. And so there we are seeing a very strong divergence between the household fears of unemployment or job loss and what we're experiencing in things like the initial claims, which traditionally have been leading indicators for that. I've spent an awful lot of time digging into the details of this stuff. And at the end of the day, I think part of what is going on is that we are simply not counting things like Uber, et cetera, as unemployment, even if it feels.
All right, we got to run. Thank you so much. Quick headline, Mark Zuckerberg announcing Meta Labs chief scientist, AI lab chief scientist, Shengji Zhao will be that person. All right, right now, over to the close we go.
Closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, taking you through to that closing bell with the global simulcast. Carol Massar, Tim Stenovic join us from the radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. On a record day and a record week, Carol Massar, despite all the volatility in between.
Yeah, absolutely. A lot of volatility. We're coming off our best levels of the session. We caught up with Rob Kaplan, former president of the Federal Reserve Bank of Dallas, now vice chairman over at Goldman. We talked about pressure on the Fed. We talked about next week's Fed meeting. He says he's not ready to conclude that it's time to act in July, which is pretty much what everybody's thinking. But he said maybe potentially it would be right to see a Fed move come September.
Yeah, we'll see what happens in August and what we hear from Jackson Hole. Certainly next week, the Fed on our radar. But what about Meta platforms? What about Apple? What about Amazon? What about Microsoft? They are all reporting next week as well.
And everyone's going to be looking at how much they commit to CapEx. Alphabet committed more, so there are some question marks about whether that's going to be good or bad. Is anyone paying attention to Michael Hartnett's warning about a potential bubble risk in equities? It feels like people are looking at that and saying, nah, not right now.
Yeah, absolutely. And we talk about the meme stock mania, which has calmed down a little bit over the last couple of sessions, but still, you're seeing some pretty healthy gains out of a lot of companies that, let's just say, to be diplomatic about it, don't necessarily have the fundamentals to back it up.
I keep thinking about Gina Martin Adams earlier in the week, Tim and I talking about her. These small moves that we're seeing, that maybe that could be a sign of some consolidation at higher levels for stocks, but time will certainly tell as we get through earnings, Romaine.
All right, well, at least for the day and, well, for the week as well, it is a pretty bright day. 340 stocks roughly in the S&P are higher on the day, and that's enough to take it to another record high, closing just below that 6,400 level, up more than 25 points or about 0.4% on the day. The Dow Jones Industrial Average closing out the day higher by about 0.5 percentage point, and that's going to be good enough for a gain on the week of about 1.3%. The NASDAQ 100 and the NASDAQ Composite each rising about 0.25% on the day, 1% on the week, and the Russell 2000 participating as well, 0.4% on the day, and on a weekly basis, Carol, is going to close out higher by about 0.9%.
All right, back to the S&P 500 I go, guys. And we had some fairly broad-based buying today. Scarlett, 332 names in the S&P 500 to the upside, 167 losing ground for unchanged, at least as we settle in here.
All right, and let's take a look at what's leading the gains today. It's really a mix of cyclicals and, of course, big tech. You have materials and industrials, each gaining about 1%. Consumer discretionary up about 0.8%. And then on the flip side, energy lower by 0.4%. Communication services moderately lower.
All right, let me get to some of the individual gainers, if I may. And I feel like these are perhaps all things in Romain's life, but we'll have to see if that's true. Let's start with Deckers, because that is your #1 gainer in the S&P 500. I definitely see some Uggs and some Hokas in his closet. Stock was up as much as 20% intraday, finishing the day with a gain of about 11%. But as I said, #1 gainer in the S&P. Net sales for Ugg and Hoka surpassing analyst estimates in the fiscal first quarter. Ugg sales rising about 19%. Hoka sales increasing roughly 20%. Bloomberg Intelligence, our own analyst, saying that Ugg's momentum further validates their conviction about the brand's health, and Hoka outperform expectations as new product upgrades fuel demand. All right, also check out Romain's home. You might find a Yeti or two in there. We have that stock up about 5.6% here at the close after a Betaville uncooked alert says the outdoor products maker may have attracted some takeover interest. You might remember back in May that the stock rose after Jefferies said that the consumer products company stands out as an attractive target for private equity. The report, though, in today's trade, citing people following the situation, identity of a potential buyer is unclear, though some of the people suggest a PE firm may be interested, so maybe a private equity play. And then I just
Wouldn't it be great if like Deckers just bought them? You carry around.
What are the synergies?
Your big gigantic mug with your
hydration capsule.
Actually, I think people who wear Uggs probably carry Yetis. Can I make that assumption?
No, they carry like Stanley Cups, right?
All right. One more thing that might be in Romain's driveway, a Tesla. Probably not. I'm thinking you're not a Tesla guy.
Who has a driveway?
Are you a Tesla guy?
Well, first of all, yeah, I live in Manhattan, so no, I don't have a driveway.
If you have a driveway, then well, I'm going with you to the Hamptons.
Yeah.
If you got a driveway.
Maybe you have a driveway for a Tesla or garage because you need to charge it.
And who drives in the city? Come on.
All right, we all drive in the city. I drive in the city. All right, so
Tesla
Tesla was a top gainer. #2 gainer in the NASDAQ 100. Stock up about 3.5%. We know it was sold off yesterday following Tesla's report that came late Wednesday and Elon's warnings. Analysts, though, raising price targets for Tesla. Since it reported earnings, 8 changed price targets. The average change was up about 3%. 5 raised price targets by an average of almost 9%.
Wow.
3 cut their price targets by an average of 7%.
Wow.
And 4 analysts downgraded their investment recommendation. None
All right,
upgraded.
I hope yours are better.
Hey,
I actually got the 2 worst performers on a
up with a
percentage
theme for
basis
you.
in the
Wow.
S&P 500. Let's start with Intel. Shares down 8.5%. You guys know what happened yesterday after the bell. Intel CEO Lip Bhutan sparked concerns that he's more focused on cost cutting than restoring the chip maker's technological edge. Check out what he said on the call. Quote, "I do not subscribe to the belief that if you build it, they will come." He was referring to future spending and the spending under his predecessor just over the last couple of years in building these facilities, some of which they stopped building and they slowed down construction.
I am curious, though. I know everyone's taking that as a negative, but is that potentially maybe a positive? I know there's been so much talk about how all these other companies are just spending all this money willy-nilly and not really seeing a return from it. Maybe a more pragmatic approach
I feel like Ian King said you got to spend, though, right?
Yeah, I mean, think about this. This is Intel. This was like the king of chip making back in the day.
Yeah.
It's a cyclical business, but Intel has completely missed out on this cycle. I mean, yesterday, this was before the bell came, before the earnings, this was a $100 billion company. It's now about a $90 billion company. The question is, what does it look like in its next iteration, and how does it compete with the big players out there?
I mean, the Bears would say that comment sounds like he's managing for a decline or through a decline rather than managing for a recovery. right? Or for growth.
I mean, that's what exactly, and that's why I think you saw the reaction today. So we'll have to wait and see. Remember, he's still a new CEO, so he's got some time for a turnaround. But we've been saying that about the last two CEOs as well. I think it's fair to say. Hey, also Charter Communications. This was the worst performer in the S&P 500 today. It had its worst single day ever, down 18.5%. This after the company said it lost 111,000 residential high-speed internet customers in the quarter that ended at the end of June. It was more than analysts had predicted. They're facing pressure from the rise of 5G from mobile companies and also fiber home internet offerings as well. And finally, taking a look at Pinnacle Financial Partners, down 12%, along with Synovus, down 12.5%. This after the companies agreed to an all-stock transaction valued at $8.6 billion. It'll combine these two banks in the U.S. southeastern market, but investors not liking the looks of this, at least today.
All right, let's take a quick look at yields. We did actually see some movement there, relatively modest movement to be sure, but to the downside, basically about a 1 basis point across the board here. And it gets to this idea of a little bit of stasis right now going on in the yield spaces. Everyone really tries to game out, guys, where we go next with rates, particularly in light of all the pressure from the White House on Jay Powell, which we all were here live on air yesterday.
Sometimes with hard hats, sometimes without.
Well, the hard hats just was like, I mean, chef's kiss. I mean, honestly, it's the best television we've had in years.
That moment in time is just like seared.
Yeah, absolutely.
Memory forever.
Do you think it would have been as funny if they weren't wearing the hard hats?
No.
No, exactly. it was only compelling because of hard hats.
No, the paper made it. The paper was what made it compelling to me.
Has anyone seen that paper? Is that going to be like in the presidential library like years from now?
In the Smithsonian.
And was anything on it? Was it like the grocery list?
Yeah,
bread,
Powell
milk,
referred to it. He said the reason the cost has gone up, in your view, to more than $3 billion is because of the additional building that, construction finished, he said, 5 years ago on this, that he was now including in this assessment.
Yeah, and he was talking about basements and garages and things that, I don't know. I mean, I know he's a real estate developer, but,
it's too bad SNL is not on right now because I feel like they would have had a field day with this.
I mean, I feel like we're post SNL at this point. This can't even be lampooned, right? I mean, it's like reality is now.
No, it's
the
perfection already. Like nothing even needs to be done.
In our world, I mean, we follow the Fed chair very closely. We follow Fed speakers very closely. But to me, yesterday, in talking, I went out to dinner with friends last night, and they were talking about this. And these are people who don't live in this world. They saw this. This was something that entered the mainstream conversation.
Yeah, I am curious about that. I had several people message me who aren't at all interested in finance in any good way that showed me this video. They're like, "Oh, have you seen this?" And I was like, "Yeah, I lived it." But it gets to the question: do we want that? I mean, like, at what point does it become where it's just too much, and it's just it hurts the independence of the Fed, and more importantly, it hurts the ability for them to do their job and do it in a way that's responsible without public pressure.
And I will say Rob Kaplan, former Dallas Fed president, said that basically what's going on inside the Fed is the message of like, put your heads down, let's focus on the fundamentals and let's think about what's the right monetary policy, that's probably what's going on.
Until you're let go or forced out.
He didn't think so. You asked him.
Yeah, he said he would not think that the Fed chair will leave before his term is up in May 2026, but remains to be seen whether he'd stay on the Board of Governors until January 2028.
You know what would be great TV if you and Carol did your show in hard hats.
You got to make sure the hard hat fits properly.
I have been on
Jay Powell's
air.
hard hat was too big.
I have been on air in a hard hat. I've driven a Caterpillar tractor, and
okay, I will look that up.
I've done photographic proof of this.
I'm going to look that up during the commercial break, Carol, which we should have taken about a minute ago.
All right, fine. Got to run.
Yeah.
Have a good weekend.
Bye.
All right, that's it. Our cross-platform coverage, folks. Have a good weekend. They're going to continue on TV. We're going to continue on Bloomberg Business Week Daily. We will see you again, same time, same place, on Monday.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. That is Carol Masser. I'm Tim Stenivek. And we're talking a lot about the Fed, of course, but there's also a big media merger that has been on the radar of a lot of folks for, at this point, Carol,
a while.
Dare I say, close to a year, more than a year?
Long time.
Yeah, it's pretty wild. Paramount Global's merger with Skydance was approved by the FCC. It backed the deal after the Trump administration extracted concessions on the news and entertainment company's political coverage and diversity practices. Back with us is Felix Gillette. He's Bloomberg News media and entertainment editor. He's also the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. He joins us here in the Bloomberg Interactive Brokers studio. We're going to talk about South Park.
Yeah.
We're going to get there. It's what everybody wants to talk about for some reason.
Yeah, once you've seen it, you can't unsee it.
Can't
so
unsee
we have
it.
to discuss it.
Is that AI? Was that AI?
It was.
Okay.
Yeah, it was like a AI deep fake, I think is what
Wow.
Yeah.
Well, let's talk about this now.
Yeah.
Let's talk about this now because this is what everybody wants to hear about. So, correct me if I'm wrong, but this was season 27, I think. Of
first episode of the 27th season.
And this is a Paramount-owned property.
Yes, and they've just gone through these very contentious contract negotiations about what's going to happen to the streaming rights for South Park, the first 26 seasons and for the next 5 years. It's been very contentious. All of a sudden, they finally hammer out a deal that pays, Trey Parker and Matt Stone, the creators of South Park, huge amount of money, right? Like multiple billions of dollars for like the next 5 years. And yet, right after they finish inking that deal, they come out with this first episode that airs Wednesday night on Comedy Central, and it just absolutely torches not just President Trump, who they're need the approval for this merger still, but also the owners themselves, hilariously.
Yeah, I mean, I'm trying to get our head around this.
Yeah.
Like, do they not know that was going to get a little attention?
I mean, this is what they do, right? They kind of, poke everybody and they go right up, they can work right up to deadline. It's kind of ripped from the headlines. They had all the news, all the drama leading up to this merger approval, and they just kind of went in there and just, poked everybody with a stick.
And the FCC, the president kind of knew this was coming. Paramount had given them a heads up that, hey, just so you know, Trey and Matt are going to do something.
Yeah, and the owners had seen, everyone involved had seen the episode, and apparently the major sticking point was, I guess, their depiction of, how do we say this? I guess the president's genitalia, and I guess the solution was they put eyeballs on it and made it into a character, and apparently that was enough.
I haven't seen the episode. I haven't seen it. Have you seen it, Carol?
No, it's so funny. This morning, I went down like some rabbit holes. I was watching a lot of Jon Stewart and like everybody's reaction to like
another Paramount-owned
another
property.
parent, right? And then obviously about Stephen Colbert and the canceling of the Late Show and stuff. And I was trying to like find the episode, and I just didn't have time to like watch it. But I was reading about it and just all the things. I mean, help me understand. Like this deal gets done. I'm just trying to understand what's going on probably inside Paramount. Are they like, oh my God?
Yeah.
Because it does feel like there's a lot more control over media right now and what comes out.
Yeah. And
like, are they sweating right now that something's going to happen?
I mean, I think in some ways a lot of people are relieved because they see this as, oh, they're going to let something that's this incendiary and this critical of the president is going to air, then maybe the rest of us will be okay. Now, that said, a lot of the restrictions and a lot of like what's happened is more on the news side. So it's like, the lawsuit by President Trump against CBS had to do with 60 Minutes and their editing of the interview with Kamala Harris, and they settled that suit, even though legal scholars were like, there's basically no merit there. So I think on one side, maybe you're seeing like a little bit of a difference between the entertainment side of Paramount versus their news operations.
As part of the accord, Skydance vowed to ensure that the new company's programming embodies a diversity of viewpoints from across the political and ideological spectrum. This according to what FCC Chair Brendan Carr said in a statement on Thursday. Paramount will employ an ombudsman for 2 years to evaluate complaints of bias. Yeah. What does that look like for a property that owns CBS News and that has 60 Minutes?
Yeah, I mean, I think that's what we're going to find out, and I think it is a little bit concerning. I think the longtime executive producer of 60 Minutes stepped down over this. The head of CBS News left. There's been a lot of concern inside of CBS News about potentially restrictions on what they can report and how that's going to be edited. We're going to see, because now you are going to have David Ellison as the owner. His father, Larry Ellison, co-founder of Oracle, is a Trump supporter. A lot of this is to be determined how that ombudsman's going to work. And what kind of restrictions they're going to put on news gathering operations.
Felix, do you think there's some significance in kind of this oversight or ombudsman for 2 years. It's not like it's, you know what I mean?
Yeah. I mean, I think it's we're going to have to see how it plays out in practice. I don't think it's going to be easy to get, 60-minute journalists to suddenly pull their punches. I mean, that's not what they do. They're very seasoned. The talent there has had a lot of power in the past. Trying to get them to suddenly do something different, I think is going to be very hard. There's been talk about, they're going to hire Barry Weiss or maybe, buy the Free Press. But, and Barry Weiss is very well liked by, in kind of Silicon Valley, libertarian circles, conservative circles. But also, she made her name bouncing out of the New York Times after having this big fight with the New York Times staff. Like, I don't think it's going to be any easier to get in there and somehow get along with, like, the 60 Minutes staff, So I think it's going to be a point of contention and friction in the next 2 years.
And 60 Minutes and the Free Press are not exactly complementary publications in the sense of, like, what they do.
Well, and we've seen this before. I think, I had to look back to see how long ago this was, but do you remember, was it back in, I don't even know now. I'm looking for a date. But RJR Nabisco and the smoking coverage that CBS News did too. And then that was a whole big issue where it felt like, I think a story was pulled. I think there was concern about advertising and so on and so forth. Like it was just another sign where kind of the corporate side of the business got involved with the kind of purity of the journalistic side.
I mean, there's been so many sagas with 60 Minutes and CBS News over the years. Dan Rather famously ended up suing CBS for over, a fight about his reporting of, I guess it was President Bush's military record, the Texas Air National Guard. I mean, there have been all these sagas in the past. This is not the first time this is kind of cropped up.
So is this it for Sherry Redstone? Are the Redstones done with the property?
I think they are finally done.
That's it?
Yeah.
That's
and
an end of
the
an era.
Redstone, and probably a couple 2 years too late if you look at the value of, what Sherry's stake is worth.
Should we expect more from South Park?
Always.
Can I tell you guys? So real quick.
What?
When I was in 7th grade, South Park was blowing up as this new phenomenon, and TV was completely different then. This was many years ago. A local news reporter came to my middle school to interview students, 7th graders, about South Park, and I was in the San Luis Obispo Telegram Tribune talking about South Park. It was like my first.
And what did you say about it?
Well,
I want to know what you said.
This was the pull quote.
What?
It teaches you about the news in a very interesting way.
So
7th grade Tim Stenevec.
And here we are.
And here we are.
Did you say it makes me laugh a lot and like...
I mean, the politics of South Park are funny. Also, if you look back just a couple years, they were like, "Oh, these are libertarian. They're hitting the, they're conservative."
Save Tim answer.
They interviewed my parents too.
Save Tim. Billy Gillette, thank you so much. Bloomberg News Media and Entertainment editor. Also, his book, It's Not TV.
4:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks wrap up the week at a record, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, NASDAQ 100 index, Russell 2000 index, all advanced today. S&P up 25, finishing at a record 63.88 today. That represents a gain of just about 0.4%. In the year-to-date column on the Bloomberg, we've got the S&P so far this year up by 8.6%. The Dow up 208 points this Friday, up 0.5%. NASDAQ up 0.2%. NASDAQ Composite Index up by 50 points today. Our Mag 7 Index up 0.5% ahead of earnings next week from companies that include Apple. 10-year, 4.38%. The 2-year, 3.91%. Gold down $31 the ounce, down 0.9%. West Texas Intermediate crude down 1.5%, 65.04 a barrel. And Bitcoin down 1.7%, 116,740 on Bitcoin. Intel down 8.5% today after CEO Lip-Bu Tan sparked concerns that he was more focused on cost-cutting than restoring the chipmaker's technological edge. Again, Intel down 8.5% after earnings. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. I just want to do pursuits. And by do pursuits, I mean do everything that Kate Crater and Chris Rouser get to do.
I just want to live in the pursuits world.
Yeah, well, fortunately, we get to sometimes.
Yeah, sometimes.
And all of you get to as well when you read Bloomberg Pursuits on the Bloomberg Terminal and in Bloomberg Business Week.
Which you should. Because there you will find a story. Well, here, let me just set the backdrop. Julia Child, Gordon Ramsay, Emeril Lagasse, Rachel Ray, they are just some of the many celebrity chefs that made a living cooking on TV. Well, there's a next generation of chefs that are now turning to YouTube and TikTok to learn new skills and establish their culinary reputations. We want to talk about that. We want to talk about a lot more, too. With us is the editor of Bloomberg Pursuits, Chris Rouser, and Bloomberg Pursuits food editor, Kate Crater. So I want to kick it off with you, Kate, because I know we had a little tease for our weekend. We talked about this a little bit already with you, but YouTube is just a great way to learn how to cook.
It's a great way to learn how to cook, and it's also a great way to open a restaurant, it turns out. So you've probably watched like a trillion YouTube videos and know how to maybe slice a carrot, slice an onion. Some chefs are using it as a way to refine their skills, learn brand new skills like butchering a tuna. And in a place like London, they learn how to make pizza and then literally open up a pizza restaurant.
Can we talk about the butchering of the tuna? Because it was a huge tuna. Cool? Yeah, tell us what that is all about.
It's a terrific story. There's this really great chef in London called James Lowe who ran a restaurant called Lyle's that was literally one of the best restaurants in London. And he knew his British food inside and out. He had no idea how to butcher a tuna. He got his hands on a tuna, 400-pound fish delivered to his restaurant, realized he didn't know how to do it, how he was going to cut it up, a very, very expensive piece of fish. So beforehand, he had all the chefs, and he did watch hours of Japanese butchering tuna with samurai-like swords. It turns out they didn't even have the right knives to do it. And lo and behold, he learned how to butcher a tuna, and then he got 3 or 4 of them and started making these miraculous tuna dishes. But to learn that skill, rather than buy a bunch of weird cookbooks or bring in an expert, he watched YouTube videos, literally YouTube videos, to learn that craft.
Chris, what I love about this is YouTube videos for instructional purposes is something that I do as the parent of kids who can't build anything that comes with, instruction manuals.
Help me.
But it's not something that, just amateurs are using. This is something that real professional, serious chefs are using, not just to build their brand, but also to really supplement the idea of education in a more traditional way.
Yeah, everything I know how to do on Microsoft PowerPoint, I know from Google. How do I do it on Microsoft PowerPoint? And I feel like what's great about this for chefs is that a lot of this would require going to culinary school or staging somewhere very, very far away. And while, those things are still so important, learning a thing that you're going to do for just part of your business or something that's really new and exciting that you want to start right away, suddenly there's this tool that is very viable and very useful.
You know what I find too interesting, Chris, is that I feel like chefs, and Kate has this in the story, that they didn't used to share things like recipes. My husband likes to cook. There are certain recipes he will not share. He's like, if you want to eat it, you got to come and eat it at my place. But it's just like, but I find it interesting that YouTube kind of is like, here, see what we're doing, learn how to do it.
Yeah, like the recipe for Coke, the greatest secret in both history. Yeah, and it has changed. Social media has broadened the footprint of what people feel like they can participate in. So you feel like you're participating in restaurants that you'll never go to because you live far away, but you're watching videos about them on TikTok. And the same thing goes with dining. It's all much more about sharing techniques, sharing recipes than it ever has been before, and it kind of enriches everybody.
Well, speaking of dining, it's a special day because Kate Crater is here in our Bloomberg Interactive Brokers studio. Usually you're in London, but you're back. It's been a few years that you've lived there. And one thing that you write about for the current edition of Bloomberg Pursuits is the way that New York City vibes, culture, food have actually permeated London's food.
I'd like to think that I'm responsible for that, but I think it's an even bigger shift
You
than
are.
me. Thank
It's
you, Carol.
happened at the same time, okay?
Yeah, not a coincidence. But it's funny because Brand USA is not huge in every part of the world, and tourism is down. I think there's going to be, by the end of the year, there'll be 2.5 million less visitors to New York City, international visitors, than there were, they were expected to have come.
It's like real numbers.
Real, like literally, it makes a difference. But over in London, that New York vibe is going strong. People love it. And it's manifesting in some really cool ways. Like there's oceans of martinis being poured. And martinis are, believe it or not, a drink that originated in New York City. There's all these like oyster platters. There's hamburgers on fancy menus that you wouldn't have seen them before. There's steak. And there's also just an energy, whether you know it or not, when you go and eat in a New York City dining room, there's an energy. It's fun. It's like a party. Like people's houses and kitchens are small here, and they tend to entertain at restaurants. And so now London has adopted that energy, and I, for one, am here for it.
It's so fascinating, especially against the backdrop of it feels like we've had some of our strategists go over to like Europe or London and kind of apologize for being an American. Like, so it's interesting to see this happening, especially in London where it's such an international public.
Yeah, no, I think in general, Londoners and Brits are not like, oh, you're from New York, welcome. We're so happy you're here.
Interestingly enough, we haven't been sent over there.
No, why is that?
I don't know if we're welcome.
What did we do? What?
Kate, are they calling them chips or French fries?
That's a good question. I think it might still be chips. So not 100% New York, US, but getting there. We're getting there, baby steps.
I mean, pizza in London, good?
Pizza in London has gotten great, Carol. Like when you come to visit me, finally, we're going to go eat some pizza and you're going to be delighted. It's gotten really good.
Actually, about a year and a half ago, I went over to visit my daughter who was in London, and we did visit Kate, and we did pick her brain for restaurants.
What?
And we did have pizza. I can't remember
where.
where.
Okay.
I don't know that it was placed, but anyway.
Okay, so maybe next time we go visit Kate Crater, we will bring a nice gift, like an expensive watch.
Oh, okay. We're talking... Yeah, what's going on with green watches? I mean, come on, Chris.
Oh my God, you guys are speaking my language. It's not just any green. There is a current trend among luxury watches for mint green watches. It's a kind of a hazy color that could be pistachio, could be slate green, could be seafoam green. And watch brands from Oris to Richard Mille to Rolex are all like happen to release them at once, and now it's like the hot color and everybody wants one. It's a color that a few years ago nobody would have even looked at on your wrist, and now people are waiting in line outside of Rolex stores to get them.
Chris, how classic is a color such as this on a timepiece that you're meant to keep for your entire life? Like in a couple of years, if somebody buys one of these things, are they gonna not want to wear it because this color is out?
That feels like a loaded question, Tim. I actually happen to love this color, and when I saw it on a particular Gerard Perregaux watch at Watches and Wonders, the trade show earlier this year, I thought this is it. Like this, if I had $70,000 to spend on a watch, which I absolutely will never have, I would buy that watch. It's not a loud color. It's not like a fire engine red or a neon orange or something that kind of feels like of a time with an era. It is kind of a timeless color. However, you got to really love it. To have a bold color of a watch, it has to really match your vibe for sure.
While we have you, there's another story in Pursuits about the best movies, TV, music, books, and theater arriving in August. What should we be looking forward to, Chris?
Yeah, we got some real highs and lows here, guys. I personally am very excited for Freakier Friday, which is the remake of Freaky Friday, starring the stars from the 2003 version, Jamie Lee Curtis and Lindsay Lohan. I don't know how excited you guys are about that one.
We're all shaking our heads. Sorry.
Chris. Oh, okay. This is why I need to be in the room with you. So I can tell you. There's a Jason Momoa series called Chief of War, which is about a warrior in Hawaii in the 18th century who's tried to unify the islands sort of in the face of impending Western civilization. Stevie Nicks is on tour, which I know some of you will hear about. We're very excited about that. There's a great new James Baldwin biography, which there hasn't been a biography of that author in many, many years, certainly nothing major. And this is exciting for fans of his. I am currently reading a book that's called Noble Madness, which is about, it's a little hard to explain, but it's about why we view people who collect things as being like slightly insane. And so like in, in a movie, when a character walks into a room and it's like full of stuffed animals or creepy dolls or something, that's your signal that like that person is a villain or that person's crazy. And as many of us enter the era when our boomer parents are about to pass on all their collected items to us, and we have to figure out how to deal with them, it's just an interesting look at why people collect things.
Don't you collect?
Chris,
hold on. Don't you collect?
Chris,
hold on.
Wait. You mean my collection of dolls in my bed?
I was just going to say, don't you have like a collection? Don't you have some like stuffed bears?
I actually did. I did collect stuffed bears. Don't judge me. And then when my daughter was born, we put a big shelf in her room, and they were all up there on her shelf, and some were actually hanging by one arm. Like my husband had some fun, but they're gone.
Okay.
But there was that doll collection in that spare bedroom. No, I'm just kidding.
A noble madness, the dark side of collecting from antiquity to now.
Kate, before you leave, 30 seconds, your time in London, how is that, this food industry, how has it all impacted kind of how you cover it and think about food?
I think it's, it's been like really exciting to immerse myself in like a whole new city that has a very, very different, very, very different energy and vibe, although more New York City, as we just talked about. But it is really cool to see the way that people socialize there. They drink so much. Oh my God. But it's really fun to see. It's really cool to see like how wine bar scenes, like we've had wine bars here, but there's this fantastic wine bar scene where it's like non-committal, and now that's coming here more to New York City, so I'm delighted by it.
All right, Chris, yes or no? Ready for a glass of wine?
Yeah.
Okay. Kate, you ready?
Let's go. Happy Friday.
Happy Friday, guys. A great way for us to wrap it up with Bloomberg Pursuits editor Chris Rouser and, of course, Bloomberg Pursuits food editor Kate Crater. You guys rock. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street's heads into the weekend at a record. We got the S&P at 6388. S&P, by the way, up for a fifth straight day. Many traders finding it hard to bet against the trend. Right now, the S&P up 25, higher by 0.4%. The Dow up 208, up by about 0.5%. NASDAQ up 50. NASDAQ today picked up 0.2%. Our Mag 7 index ahead of earnings next week from a number of big companies, including Meta, Microsoft, Amazon, and Apple, up today by about 0.5%. 10-year 4.38%, with the 2-year 3.91%. Spot gold down 0.9%, 33.38 the ounce, and West Texas Intermediate crude oil today down 1.5%, 65.06 a barrel. So bottom line here, Wall Street ending the week on a positive note. On the week, S&P was up by just about 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Well, Larry Page, Sergey Brin, Eric Schmidt are all so-called burners. Mark Zuckerberg is gone, as has Elon Musk. Sam Altman called the festival, quote, the most beautiful man-made thing I have ever seen, and suggested it was what a post-AGI world can look like.
It's like poetry.
It's something.
It's something.
Apparently, there are a lot of drugs there too. I'm just going to say that. We're talking about Burning Man, and as I've been told by friends who've gone, I wouldn't get it, and I wouldn't like it.
Friends who've gone, you've never gone.
Oh, I've never gone. No,
Did your friends like it?
Yeah, but he was like, he's like, you would hate it. You got to let go, and I don't let go of anything.
You wouldn't like it.
Anyway, that's enough about me. I want to talk to Ted Alcorn. He's a Bloomberg Business Week freelance contributor. He wrote about the magazine, about Burning Man's crisis. He joins us from New Mexico. It's an existential financial crisis that the organization is facing. Ted, we're going to talk about that in a minute, but have you been to the Burning Man event in the Black Rock Desert?
I have. I feel like, I'm a big believer in getting a taste of what you're going to report on, knowing a little bit what you're writing about.
Okay, so describe it. Describe it for people who haven't been.
It's hard to put into words, admittedly, and I don't mean that as hyperbole. It's a very strange, unusual environment, visually and socially. 80,000 people in the desert with a lot of lights, a lot of noise. I've heard rumored there's some substances there, and certainly very few rules. But interesting things occur out of it, and obnoxious things too. But it's certainly something that keeps people going back year after year.
One of the very few rules, though, is that there's no money exchanged at the event, apart from the ticket that you buy ahead of time. And that is the core fundamental tension that you write about. It has to do with commerce and money. That's really at the root of Burning Man's financial woes. It just can't do money. Explain what's going on.
Yeah, I mean, basically, it's bound to these principles that kind of emerged from this sort of utopian project of, getting away from the traditional capitalist economy, decommodifying the event. Everything there is based on gifting. For 9 days, people get by on what they brought and what other people will give them. But the organization, the nonprofit that runs this, of course, has to operate in the real world where debt collectors do come for your bills. And, for a period of time, the event was growing and there was a ton of interest and ticket sales were covering the costs. But in the last few years, costs have increased a lot, the inflation, but also, in terms of labor and other costs for events like this. And the ticket prices just haven't kept up. And so the business model of bringing this group together is increasingly in doubt. And it kind of caught up to them this last year when tickets actually didn't sell out completely, particularly this higher priced tranche of tickets. And all of a sudden the organization came out of the desert and was basically $20 million in the hole.
Wow, that's a lot of money. You write in the story that back in 1990, when they sold anything close to a ticket, or what you could call, it was actually a suggestion of $10 in donations, and the price of tickets kind of stayed around, I guess, that level for a while. What does it cost today? And why aren't people maybe as interested? Because I feel like we used to talk about it a lot here because a lot of business folks, certainly in the tech community, used to show up there. So talk to us about what it costs today and maybe why interest is waning.
Yeah, I mean, well, when it started, it was just a bunch of people driving out into the desert. So I don't think people felt compelled to sort of make a donation. I dug up this flyer from the first time that the event was held in Nevada with, as you said, a suggested $10 donation. Last year, the standard price ticket was $575. This year, it's $749. So it's a big difference. And admittedly, the event has gotten a lot more formalized, a lot more, law-abiding, I guess. And believe me, there's plenty of debates over which of those costs are necessary. But if you have to spend $3.2 million on porta potties, which is how much they spent last year, you can imagine the sort of scale of public services that the organization has to offer these days. And that gives into a lot of tension within sort of the Burning Man community, because, as you said, there's been this diminution in the number of people that went to Nevada for the event last year. And it's caused a lot of people to wonder, has Burning Man jumped the shark? Or was it, they had an off year. There was a very well publicized monsoon that led a lot of people sort of stranded in mud the year before. Is this just sort of like a temporary thing or a secular trend? And as I also went on to report, a lot of people who sort of identify as burners or Burning Man people aren't going to Nevada anymore. They're actually going to regional events that have proliferated around the world, and now there's around 100 of them. And in fact,
they pay a franchise fee, right?
No, these events, basically, if they meet the goals of Burning Man, they stick to the principles that provide some modicum of safety, they can use that. They can get sanctioned and they can exist, and they're asked to give a suggested donation to the organization, but they don't tithe, basically, the mothership. And more people now are experiencing Burning Man in those places than in Nevada and Black Rock City.
Okay, well, speaking of donations, Carol mentioned $20 million was a lot of money, and for an organization, a nonprofit, being short $20 million certainly is. But to somebody who's one of the wealthiest people in the world, or indeed the wealthiest person in the world, the names of people who are Burning Man supporters: Larry Page, Sergey Brin, Eric Schmidt, they're all billionaires. Mark Zuckerberg, one of the wealthiest people in the world. Elon Musk is the wealthiest person in the world. $20 million would be nothing for some of these billionaires. What did the CEO of the organization tell you about her relationship with the wealthiest people in the world and who have been supporters of Burning Man, and how they could or could not help fill the gap here?
I think it's pretty popularly understood that sort of Silicon Valley's elites are very connected with Burning Man. But even to me, I was surprised to learn how fundamental a very small number of those uber wealthy people have been to the organization. It was in a fundraising prospectus that was sort of an internal document that I learned that just 5 individuals have provided the organization 2/3 of its philanthropic funding in the last 10 years, over $40 million. They wouldn't tell me the exact names, but I think you've mentioned a few, most likely. And as the fundraisers for the organization told me, rich people are weird about money. And folks who are willing to go, or in fact eager to go out into the desert, spend a lot of money on a flame-belching vehicle to drive around, or as one I spoke with, runs a big camp for all his extended family and friends. They gave out a kilo of high-grade Iranian saffron, which has some hallucinogenic properties. People are very willing to make those sort of private contributions, but they're a lot more reticent to support the organization. And so they're trying to pivot. Basically, the Burning Man organization's point of view is, we're like another arts organization. We're like the Met Opera, or American Ballet Theater. We need people to support us because ticket revenues alone aren't going to pay the bills. But convincing wealthy donors to sort of pitch in for the more humdrum kind of costs of putting on the event has been a challenge. And they fell very short of their $20 million fundraising goal this last year. Last I heard, they'd raised $7 million.
So fundraising not going so well.
So everything hangs in the balance here for the sales this year, I think. They've tried to be more firm about asking a higher ticket price and sort of coaxing people to pitch in what they say is the true cost. But they're between a little bit of a rock and a hard place, because the higher they raise prices, they're losing their lower income adherents, some longtime members of their community who kind of make the event, who build the event.
Right.
And so if they raise prices too much, they're going to lose the things that make that whole event what it is.
You know, Ted, excuse me, we cover the U.S. Open, and it's lots of sponsorships, big, well-known companies. Any companies interested in sponsoring this event?
Well, you know, the Burning Man organization has tried to, I think, adapt to new times. They're trying to interest a new generation, right, of the Gen Zers who have not been attending, who don't know how to get a ticket or pay a price. They've embraced some kinds of social media of trying to put the word out about their tickets, but they're really hedged in by, again, those principles, that they're philosophical principles, because if they step into a realm where it looks like they're commodifying what they're doing, they get so much blowback from this, you know, pretty intense community. They reposted a TikTok with, you know, some folks kind of like doing shot skis and like trampolining in baby oil, and people lost their minds on Reddit. And so, yeah, to bring in companies, private companies, or to seek other sources of revenue, I think is really anathema to who they are. But, you know, that limits their options about how to monetize what they do.
I don't want to give away the whole story. It's worth the read. It has been among the top read stories on the Bloomberg terminal since this came out. And I've had people text me about it, actually. My dad loved this story. He's like I guess you could say.
Does he wish he had gone?
No,
Did he ever
he's like
go?
an observer, a distant observer of Burning Man, I think it's fair to say. I don't want to give the whole thing away, but can you just tell us a little bit about a potential solution here, this voluntary Burning Man wealth tax?
Yeah, got to go there. Well, one of the board members of the Burning Man project, who has told me is one of the major donors that supported it, Farhad Mohit, who sold Shopzilla for over $500 million 20 years ago and has had some other very successful ventures since. You know, he's all in on a more ambitious vision for Burning Man. And his view is that wealthy people like himself should pay a bigger share. And he made this amazing website, which he calls the Burning Man, I'm going to get it wrong, Principal Pause Calculator, which is essentially, he says, if you go to Burning Man for 9 days and, you know, don't work and you just play, your capital, your money should go with you. It shouldn't go with you. It should actually take that time off. And so the interest that your wealth generates in that 9 days, you should contribute to the Burning Man organization. And if you put in your wealth on his calculator and you're like me, freelance journalist income, you find, wow, based on my income or my wealth, I don't know anything. But he put in for me, you know, okay, well, you got $1 billion. Oh, you have you have $150 billion. And he's thinking about somebody specific. And he says, like, this guy needs to give $1.3 billion to the Burning Man organization. And I was like, well, that exceeds their expenses. What are you going to do with the rest? And he said, we'll flip it on its head. We'll give the money out to all the burners as a universal burner income, you know, and then we're really living our values. And so, you know, apparently a few people he's spoken with about are enthusiastic. He underscores this is a voluntary. I would kind of describe it as a wealth tax, but it's a suggested donation going back to their roots. And we'll see if it takes hold.
What was he smoking? Oh, sorry.
No, there was...
I'm just saying.
It was saffron, I think.
Was it saffron?
I don't know.
What was it?
Read the story. Read the story.
I don't know. Anyway, unbelievable read. As Tim mentioned, it has been among the most read stories throughout the week. Ted Alcorn, he's contributor at Bloomberg Business Week. Check out his story about Burning Man Festival facing its existential financial crisis. It's an incredible read.
I'm Tim Stenovic along with Carol Masser. Let's take a look at some stocks on the move today. Bloomberg News earnings reporter Red Brown joins us. Red, what are you watching?
First one on my list today for the weekly movers here is Chipotle. Ticker on that is CMG. Shares are down 14% this week, and that's largely coming due to disappointing earnings results coming on Wednesday. That takes total losses for the year around 24%. And the plunge came down to the kind of the fact that the company cut its sales growth outlook again. Now they see that they are going to be flat for the year. The comparable store sales will be flat for the year. Previously, they were seeing low single-digit expansion. So it's really just having a hard time to just gin up the demand to get people in the stores. Some of the new things that they've been releasing, new chicken recipes, new sauces. They've even been giving food away for free, and that's still not even even necessarily working to get
Stock's
foot
down
traffic.
22% this year.
Really struggling.
Do you eat Chipotle?
I was just going to ask that.
I know.
You're like the demo.
I had it for the first time in like 3 years this week, actually. So
What has kept you away?
I don't know. I think it's the size. It's too much. I know that's the appeal for some
It is a lot of
people.
food. I think it's a lot of food too.
For me, it's just too much, but and it's expensive too. In like New York City,
New
I
York
think it is expensive.
It is a lot more expensive in New York than it is in other parts.
That's definitely true, but I think I'm able to go to a local deli instead of the giant company Chipotle.
And you're in a perfect place. So all right. So CMG ticker Chipotle stock down 13% this week.
That's
Sorry.
it.
Ooh, ouch. GE Vernova.
Yeah, this is I'm excited to actually talk about this one. It's kind of been flying under the radar for us, and maybe it shouldn't be. It's almost up 100% this year. It's the second best company in the S&P 500, just after Palantir. So the company's up 12% this week, and that's due largely to the...
Guess what?
What's
you know
that?
what we need? You know what we need, Red?
What's that?
We need power.
We need more power. We need more and more power. Everyone needs power.
I know.
That's
Anyway,
that's it. That's why they're
please
doing
continue.
so well. But it's so the people that need the power the most are the AI companies.
Right.
Of course. Everything good in this world is connected to AI for some reason. And so just one thing that kind of jumped out of the report to me is they made $500 million in the first half of this year selling electrical equipment.
Mm-hmm.
That compares to $600 million on all of last year. So, already on pace to double that figure. And again, it's really just coming as a result of just this incredible demand from the AI companies.
ticker GEV stock up 12% this week. All right. And then we go to...
Texas Instruments, ticker is TXN. One of the big losers for this week fell 15%, and that was after it gave kind of, I guess, tepid outlook would be the word. It erased its gains for the year, and that compares to the Philadelphia Stock Exchange Semiconductor Index is still up 13%. So Texas Instruments really kind of the outlier here. The outlook that they gave kind of did beat most of the estimates, but it was more guarded than I think investors were anticipating. We have seen kind of the relief of tariff worries through the last couple of months. So I think people were just expecting a little bit more optimism from the company during the call. They were also kind of a bit more downbeat. Analysts were pushing them saying, why are you guys sounding more negative? These sorts of things. And they weren't able to kind of give the answers that I think the market was looking for. So yeah, the end markets they say are kind of turning positive. The only one that they've continued to call out that's struggling is automotive. Yeah, I guess we'll have to it remains to be seen where Texas Instruments goes from here.
And there you have it. Some stocks on the move this week with Red Brown, Bloomberg News earnings reporter. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
Red staying with us because it's a big week coming up in earnings.
Earnings have not stopped. So
Apple, Meta. Next week?
Microsoft as well. So I think I just did some back of the napkin math. It's like $13 trillion or $11 trillion.
Oh, Amazon. Let's not forget Amazon.
Of course, yeah. Of course. But so all in, like just those companies alone, I think it's like $11 trillion worth of market cap is reporting next week. So a very busy week. Who do you want to start with?
I don't know. Who do you think we should highlight?
Well, I guess Microsoft.
Because we can't do them all. I'm really sorry.
Thank you.
You're welcome.
I think Microsoft is what's second biggest company in the world right now. So I think they've seemed like a good place to start. Look, they'll probably have to face questions about the big news that we got this week. Obviously, we're going to want to hear if they have sort of worked through the ramifications of what that hack at their SharePoint servers means quite yet.
Good point.
But other than that, it seems like the business is still very solidly growing. Cloud seen up 22% overall. The critical kind of Azure unit, which is where a lot of the AI stuff is happening, seen growing 30%. And that's been kind of the range that it's been going for the last couple of years. I mean, the company's overall expected to grow 14% on $65 billion worth of sales. I think that's just absolutely ridiculous. But so strong report probably coming from Microsoft.
It's up 22% this year, too. So, yeah. Got anything to say?
10 seconds on Apple. iPhones, is that what it's all about?
iPhones and services. Services is where the growth has been coming. It's now, it's for a while been their second largest business after iPhones, but it's really driving the growth at the moment.
We had a great interview. Remember Laura Martin and me talking about maybe who needs to be CEO to take the company into its next chapter.
She said Tim Cook's not the right person.
Yeah.
She's the second analyst who we've heard that from.
You know who's the right person to have in studio? Red Brown.
Thank you, guys.
Have a great weekend. All right, everybody, that's going to do it for us. Check out our broadcast and podcast.